We're ready to go, so I declare open this hearing of the Senate Economics Legislation Committee into the 2024-25 supplementary budget estimates. I begin by acknowledging the traditional custodians of the land on which we meet today and pay my respects to their elders past and present. I extend that respect to Aboriginal and Torres Strait Islander peoples here today. The committee has set...
There's 2 rooms I've gone to that are wrong.
Always welcome. The committee has set 14 November 2024 as the date by which senators are to submit written questions on notice, and 19 December 2024 as the date for the return of answers to questions taken on notice. The committee's proceedings today will begin with the Department of Treasury's Macroeconomic Group and International and Foreign Investment Group. Under Standing Order 26, the committee must take all evidence in public session. This includes answers to questions on notice. I remind all witnesses that in giving evidence to the committee, they are protected by parliamentary privilege. It is unlawful for anyone to threaten or disadvantage a witness on account of evidence given to a committee, and such action may be treated by the Senate as a contempt. It is also a contempt to give false or misleading evidence. The Senate has endorsed the following test of relevance of questions at estimates hearings. Any questions going to the operations or financial positions of the departments and agencies which are seeking funds in estimates are relevant questions for the purpose of estimates hearings. I remind officers that the Senate has resolved that there are no areas in connection with the expenditure of public funds where any person has a discretion to withhold details or explanations from the Parliament or its committees unless the Parliament has expressly provided otherwise. The Senate has resolved also that an officer of a department of the Commonwealth shall not be asked to give opinions on matters of policy and shall be given reasonable opportunity to refer questions asked of the officer to superior officers or to a minister. This resolution does not preclude questions asking for explanations of policies or factual questions about when and how policies were adopted. Witnesses are reminded of the Senate order specifying the process by which a claim of public interest immunity should be raised. I incorporate the public immunity statement into the Hansard. I remind all senators that as we continue our work implementing the Set the Standard report, as Chair, I will ensure that proceedings are conducted in an orderly, respectful and courteous way. The committee has agreed to authorising all media outlets to record the proceedings of the public hearings subject to the broadcasting resolutions in the standing orders and the following conditions. Media entry is subject to not exceeding the maximum capacity of the room. Social distancing must be observed. The committee or a witness may object to being recorded at any time, and the committee may require that recording cease at any time. Recording must not occur from behind the committee or between the committee and witnesses, and must not otherwise interfere in the proceedings. Computer screens and documents belonging to senators, members and witnesses must not be recorded, and flashes must not be used, and the directions of the committee secretariat must be followed at all times. An officer called to answer a question for the first time should state their full name and the capacity in which they appear. I remind committee members and witnesses who are appearing via video conference and who are not speaking to please mute your microphones. And as we get ready to get underway today, I'll remind senators and witnesses that in line with the Set the Standard recommendations for improvements to our workplace here, the hours for these economic estimates will be 9 a.m. to 10 p.m. with modified breaks, and the hard marker is 10 p.m. in this committee. I now welcome Senator the Honourable Katie Gallagher, Minister for Finance. Good morning, Minister.
Good morning.
And I welcome Dr Stephen Kennedy. Welcome, Dr Kennedy, and we look forward to your opening statement.
Thanks, Chair. And thanks for the opportunity to make an opening statement. The global economy has evolved broadly in line with expectations, but there is considerable variation in growth across economies. Economic conditions in our largest trading partner, China, have remained weak. Household spending has been subdued, and the major adjustment underway in the real estate sector continues to be a drag on growth. This is reflected in the decline in steel and iron ore prices since the beginning of the year. In September and October, the Chinese authorities announced a range of monetary and fiscal measures. However, China faces significant cyclical and structural headwinds, and the effects of these measures are uncertain. Growth in the United States has been stronger than expected, and it has been a clear outlier among advanced economies. The US has seen inflation moderate without a significant slowing in demand. In most other advanced economies, growth has been subdued. including the UK and Europe. With labour market conditions easing and increased confidence that inflation will sustainably return to target, central banks have begun reducing interest rates. Central banks in the US, the UK, New Zealand, Canada and the euro area have joined Sweden and Switzerland in cutting interest rates this year. Despite these reductions, in a number of these countries, interest rates remain above the level in Australia. While markets anticipate a further easing in monetary policy, the level of long-term government bond yields across advanced economies suggests that interest rates are not expected to return to the low levels that prevailed before the onset of the COVID pandemic, including here in Australia. As has been the case for some time, a significant ongoing source of uncertainty is the potential escalation of geopolitical tensions, particularly in the Middle East. The Australian economy recorded subdued growth of 1.4% in 2023-24, which was weaker than forecast in the 24-25 budget. Household consumption grew by 1.1% in 23-24, which is the weakest growth in around 3 decades outside of the pandemic and the GFC. While the government's tax cuts are supporting real disposable incomes, recent indicators suggest that consumption remains subdued and households are using the income boost to rebuild savings buffers. Dwelling investment fell by 1.5% in 23-24 as elevated construction costs weighed on activity. In a welcome development, the growth in the prices of new dwelling purchases by owner-occupiers has fallen from an annual rate of over 20% to now be around 5%, with the notable exception of Western Australia. The fall in prices of new dwelling purchases mirrors the easing in housing construction material costs. Business investment grew by 6.6% in 23-24. Solid growth in investment reflects the need for businesses to grow the capital stock in line with strong growth in labour input. Machinery and equipment investment and non-dwelling construction activity remain the dominant drivers of investment. Although smaller in size, business investment in computer software has been growing rapidly over the past 3 years. Public demand has been a strong contributor to economic growth over the past year. This reflects strength in both public consumption and investment. The strength in public consumption reflects increases in spending on health and education, including Medicare, the National Disability Insurance Scheme and the Pharmaceutical Benefits Scheme. Further, since May's budget, state and territory governments have released their budgets and, in total, around $20 billion in new spending was announced for 24-25. Inflation over the year to the September quarter fell to 2.8%. Underlying inflation also continues to fall, with the trim mean measure declining in the September quarter to 3.5%. It's worth briefly revisiting the purpose and use of the CPI, sometimes referred to as headline inflation, and underlying measures of inflation, such as the trim mean, in light of the differences in these measures at this time. The reduction we have observed in headline inflation represents a material reduction in cost of living pressures for households. The CPI captures changes in the price of a representative basket of goods and services that Australian households actually purchase. Therefore, the CPI remains our best overall measure of the price pressures faced by households. The RBA target range is expressed in headline CPI terms because this is the measure most relevant to households and price stability. Underlying measures of inflation, such as the trim mean, can be a guide to future movements in headline inflation and provide useful information in the setting of monetary policy. Underlying inflation is expected to continue to fall in the period ahead. As is often the case, changes in government policies have affected the prices of goods and services that households face, and hence headline inflation. For example, we estimate that energy bill relief reduced inflation by 0.3 percentage points over the year to the September quarter. Australia has had a somewhat similar inflation experience to the rest of the world. Inflation in Australia peaked at 7.8% in the December quarter 2022. However, this was lower and later than most other OECD countries. The IMF recently published its World Economic Outlook, and it is worth putting their inflation forecasts in perspective. Based on these forecasts, the IMF expects that the cumulative increase in prices between 2019 and 2025 in Australia to be similar to that of the US and lower than that of the UK and New Zealand. While we have made significant progress on inflation, just as importantly, we have managed to maintain the gains in the labour market. Employment grew by 3.1% over the year to September, and the unemployment rate remained at 4.1%. Policymakers have a difficult trade-off to make. They can be more aggressive in bringing inflation down, but this would not be achieved at no cost. By way of example, in the RBA's November update and in our forecasted budget, unemployment is expected to peak at 4.5%. If instead the unemployment rate was to reach the peak expected in New Zealand of 5.4%, we would add an extra 130,000 people to the ranks of our unemployed. We remain optimistic in being able to preserve the gains that have been made in employment in a sustainable way. Recent data has shown a deceleration in nominal wage growth at the current level of unemployment, alongside continued easing in inflation. While estimates of the NAIRU, which is the level of unemployment below which inflation would be expected to rise, are uncertain, Treasury estimates that the NAIRU is around 4.25%, close to the current rate of unemployment. Labour productivity across the economy was flat in 23-24. This reflects in part a cyclical weakness in productivity because of the strength in our labour market. There are a couple of reasons why this is the case. Australia has absorbed a large number of new workers in a relatively short amount of time. Initially, this cohort of new workers, on average, is less productive than the existing workforce. Over time, however, these workers will become more productive as they build skills and find jobs that are a better match to their skills. This will contribute to better labour productivity outcomes. The other channel is through capital shallowing, or a lower capital labour ratio. The capital stock cannot adjust as quickly to the rapid increase in employment because it takes time to make investment decisions and then build and install capital. Over time, as the capital stock adjusts and employment growth eases, the capital to labour ratio will rise, and this will provide a welcome boost to labour productivity growth. Annual net overseas migration fell to 510,000 in the March quarter 24, after reaching an annual peak of 560,000 in the September quarter 23. This was largely driven by a fall in migrant arrivals. Going against this trend are New Zealand citizen arrivals, which have continued to rise, with Australia's comparatively stronger economic conditions being a key factor. Lower than expected migrant departures mean that net overseas migration is likely to be higher in 23-24 and 24-25 than forecast at budget. Rather than depart, many migrants have extended their stay by applying for new visas, including permanent visas. Since the lifting of international travel restrictions, other countries have also experienced rapid increases in net overseas migration. For example, New Zealand and Canada have recorded population growth rates that peaked around 3% or higher. Australia's peak was 2.6% over the year to September 23. In September, the government released the 23-24 final budget outcome. The Commonwealth recorded a surplus of $15.8 billion in the 23-24 fiscal year, or 0.6% of GDP. This was $6.4 billion higher than estimated in the budget, and was due to lower payments being partially offset by lower receipts. Payments were $10.2 billion lower than estimated in the budget, reflecting lower than expected payments across a range of programs, including around $4.2 billion in lower payments across several national partnership agreements. Tax receipts at the final budget outcome were $5.3 billion lower than estimated at budget, mostly due to weaker than expected personal income and company tax receipts. Receipts from total individuals and other withholding taxes were $3.1 billion below the budget estimate. The 24-25 budget shows a return to deficit in 24-25, peaking in 25-26 before narrowing. The government will update the fiscal outlook later this year as part of the mid-year economic and fiscal outlook. In terms of longer-term fiscal pressures, the budget and the 23 intergenerational report identified several major payments that are growing more quickly than national income over the longer term, including the NDIS and aged care. Bipartisan support to enable reform to these programs will help manage the long-term costs and is a very welcome development. It gives participants in these programs more certainty about the future and ultimately better care. The recent passage of the NDIS legislation provides the framework to give effect to the measures announced at budget. These measures are expected to reduce scheme costs by around $60 billion over the next 10 years. By 2034-35, we expect the cost of NDIS will be reduced by roughly 1/4 of a percentage point of GDP compared to our estimates at budget. The government reforms to the aged care sector are welcome and will lead to a more sustainable program while delivering better services. The changes include expanding access to home care and introducing co-contributions for non-clinical care. Compared to projections in budget, the reforms are expected to slow the rate of payment growth from 5.7% per year over the decade to 5.2%. This represents total savings over the coming decade of around $12.6 billion relative to our expectations at budget. I sincerely hope parties can continue to work constructively in reforming government services, as further reforms will be required and will improve the welfare of all Australians. Since the last estimates, the government has introduced legislation for merger reform. This is a policy process led by Treasury with support from the ACCC. We very much appreciate the support from the ACCC, including the secondment of staff to the Treasury Task Force. Mergers and acquisitions remain an important feature of dynamic economies. They can support cost and price reductions through generating greater scale and help spread the adoption of new technologies. Although most mergers are unlikely to harm competition, it is important that we have a credible regime that will stop mergers that are likely to reduce competition. The Mergers and Acquisition Reform Bill that Parliament is currently considering will establish a new system for mergers and acquisitions in Australia. Under the new system, mergers that meet risk-based monetary thresholds must notify and receive approval from the ACCC, who will have the mandate and the resources to review and stop anti-competitive mergers. The new regime will also be transparent, with greater certainty for businesses around the merger process. The ACCC will maintain a public register containing details of notified mergers, review timelines and reasons for its decisions. This will increase the transparency, understanding and ultimately confidence in the new merger control regime. Businesses will also have certainty about whether they are obliged to notify the ACCC of a proposed merger and how long the ACCC's assessment will take place. This will help business structure mergers and acquisitions in a way that promotes competition. Before I conclude, I would like to acknowledge the announcement made by the presiding officers last week that Sam Reinhart has been appointed as the Parliamentary Budget Officer. I congratulate Sam on this appointment and would like to publicly acknowledge her work in Treasury over more than 20 years, most recently as the Deputy Secretary of Fiscal Group. Once again, Chair, thank you for the opportunity to provide this opening statement.
Thank you very much, Dr Kennedy, and I know the committee would like to share their congratulations with Ms Reinhart, who's been a regular participant in our inquiries and looks like will be today as well. We will proceed straight to questions. I also call officers from the department in relation to macroeconomic group and international and foreign investment group. We'll start with some 15-minute blocks of questions, and I go to you, Senator Hume.
Thank you, Chair. Good morning, everyone. The Treasurer has publicly said back in August that Treasury is undertaking some scenario analysis for the outcomes of the US election today and tomorrow and potentially in coming days. I'm wondering if that scenario analysis and modelling has been completed.
It has, Senator.
It has?
Yeah.
And what prompted the modelling?
Well, with any significant change underway and potential policies, we'll prepare advice for the government. There are some policies that the proponents in the US election have announced, including, for example, tariff increases and other types of changes, and we thought it was worth the government understanding the impact of those policy changes, not only potentially on the US, but on major trading partners such as China and other countries, and then, of course, what the implications would be for Australia.
So it's something that Treasury automatically does rather than something that's specifically requested?
Well, the potential changes are significant,
Yeah.
so that draws us whenever we see potential significant changes. If there weren't potentially significant changes, we might just provide broad advice, but in this case, there are proposed substantial increases in tariffs, for example, and there's been private sector modelling in the press, you would have seen, Senator, on those issues as well. Yeah. So it was just simply worth understanding what the implications might be for the Australian economy.
Okay, so was the modelling conducted specifically for the Treasurer, or was it done as part of a cabinet briefing? Was it for the cabinet?
Well, it's I guess, if you like, it's always done for the Treasurer, but it was designed to inform the government more broadly.
Okay, and what scenarios did it analyse?
We focused on the policies that the proponents in the US election have announced and what their implications might be.
Right.
Such as but it's the most obvious one, the potential large increase in tariffs.
So was it black and white? This is what happens if the Democrats win. This is what happens if the Republicans win.
No, we looked more at changes in the announced policies. We're not providing any advice around the political ramifications or any politics in those matters. We're simply seeking to understand if this policy, and if it's significant, was announced, would it have an implication for Australia?
Okay, so what were the conclusions?
A significant increase in tariffs would have implications for both the US economy and, for example, if the tariffs were placed on Chinese goods for China, and there would be flow-on consequences for Australia. Of course, there'd be adjustments. Our models are general equilibrium models, so exchange rates adjust and a variety of other things adjust, but in broad terms, the imposition of trade restrictions such as tariffs typically lead to lower growth and higher inflation.
So is it analysis that you can share with the committee?
I did provide it through cabinet process, so I should take that on notice, Senator, and just talk to the Treasurer about it. But I'll take it on notice. Okay,
so it was requested by cabinet, or was it requested by the Treasurer?
It was definitely requested by the Treasurer. We discussed it, but it also has been provided to cabinet committees more broadly.
Right. It was a special briefing to cabinet by the Treasury? There
was a cabinet submission. Yeah. Yes, there was a cabinet submission.
Okay. Given the views of market economists that have also been looking at this issue, would it be fair to say that the outcomes of the modelling highlighted upside risk to inflation or growth outlook? I mean, you mentioned tariffs, but what is the upside risk for inflation?
Some upside for inflation in the US, downside for growth in China, downside for growth in the US. The implications for Australia are more about growth because of the implications for China, of course, and their demand for our goods. And there are lots of ons and offs. So the price impacts are more relevant to the US outcomes than they are to other countries.
Is the modelling that you have provided, you said it was for a cabinet briefing, but was there a specific briefing for the Prime Minister?
Only through that.
Only through the cabinet process? It wasn't...
He's the chair of cabinet.
Yeah, but it wasn't a one-on-one briefing with any more analysis or anything more detailed?
Well, of course, when it goes into those meetings, he gets the opportunity to see and discuss the detail of what we've prepared. Was
it specifically requested by the Prime Minister that information come to Cabinet rather than just the Treasurer?
We're not going into that about who requested what. It's the Secretary has been clear. Advice was sought. The Cabinet's been briefed. People are doing their jobs.
Does the Treasury have a dominant or a more likely scenario?
Well, that was scenario, so it's exactly on the word. We were making judgments about we don't have the expertise to do that, about potential outcomes, etc. We were simply trying to explain this is a policy that's in play, and should that policy be enacted, this is the impact it would have on the economy.
What about the potential for lower US company tax rates? Has Treasury done any analysis of Australia's international competitiveness with a lower US company tax rate?
Our scenario focused on the trade implications, the tariff changes, the potential for changes in company tax rates we've seen in the past. They have been lowered in the past and increased in the past. We didn't provide any specific advice on that.
Were you asked to provide only specific advice on tariff changes, or was it a more general scenario analysis that were requested of you?
I suppose I'll have to go and check my own records, but it's a significant change that's potentially in play. I've discussed it with the Treasurer, and I don't know, we may have both agreed it would be a good idea to make to make both him and others more aware, and the Foreign Minister, of course, of the implications so they are understood. So I'll go back and check my records about the specifics of the request, etc. But to be quite honest, if I wasn't asked, I would have provided the advice anyway. But I'll check on who said what first.
Okay. I suppose what I'm trying to get at, and maybe I'm not making myself clear, is whether those scenarios that you were analysing were simply tariffs go up, tariffs stay the same, or whether there were more broader economic indicators that might be a result of policy decisions or policy announcements that have been made by both candidates, and whether they were analysed as well.
Such as the tax changes. I guess we also focused on those that might, well, again, I guess the increase in tariffs that was proposed is large, and the scenario we looked at was if it was introduced quickly, because I guess and you're normally most interested in the first instance in those changes that might be disruptive.
Yes. Okay.
Rather than the sort of longer-term structural changes to tax rates, etc., will have an impact, but they tend to have a much
longer lag.
Yeah.
The RBA Governor yesterday stressed that the impact of population on the imbalance between aggregate demand and aggregate supply, and she stressed that even with falls, the population is still too high for the level of household demand. I would like to know if Treasury's view is that aggregate demand and aggregate supply are balanced or imbalanced.
Sure. I don't think she said our population was too high. I think she said demand was too high for supply.
Yes, thank you.
But the
specific, I suppose, for housing demand.
Okay.
Yep.
In the housing market.
Population is still too high for the level of housing demand.
Okay.
Is what she said.
So there's little doubt the housing market is tight. The supply in the housing market has been weak. I outlined that in my opening statement. We're hopeful of, and we forecast a recovery of investment in housing, but there's sort of two things I think we should think about in the housing market. One is the housing market has underperformed now for quite some time, probably, well, let's say at least a decade in terms of supply. And then as demand, with the current level of demand and with some population growth, then we have this sort of cumulative effect of undersupply on top of then some cyclical factors, including, of course, monetary policy settings to slow the economy. So I noted in the opening statement, we see some good signs of that disequilibrium, if you like, resolving itself. I did make a point of saying, with the exception of Western Australia, where housing costs remain extremely high in the new housing purchase costs in the CPI in Perth. I'm sure Senator Smith will know this better than I, but I think we're around 19% through the year in the last CPI. That economy is growing very quickly, and our population growth is strong, and the housing market is struggling to adjust. Elsewhere, they are easing. So my understanding is, I'll have to go and check Michelle's remarks, but her comments about the balance of supply and demand, I'm sorry, Senator, I didn't see her comments on the housing market in particular. I've seen them more and talked to her about them in aggregate, about that adjustment. But I'm sure she'll be well placed tomorrow to take you through what she thinks.
And what about the impacts of Treasury overshooting the net overseas migration targets? What's the potential effect of that on inflation and on housing supply?
Yes, well, the numbers overshooting our forecasts, if you like, or us undershooting.
Sorry,
yes,
that's probably the better way of describing it.
Yeah, quite significantly. And the reasons have changed. Initially, it was much stronger inflows than we anticipated. We've got that right more recently, and now it's departures, as I've outlined. I think it's really sort of remarkable how well the labour market has responded to this sort of rapid increase in population growth. It is easing now, but other countries, I mentioned a couple, Canada and New Zealand saw this, and their labour market outcomes aren't nearly as good. To have seen these people flow into supply through employment and see the aggregate rate remain low is great, is an excellent outcome. There's no doubt, and it's been helpful, if you like, for business, because if per capita consumption has been very weak for a number of quarters, sort of weak, as I said, weakest outside.
We're in a per capita recession.
Yeah, a per capita, like 6, more than maybe it's 7 quarters now of quite weak. So in part, it's sort of, these are the ons and offs. It's assisted in keeping broader conditions a little stronger. But, I'm just still struck by the size of the swings we've experienced through COVID and subsequently. In some ways, I'm very pleased at how we've managed to adjust. And no one's pleased about what inflation's done, but I'm very pleased to see it easing now. But to see the labour market retaining this strength and the employment opportunities being generated for young people, see the youth unemployment rate where it is, it's really a good outcome. But to go back to migration particularly, there's no doubt it puts pressure into the economy, but it's a net increase in supply and it adds to demand. The housing market for sure feels the pressure.
You mentioned in your opening statement lower than expected migrant departures. This is not the right forum to ask about that, but I did scratch my head at that. I mean, a visa's a visa. You kind of know when they're going to end. So I'm surprised that this is we've overshot our forecast on departures. Is that a monitoring issue? I mean, how does that happen?
I'll let you talk to, they may have already appeared, but Home Affairs about it. But the information we get from them is that, as I guess I've just said factually, many more people have applied to go to another visa than anticipated, and they are staying in the country. Well, I just would note and this is not unusual. Possibly we should have thought about this a bit more carefully. But it's not unusual for us to see an inflow of Kiwis, if you like, when their economy weakens more than ours, and that has also now come into play. Possibly something. I guess the New Zealand economy has been a little weaker than anticipated, but the New Zealanders are finding job opportunities here. Let me put it that way, Senator.
Does Treasury agree with the RBA that public expenditure is driving aggregate demand?
I said in my opening statement that public expenditure, both consumption and investment, was a strong contributor to growth over the last year. That's in the data. It
was growth, but
demand,
aggregate demand?
Demand and growth, if you like.
Okay.
Same thing.
And is Treasury concerned, I suppose, or monitoring state fiscal developments, particularly when it comes to measures that may boost demand? We've been particularly interested in the infrastructure market for some time, and the
size of the pipeline and costs there. There's quite some debate over the workforce pressures and how they move between housing and infrastructure. You know, whether if infrastructure is incredibly long, there's less people available, particularly for medium density housing. Some people think that transferability is limited, others are more convinced there's more there, but it's certainly something we're looking at. We have seen some early signs in the easing or the completion of a couple of large state projects, but there are still there's still a significant pipeline there. I mean, of course, we would all like to see more infrastructure enabling economic activity, but it has to be done in a reasonable and proportionate way. And secondly, of course, and I make no judgment on this, but the high quality projects, given the scarce resources, are very important.
You mentioned in your opening statement that state and territory governments have in total around $20 billion in new spending announced in 24-25. What's your estimate for federal new spending in 24-25?
Since budget?
Well, a comparable figure since May's budget, yeah.
Well, we'll update that one for you in my EFO, Senator.
So you can estimate it for the states and territories, but you can't estimate it for
well,
they've announced
their budgets. That's how we know it. They put their budgets out after our budget, so it's out there now. And this government, the Commonwealth Government, will, in my EFO, in the usual way, announce any new policy decisions, including spending at that point. As
a significant driver of inflation, one of the, essentially the ultimate driver of cost of living crisis that's facing the country, surely that's something that you are monitoring very carefully?
Well, I suppose I won't agree with your conclusion, but
that inflation
of course
causes a cost of living crisis.
Oh no,
that's not what you said though.
It's certainly the inflation. I do agree that inflation is, as I outlined in my opening statement, and the CPI, a good measure of the cost of living that households face. In fact, our best. Sorry, I may have misheard you. I thought you said that the public demand was driving that. Public demand is a contributor to growth at the moment. In aggregate, our growth is very weak.
Can I ask, and I'll finish on this, Chair, because I know you're giving me the wind up.
Can I just check in with you, Senator Hume? I will go to Senator McKim in a moment, but do you want to keep going for another 15-minute block, or do you want to...
I do, but if you would like me to break it up, I can break it up.
That's right. You have another 15-minute block and then we'll go to Senator McKim.
All right, thank you. Well, I suppose on that, you say we'll have to wait for my EFO, but let me just ask the Minister in a roundabout way, without giving me a dollar figure away, will the policy decisions in my EFO be contractionary or expansionary?
Well, you'll be updated in my EFO.
Not after a dollar figure, I just want a vibe.
Well, I'm not going to give you a vibe.
Well, I think the Australian public probably deserve a vibe. They've had 2.5 years of
they don't
inflation
that
has caused a cost of living crisis. I think that they want an indication from their government as to whether the government's taking this issue seriously.
The decision, we've taken it seriously from the minute we came to government, when inflation was running much higher than it is now, and where you were handing down budgets with huge amounts of spending without any savings at all.
I know you want to have a crack here, but I'm just asking whether
I'm actually just factually answering your question. And
well, no, you're not. You're deflecting.
Well, I am, because I'm telling you what we inherited, and every economic update since, we have found savings, we have reprioritised, and we have looked at ways to support households with cost of living pressure without adding to the inflation challenge, and you will expect to see more of that.
Well, I know you've said that you haven't added to the inflation challenge, but we've had this issue around a contractionary or a expansionary budget that has gone on now for 2.5 years. Every credible economist has said that the previous budgets that you've handed down have been expansionary. I just want to understand whether my EFO is going to be expansionary or contractionary.
We've been handing down surplus
budgets.
Figure. We've been handing down surplus budgets, which have actually, and the Governor has noted this, have been assisting in the challenge that's facing the country on an inflation perspective. So that's what we've been doing. You will expect to see similar decisions taken in my EFO.
Okay, so the budget today is in deficit, and we discussed this yesterday.
there's a forecast deficit for this financial year. That's sure. It's half of what we inherited, I would point out. So we've made substantial progress on reducing the size of the deficits, delivering to surpluses, bringing down debt overall and reducing the interest costs on debt, which is also helping the budget.
Okay. Secretary, can I ask, the RBA's a statement of monetary policy highlighted the challenge for jobs growth being concentrated in areas of low productivity. The Governor stressed then that productivity was essential for sustainable real wages. We've heard that from the previous RBA Governor as well. Has Treasury undertaken any analysis of recent EBA negotiations in these sectors that were specifically highlighted by the RBA Governor as to whether productivity is supporting that level of wage growth?
I will pass to my colleague just to confirm. I could make a couple of remarks on differences in productivity across different sectors, or I can just stick with your line of questioning. It's up to you. Do you want me just to go straight to that?
Well, whoever is better placed to answer the question, but obviously I'm conscious we don't have you for long, so I'd like to pick your brain while you're here.
We'll just go straight to yours. Maybe I'll just...
Thank you. Luke Yeaman, Deputy Secretary, Macroeconomic Group. Senator, while we monitor the releases and the outcomes of those administered wage cases and EBAs, we have not done specific analysis on a case-by-case basis of those as against productivity.
Right. So will Treasury be arguing in its submissions for next year's minimum wage case for a real wage increase?
Well, it's a government submission that gets prepared by us and the Department of Employment from memory. So yes, we don't put a position in that. We just prepare the submission for the government.
Right.
And the government won't be arguing for
a
no
real wage increase.
Growth. Are you saying the Treasury would be arguing against a wage increase?
No, a real wage increase. Will you be arguing for a real wage increase?
Well, that has been the position that we've put in the last submissions, that we support a real wage increase for low minimum wage earners. I don't think you'd be surprised by that. That's been a fundamental policy differentiation between this government and yours.
And would you be commissioning any analysis on the productivity that will accompany that real wage increase that you're advocating?
Well, they're separate things, but obviously a productivity agenda is important as well to the government, and that would form a component of the submission. I think it always has. But we also believe in some of those cases, particularly after a decade of wage stagnation, that there was a level of underpayment going on, particularly in some of those care economy sectors like aged care and early childhood education and care. Which is separate to the minimum wage, but I think implicit in some of the criticisms that the opposition have made in their approach to the value and respect afforded to care economy workers.
So just to clarify, you think that productivity and real wage increases are separate things?
We've got I'm saying the point I'm making is I think there's been a level of underpayment in particular sectors of the economy, and we are addressing that. But obviously productivity and dealing with the lack of productivity growth over a longer time, including for the decade that you were in government, is something that the government is also focused on. And the submission will cover some of those issues as you would expect.
Is that Treasury's advice, that there's been underpayment in certain sectors?
Yes, look, yes. There's two issues. One is, if you like, in feminised industries in particular, there was an aged care case, and there's been other discussions around childcare. It would appear, and many of those industries are largely government funded, that, well, at least it's the Fair Work Commission's view that the relative wage cases show there has been some underpayment there, and I guess my judgment would be that it's going to be difficult to attract people into those sectors and, frankly, improve productivity in those sectors if they're not, because their wages are not being determined just by the interplay of market forces. It is a complex judgment, but so I think yes. The second issue, though, is I would just put this caution that when such assessments are made, it's always wise to ensure that the adjustments are made in a phased way, of course, because that minimises disruption to the labour market more broadly. But Treasury's general advice would be, yes, there has been underpayment in sectors such as, well, not in the legal sense, but in the relative wage sense, in sectors such as childcare and aged care, and in the longer term, it's good to see those things. I think you can ask the Governor tomorrow. I think she made some similar remarks around the aged care outcomes.
Has labour productivity across those non-market sectors, which obviously includes the public service,
yes, yeah,
and also government-funded health and education sectors, that's fallen to 2006 levels under this government? Is that correct?
Yeah. So there's some measured falls in. We should, if you want to talk about non-market labour productivity and productivity in government services, it's probably worth having a chat to the Bureau of Statistics about that if they're on this evening.
I think we will.
Incredibly difficult to measure because we don't have an independent, I'll call it this, an independent measure of output. So understanding productivity in those sectors is very difficult. So, for example, the productivity we might see in the health sector or the aged care sector or any of these other sectors, we might not be seeing in our measured GDP numbers, but we may be seeing in higher, what they call quality adjusted life years, a higher life expectancy or a better quality of life. And so it is a difficult area to judge, but definitely worth looking at closely, Senator, and worth raising. But it's one where economics is not going to provide all the answers there. I will just make one other quick remark. So I think sometimes people are a little perhaps gloomy, I would say, about the potential for improving productivity in those sectors. In the past, the Productivity Commission has looked, for example, at the opportunity to improve productivity or efficiency in government services or government-funded areas, and it sees ample opportunity, and so do I. The types of reforms that you've engaged with on aged care and NDIS are good examples of that. With the government, I beg your pardon, are good examples of that. There are real opportunities to improve how we deliver government services, and this sounds magical, but it's not, that deliver both better outcomes and if you like, higher productivity and potentially release workers to other sectors. So I don't think, and that's why I encourage all governments to focus on of what we can achieve in those government service areas, because particularly when the economy is near full employment or at full employment, potentially, that has broader productivity implications. Because if we're employing more people than we need to in government services, they're not able to work in potentially higher productivity jobs elsewhere. And we're not getting the services that we should get. So I think there is ample opportunity to improve aggregate productivity through a focus on government services and other areas. Whether that all turns up in measured productivity in GDP is a more vexed issue, Senator, but I would encourage people, sort of, if you like, not to diminish it. I think there is ample opportunity there.
I grant you that it is a difficult thing to measure, but we have to refer to the best measure which we have, which was the one that was referred to in the National Accounts, which is prepared by Treasury, and that says it's fallen to 2006 levels. And obviously in previous hearings you've provided that the level of productivity growth that would be required to support real wage increases without necessarily stoking inflation. So I'm wondering where the Treasury has a view now of what productivity we need to ensure those real wage increases, which everybody supports in principle, but that won't fuel further inflation, and how that, I suppose, interacts with the discrepancies that we're now seeing in headline inflation and that underlying services inflation. Let's focus on longer term trends. In
in the longer term, we think real wages are predominantly determined by productivity. There's no doubt. And so nominal wages, the nominal wages that are consistent with inflation, stable and somewhere in the middle of the band, is going to be that productivity growth plus wages. So if productivity growth was 1% on an ongoing basis and inflation stable at 2.5%, we'd expect to see nominal wages of roughly 3.5%, something along those lines. We do tend to look very closely at because of the issues of measurement in the market sector measures of productivity, because of the issues I've spoken about more broadly in the public sector. And they are a little stronger, but mining productivity, for example, has been incredibly weak over the last few years and has been pulling down market sector productivity. So there is weakness in market sector productivity as well as non-market productivity. In the IGR, our assumption for long-term productivity growth was 1.2 from memory, but that was brought down from 1.5. Other countries have also been bringing down their productivity longer-term trends. Some have brought them down to 1 now, I think, and some 0.8. So Australia, I was going to say, is not an island. Of course it is, but is in the sense of productivity. Global trends in productivity will affect the numbers here. I'm going to go back to a comment I made a moment ago, which means if we are experiencing a global slowdown in productivity, it will turn up in Australia, which makes it even more important that we focus on those things we can control, such as the efficiency of the delivery of government services. Because, as I said, that will make the economy in aggregate more productive and, if you like, get us closer to the most efficient we can be in the world, which will generate more income for all Australians.
I mean, I agree with you to a point there, but particularly by establishing sort of the market regulatory settings to improve productivity and sustain real wages, that would be terrific. But my concern is that if the taxpayer underwriting wages, particularly in that public service sector, public sector
care economy
area, so I should say, is that a sustainable way of dealing with that underpayment you're referring to?
There are just decisions that governments have to make about how much public spending they want in those areas, and if they want them to work effectively, they'll need to pay people reasonably. And it is, as you say, a little more complicated because the market's not just determining it, so judgments have to be made, if you like, about the relative contribution. I suppose 30 years ago I didn't feel particularly overpaid as a nurse, so there are sectors that have chronically and typically feminised sectors that, because they don't have that market interaction, I've sometimes wondered, if you like, that the people are getting the full value that they should be getting. But you are absolutely right, it has to be paid for, and that will require the raising of revenue, and they're the hard judgments about how much does the government want to spend, what is the scope of the services, what is it willing to pay those people to deliver those services. If it doesn't pay them appropriately, the services won't be of a quality. They're just the whole...
But you didn't touch on the regulatory settings and the potential to change the regulatory settings to make the market more efficient and more competitive.
Regulatory settings can make a difference, including, for example, the way the private and public sector can compete. My own personal view is that Australia has, through having a private and public health system,
crowd out,
frankly does better than those countries who are more purely public and those countries that are more purely private. It's the interplay and the innovation that gets driven sometimes by the private side, but in health, where it's a complex good to deliver, there's a clear role for public delivery.
Thank you. Thanks, Senator Hume. Senator McKim.
Thanks, Chair. Morning, Dr Kennedy. Thanks to you and your colleagues for making yourself available. In September, the Treasurer acknowledged that you'd been tasked with looking at options to reform negative gearing in the capital gains tax concessions. Did you provide advice to the government on those matters?
I've mentioned the previous estimates and I'm going to maintain the line, that we provide advice to the government on all aspects of the tax system. I will go this far, including negative gearing and capital gains. And, you know, sorry, this is disappointing, but I do it all the time. That's my job.
Yep. So when was the most recent advice that you provided to government on negative gearing and the CGT discount?
I haven't got a date in front of me about when a brief went to the Treasurer, so I'm happy to take that on notice. Yeah, so I'll take it on notice.
All right. I wonder if
yep.
some of your numerous officials might be able to provide that in real time. That would be of assistance.
You will see Revenue Group this afternoon, and they are the area that provides that advice.
Sure. I wouldn't have thought it would have taken that long with respect, Dr. Kennedy, but regardless, can I ask whether Treasury would agree with the proposition, or whether you would agree with the proposition, that winding back the capital gains tax discount specifically would be an economically progressive measure? Your own tax expenditures and insights publication reveals that 80% of the benefit of that tax break goes to the top 10% of income earners. So on the face of it, it would seem reasonable to propose that winding that back in any way would be progressive and would improve economic fairness in Australia.
Yeah, if the capital gains tax discounts are a significant feature of the tax system, I haven't got the numbers in front of me, but I'm sure they're right if you've taken them from the tax expenditure statement. It is an area, you would see all the press about it, that we think about more generally around the operation of the tax system. For example, Ken Henry's tax inquiry made a number of recommendations around capital gains tax changes, but also other taxes, other capital income taxation and savings taxation. So there's two ways we think about it, Senator. We think about it from the point of view of the housing market and how it impacts on how the housing market operates, and then secondly, how it nests inside the if you like, both the efficiency and equity of the entire tax system. And I think the tax system has to be thought of as a system, not just the individual taxes. But it is an area of strong interest to us.
All right, thanks. So would you agree with the proposition that removing or restricting or winding back either or both of those two tax breaks would benefit people trying to buy their first home, particularly renters trying to buy their first home?
Well, I should just probably state at the outset the government's made it very clear its own position, its own policy position on negative gearing and capital gains taxation changes, and stated, I think, you'll tell me if I've got this right.
Well, the Minister will probably tell you whether you've got it right or not.
That's not a matter under that's not a matter under not a matter under consideration. Probably the capital gains arrangements have the most influence on the balance of ownership issues, but it is a complex area, and I guess I would encourage people not to rush to judgment. It's the sort of area where things have to be looked at carefully before any changes would be considered. But to be crystal clear, we're not being asked, and the government is not considering changes in that area at the moment.
Well, you were asked previously, and the Treasurer's been clear publicly about that, but just specifically in regards to your comment just then on the capital gains tax discount, when I think you said words to the effect that would have the most influence on home ownership issues, is that an acknowledgement that if CGT discount was wound back in some way, that it would make homes, it would benefit renters trying to buy their first home?
Look, it's an issue. It's likely to have an influence. Exactly what that influence would be and the magnitude and materiality of it would be something we'd have to look at more.
So you haven't done
carefully.
You haven't done any work on the extent of a particular policy change in relation to housing availability?
We do look at the issue more. We have looked at the issue over many years and as I said in the last estimates, these features of the tax system have been in place for a very long time. We tend to look at it more from the point of view of tax reform, to be frank, rather than, or potential changes to the tax system over time, rather than from the point of view of housing. Whereas I guess I've said to you in the past, I think the dominant impact on the housing market at the moment is simply not building enough dwelling units.
So I acknowledge supply is a critical part of where we find ourselves today, but you can't completely separate supply and demand, can you? I mean, that's self-evident. It's the relationship between supply and demand that's the issue here, is it not? And off the back, and if you agree with that proposition, can I just simply ask, would winding back negative gearing or the capital gains tax discount, or negative gearing and the capital gains tax discount, that would have the effect, would it not, of reducing demand in the housing sector?
Do you mean investor demand?
Well, demand
or aggregate demand for housing?
Aggregate demand for housing, but investor demand would be a subset of that, would it not? Look, it sort of all depends exactly how these policies are put in place. The taxation arrangements, I think, are probably more likely to influence the pattern of ownership rather than the aggregate outcomes. So you just to be clear, you don't accept the proposition that winding back or removing negative gearing or the capital gains tax discount would reduce demand, aggregate demand in the housing sector. Do you not accept that proposition? Look, to be honest, there's just a lot of things that are going on there. Sure, but all other things being equal, Dr. Kennedy. Let's do the all other things. Let's do the all other things. Do the all other things given.
You're great to live in your world, Senator McKenzie.
I beg your pardon, Minister?
Bit of black and white, yes or no. I mean, things are often more complex than that.
No, they certainly are, but I'm just putting a proposition. I think Dr. Kennedy...
I guess if you thought it was the case, like let's think about it in just the sheer physical volumes, if you think it reduces aggregate demand, you're basically making an argument there's going to be more people per dwelling unit, like the number of people, because, let's just think about the physical aspect of the balance of these things. And we have seen an adjustment in that. There are more people per unit of dwelling at the moment. I think I think those sorts of things are more likely to impact on the way the prices of those assets change over time and the way they're distributed, less so on the interaction of supply and demand, which in the much longer term is going to be driven by household formation and a range of other things.
So you said you think it would impact on the pattern of ownership. By that, do you mean that we might see less investors, property investors who are, investing in property as an asset class, buying a house, and more homeowners buying a house? Do you think that's...
If the capital discount is less attractive, then there's a less attractive tax incentive.
That's right.
But it is, as the Minister said, pretty complex because, if there's less investors, there's less dwellings to rent. There's a lot of interactions, and they're investing less than rents raise. So you've got to think pretty carefully about how these changes would unfold over time, and the patterns that we've observed in the housing market and the current circumstances. We didn't make these tax changes yesterday. They've been persistent features of the tax system. So we think the things that are driving movements in the housing market at the moment are not predominantly coming from the tax system. They're coming from the market itself. The physical supply, for example, of houses.
So I think, just to be clear, Dr. Kennedy, did you accept in that answer that if you did wind back the capital gains tax discount, then there would be a change in the pattern of ownership that would mean less property investors and more homeowners.
Potentially. It would be something you'd have to look at carefully. As I said, we mostly look at this issue from the point of view of how it interacts with the whole tax system, because we think that's our focus. The housing bit is not irrelevant, I take your point, and it should be thought about carefully, but I've strongly encouraged the government to remain firmly focused on increasing the supply of housing, public, affordable housing, and housing more broadly, and that's our engagement with the states. I'm not saying I wouldn't go as far as saying it's a distraction. We should always be debating and trying to understand where the tax system's at, but to resolve the issues that we face at the moment, we simply have to increase the supply of housing, and that should be our primary focus, and my understanding is it's the government's primary focus.
Well, we've been urging the government to do more on supply, but just in terms of... we haven't. In fact, we did, I note, leverage another $3 billion out of you.
Well, that's you can pat yourself on the back for that.
Minister, in order that more social and affordable houses can be built. That is absolutely the case. That is absolutely the case, and we're really proud of achieving that outcome. But but Dr. Kennedy, you've said that if there was that change in ownership pattern, there would be less rental properties, but there'd also be less renters by definition, wouldn't there? So the supply and the demand would wash out in the rental sector to a degree, would it not? Because self-evidently, if there were more people in home ownership, there would be less renters, correct?
Devil's often in the detail, Senator. You want to model this very carefully, and there's quite significant differences across the income distribution in the pattern of who's a renter.
And have you done that modelling?
And who's an owner.
Why haven't you done that modelling? Look, Dr. Kennedy, we're in a full-blown housing crisis in this country.
You have a housing... I think today the housing... the chair of the Housing Supply Council is appearing. She knows more than I'll ever know about this, and we've invested in Treasury substantial resources in supporting her and her council work through these issues. So, look, very happy for you to put... But, you know, I sort of, if you like, I do reject that we're not interested. We've got...
that's why you haven't done the modelling.
I've got substantial resources invested in that Housing Council and supporting them understand. And they published a report last year, which I think is substantial and goes to these issues, including the tax issues.
Okay, well, thanks for that. I'm just going to move on quickly. One other area of... on the demand side of housing is the exemption that's currently in place that allows self-managed super funds to borrow to purchase residential properties. We've seen close to $30 billion of residential property that's been acquired by self-managed super funds through limited recourse borrowing, and the Council of Financial Regulators has written to at least 3 treasurers that I'm aware of, Mr Morrison, Mr Frydenberg and Mr Chalmers, inviting them to either remove that exemption or at least trim back limited recourse borrowing arrangements for self-managed super funds. Does Treasury have a view, or have you had a look at what the impacts of ending or trimming back that exemption would be, and what's the outcome, if you like, of allowing self-managed super funds to borrow to purchase residential properties in terms of the impacts on housing demand?
We have looked at that issue. I'm very sorry, Senator, I just cannot recall when and the various aspects of the advice to hand. I think if the best place to have a run at that would be in markets, would be in revenue group, not markets group, revenue group, with my colleague Deputy Secretary Brown. I'm sorry, I just cannot recall.
No, that's okay. No, it was a question without notice that we haven't discussed in previous estimates, Dr. Kennedy, so no adverse reflection on you there. Look, back to the sort of relationship between supply and demand in the housing sector. The Treasurer said this, and I know you're not going to be critical of the Treasurer, but I just want to put this to you. The Treasurer said one of the reasons we're not going down the path of changing the negative gearing arrangements and abolishing negative gearing or abolishing the capital gains tax discount is we haven't been convinced that that would have positive consequences for supply. Those are demand side measures, are they not, Dr. Kennedy? And doesn't a statement like that presume that demand and supply kind of live in a vacuum from each other rather than being completely interrelated?
Well, my understanding from the Treasurer's comments were that he was saying that the focus, the biggest return here is on increasing supply rather than making changes to the tax system. And you're right, I don't, look, I just fully endorse that comment. I've made the remark earlier, we've just got to be firmly focused on how to improve the supply of dwellings in Australia. And I'm not saying it's a distraction, but if I think, and it's always worth debating those changes to the tax system, but they are not going to shift the dial anywhere near improving the supply of housing.
Dr. Kennedy, I'm reasonably certain that you're not saying that we should do nothing on the demand side in relation to housing. I think you've said you prioritise, you think the priority should be supply side. Do you think there's a risk that increasing supply without any changes to negative gearing and the CGT discount that would impact on the demand side, just simply increasing more supply under current tax settings would mean that property investors or property speculators who regard an investment home as an asset class rather than a place to live, that they will basically just scoop them up over and above renters who are aspirationally desperate to get into the housing market and buy their first home. I mean, do you think it's a level playing field? And don't you think that if we only sort of deliver on the supply side, which I certainly agree with you, we need urgent action on the supply side, but don't you think there's a risk that just simply acting on the supply side and doing nothing on the demand side, and with the current massive tax breaks for property speculators, that investors are going to scoop up more than they otherwise would, and renters, once again, who want to get into the housing market are going to lose out?
No, I'm not particularly concerned about that. Even in the variation across jurisdictions, there is a jurisdiction that we can see differences in housing outcomes across jurisdictions that predominantly reflect supply. And it's a small jurisdiction, admittedly, but this jurisdiction here, the ACT, where there's been a substantial increase, I think particularly in the supply of apartments, is having somewhat different outcomes to other states where that supply has not responded nearly as fulsomely. So I'm not saying the issues that you're raising aren't worth debating and looking at and considering, but I don't see them as something that's a necessary thing to be done to do the other response. I frankly see it much more strongly in the opposite direction. I think the dynamics of the market will operate if we supply more dwelling units. Yes, social and affordable, but just more dwelling units in aggregate. We see an adjustment, and we've seen that over time, but we are chronically undersupplying them in Australia.
And I know this is my last question in this block of questions, Dr. Kennedy, and look, again, just to be abundantly clear, no pushback from me or the Greens on the need to increase housing supply. We've been very clear about that. Further, just to be clear, that we're not suggesting that any demand-side matters should be done in isolation of responding to supply. But isn't it the case that there's a lag in supply, and like you've got to actually build the things?
Yeah,
and
you're trying.
Absolutely. No, well, and there are a range of factors around that in terms of...
Delayed the HAF, 6 months?
In terms of, well, in fact, that didn't delay a single dollar going out the door under the timeframes that were in the legislation, as you should know, Chair, if you'd read the legislation, because they weren't...
Ooh, very touchy.
Tell the truth.
Well, we're absolutely telling the truth here. There is a lag, Dr Kennedy, is there not, in terms of actually having to build them, and there are constraints around that in terms of trade, trade professionals and labour market, materials, supply chains and so forth. Whereas if you were to take action on the demand side, that could potentially flow through relatively quickly, could it not?
Look, I don't think so. I mean, I think it's probably worth us all reminding ourselves that most of the levers on the supply side are not held by us in this place. They're held by state governments. In fact, our constitutional...
That's a political choice.
Our constitutional... Well...
Federal government could
unless
build homes. Federal government could build homes if it wanted to. And it should be doing that, I might add.
No green-tinged fans.
Senator O'Neill.
No, you don't think the federal government should be building homes? That's
unless we want to change...
I'll just try and move on the call and give Dr Kennedy a final word on this question.
I think I've hit a sore spot over there, but anyway, Dr Kennedy.
I guess wanted to... We talked a lot about supply today. It is the case that the taxation arrangements are in the hands of the Commonwealth, and as I've said a number of times, they should be debated and considered. But as I've also said, this dial only shifts when we get more supply, and frankly, a lot of that. And we have very constructive conversations with the states, and I'm not diminishing the difficulties they have in doing it, but it will lie with them. It's a tough job, but it's around planning and zoning, and it's around the things that they constitutionally have the power over, and many of the jurisdictions are working hard to do it. But it's just remembering that we're going to have to work as a set of governments to make that change. It won't be just solved by the Commonwealth.
So I'll share the call, and noting that we've got Dr Kennedy till 11 a.m. and a number of senators would like to ask questions while Dr Kennedy is with us. We'll go to 10-minute blocks, and I go to you, Senator Smith.
Thank you very much. Thank you for your participation today. Dr Kennedy, in your opening statement, you do reflect on the West Australian experience in regards to housing affordability. Could you just expand on what is happening in Western Australia?
If you don't mind, I might ask my colleague just to perhaps a couple...
Please, yes.
The particular thing I was referring to in the CPI was the growth in housing construction costs in the CPI, which, and I think that number, Adam, was as much as 19% through.
19 point. Sorry, Adam Cagliarini, First Assistant Secretary, Macroeconomic Conditions and Population Division. Yes, that was 19.1%
through the year, so it has not eased like other states where the price of new housing has come down to, as I said, around 5.
And from the Treasury's perspective, what are the drivers of that in Western Australia?
To a large extent, we've had a fairly significant increase in population in Western Australia, and Western Australia has a very highly, as you would know, Senator Smith, fairly highly concentrated population in Perth, and a lot of that population growth is in Perth. And so that has been a big driver of housing demand in that sector, and as the Secretary mentioned, housing supply does take a bit of time to respond.
Do you have a sense of what that time frame might look like?
At the moment, no. We get a sense that the costs of building those dwellings are easing. So material costs have come off. Labour costs are still a bit of a pressure on construction costs for housing. But we have actually seen across the states, you've also seen dwelling prices in Western Australia being the strongest across the country as well. So
the Western Australian state government has had, a significant public investment in infrastructure. What impact has that had on construction costs in the housing sector, do you observe?
Specifically for Western Australia, I wouldn't know that, Senator. I apologise for not knowing that.
The Metronet project, which is $11 billion worth of
I could
investment.
make a couple probably of general comments to that, Senator. This is an issue we are looking at carefully, this sort of competition for labour across sectors. Infrastructure Australia, I don't know when they appeared, that would be a good place. They've recently done some work on this that we've drawn on. We would be surprised if that the demand in infrastructure wasn't impacting the costs of labour in other sectors, and there'd be a reasonable amount of transferability. But as I said,
And the remoteness of Perth, I thought would add to that also.
yes, yeah.
The immobility of some.
Population growth in Western Australia has been over 3, I think.
Yes.
Over 3%. So
Oh yes, it's the highest of any jurisdiction.
Correct.
So it's sort of, I guess you're dealing with the difficulties of growth, like of a place that's growing strongly. It's very attractive place to live. People are moving there. The job opportunities are, and so it's tough. I understand that the state government was also implementing a little while ago some planning reforms, particularly in that Perth Peel region, to try and speed up the delivery of housing. But the reason we drew it out is not in any way to criticise the Western Australian government, but we just wanted to be clear with the committee that there was this quite distinctly different outcome in Western Australia compared to other places on this issue that we've been watching for some time. Other states had these price increases, but they have now dissipated. We do think they'll dissipate, Senator Smith, in Western Australia, but they may take a little longer because, if you like, it's a little bit like, interestingly, what Hobart and Tasmania was suffering from a couple of years ago, when you get a lot of inward migration and the place is very popular. It's tricky to adjust. These lags take time to adjust.
So Western Australia has had the highest rate of population growth in Australia, and just in recent weeks we tipped over the 3 million mark, which is 3 years ahead of the ABS prediction in 2022, I think that was. And that has put pressure on the rental and housing market. So in Western Australia, we've seen rents go from $450 to $650 in the 3 years to 2024. And this is perhaps the most important point. It's true to say that rents do have a direct impact on inflation, on the CPI. Is that a correct statement?
Rents are in the CPI measure, yes, they are.
And I think it's about between 6 or 10% is...
The weight? I don't know the weight, actually.
The weight's roughly about 6%.
About 6%. So rents and housing costs have been increasing in Western Australia, and in fact Perth recorded the highest CPI increase of any Australian city in the June quarter at 4.6%. So the maintenance of high construction costs, the maintenance of continued strong population growth, is it right to then expect the Perth-based CPI to continue to be higher than other Australian cities over the medium term?
It may have a somewhat different cycle. It has in the past.
We do say that. We do say that in the West, Secretary, that we are different. Senator Gosh will agree.
I find that we're all very much the same. But anyway, the
I'm sure we are, but yeah, the economy may not be, but we are.
A few years ago, Perth had actually a very significant housing downturn. You'll probably remember this. House prices were falling and everything was on the other side.
Secretary, I'd love to sort of discuss these
but
things.
I guess all I wanted to be clear,
I'm interested in the projection, the expected projection.
That it wouldn't be unusual for a state, and in this case particularly Western Australia, given how much is driven by mining, to have a different cycle. In aggregate, we are expecting rents to ease Advertised rents have been falling. The RBA and their published
But in all
numbers-
of these, to be fair, Secretary, in all of these discussions, I think what people are interested in time frames.
Sure.
In time frames.
We don't forecast.
It's not significant to say that rents are expected to decrease. What is interesting and what is valuable is in what time frame can people expect these things. And because the heart of my question here is, should West Australians be preparing for higher than CPI, a Perth-based CPI, higher than other Australian cities based on population growth, which exceeds other states, higher housing construction costs, higher rents?
The falls in the CPI in Western Australia, and this is just we have not modelled it separately, so to be honest, you should look. Western Australian Treasury is a much better place to do this myself, but I would be surprised if the falls, I still expect falls in the CPI in Western Australia to lag the falls elsewhere, but I still expect it to fall.
Thank you very much. Just want to turn to another matter very briefly. Falling job vacancy levels, what do they indicate in terms of economic activity?
It's usually a leading indicator of weakness in the labour market. So there has been a fall in labour hires, and sort of going with the vacancies. So if we think about the strength of, I drew attention to the unemployment rate. That is often the last indicator in the labour market to move when the labour market weakens. So that's why we do watch vacancies carefully. There are a couple of vacancy releases recently actually have bottomed out. They were falling dramatically by 19 to 20% through the year. They just bottomed out, but labour hires are lower, and it is an area that we are paying, pleased you raised it, very close attention to, because in this desire to preserve the gains that we've made in the labour market, an early signal that the unemployment rate might rise faster than we anticipate would be a rapidly falling vacancy rate, or also a much lower rate of hires, which we are seeing some of that.
Yeah.
I might just add my colleague to add.
Yeah, so just add, vacancies were at record high levels. They've come down quite a bit.
Because you're appreciate from our perspective, time
so sort of towards the end of
yeah.
2022, mid to late 2022, they got to record high levels. They've come down quite a bit. The level of vacancies right now is still, across most measures, still above where it was in December 2019. So there is still some strength, but as jobs get filled as well as
based on my calculations, private sector job vacancies fell by 70,000 in the year to August 2024. South Australia had a 24% drop in job vacancies. Western Australia a 20% fall in. These are private sector job vacancies. New South Wales a 17% fall in job vacancies. And if I understood the Secretary, job vacancies are perhaps a lead indicator or a precursor to rising levels of unemployment. Is that a correct statement, Secretary?
Yes, vacancies have been falling. The labour market has been easing, no doubt.
Thank you.
Great, thank you. Yep.
Senator Hugh.
Thank you, Chair. I would like to know if the Treasury provided formal advice that the HECS help announcement made on the weekend was not inflationary.
Well, we definitely provided advice around the HECS help announcement as part of our usual analysis, and I'm happy to say this in broad terms: the forgiveness of debt won't have any significant impact on aggregate demand in the short term. Hence, we wouldn't expect it to impact inflation.
So it's not inflationary. Can you step me just through how that advice was arrived at?
We provided, in the usual way, advice around the government's consideration of the policy, but I suppose in simple forgiving the outstanding, I'll focus on the debt part, not the change in the thresholds. I can do both if you want me to.
Well, obviously it's a package deal, but if you could either disaggregate them and then re-aggregate them, that would be terrific.
Well, first thing, policy starts, I think, in 1 July 2025, so there's a timing issue. So our advice goes to when the policy comes into place, which is 1 July, I understand, 2025. Debt forgiveness will, and this will be finalised in May. I think you discussed this with Secretary Wilkinson. I'm not sure on how it will be reflected in the budget, but the amount of debt that's been forgiven by the government will then be reflected in its own balance sheet, and in particular is likely to impact net debt, if you like, a financial asset has been reduced. But the debt forgiveness part will, if you like, doesn't impact the flow of income of people substantially, other than over time it will bring forward when people pay their debt off, and then they'll have more money. But that's a very slow run effect, and that would go well beyond 2025, if you like, and the effect would be quite small. I haven't got the numbers in front of me, but changing the thresholds, yes, where the thresholds, that does directly go to people's income, so they do have more money that they can spend, but the numbers around that, in the light of our economy, are very small. There's no way we could discern any measurable effect on inflation from numbers of those size. I will double check with Mr. Yeaman, if that's okay.
Yeah, certainly. That's correct, Secretary. I think, as you say, on the repayment side, on the forgiveness side, we think that's a very slow-moving, beneficial but slow-moving impact on the repayment schedules and the sort of move to a marginal rate of repayment. That does mean that for people who are close to those thresholds, they'll receive more income in their pay packet, so to speak. That will add at the aggregate level in a modest way to demand, but how they then choose to, there's a number of steps here. There's how they then choose to use that income, and some will choose to save it, some will choose to spend that additional income. And then when you look at the aggregate number of people affected, which is substantial, but in the overall size of the population, not large, and then you look at that benefit as against a $2 trillion economy, we don't think that the effects are going to be substantial on inflation.
Okay. So was the advice that you provided specifically that the 20% reduction in outstanding balances is cost of living relief?
I'm not going to. Look, I'm happy to talk about how it translates through to inflation, but we provided our advice around the policy and its consideration and scope, but that went into a cabinet process, and I don't think it's appropriate for me, unless you've got another view, Minister, to go into the details of the exact advice that we provided to government around that.
All right, we've had so much evidence, estimates and in other forums, saying that the government has charged Treasury with the task of identifying cost of living relief measures that won't be inflationary. Is this one of them?
Well, I answered that question yesterday. The government agrees that this has a cost of living element, but it also has a intergenerational element too, of acknowledging the debt burden that's been placed on younger Australians through their help or HECS loans.
So the advice...
And that was the evidence I gave you yesterday, and it's the evidence I'll give you today.
Well, the advice that, and this has been publicly referred to not just by you, Minister, but by other ministers in media statements, did that advice from Treasury say that this was cost of living relief?
Well, we don't really go through the content of advice. The Secretary has explained to you the role of Treasury. Treasury has provided advice. There is no doubt, particularly with the increasing the thresholds that your government lowered, that will allow more money in the pockets of people who had previously had to start repaying their debt, and we've been very clear about that. So in that sense, yes.
Did Treasury provide advice that the 20% reduction in outstanding balances is an economic incentive to study?
I'm not going to go. I'm happy to take some of this on notice, but I'm not going to go to the specifics of that advice.
I'm just interested to know exactly what the advice that you provided suggested.
Well, I'm
because
sure
the
you're
government has
interested,
said
but
that
you're not in the cabinet,
that
so
it's cost of living relief,
have
and I'm
be
just
as
wondering whether
interested as
that's
you
the
like.
advice that Treasury have given the government.
You can be as interested as you like. We're trying to be as helpful as we can. There is no doubt we know that going forward, 9 out of 10 of the new jobs created will require a TAFE or university qualification. There is no doubt that when you speak with students and the higher education sector more broadly, and this has been acknowledged in the university accord, the costs of that education impact choices people make. I mean, that's pretty obvious, and I think, need to be looking at every which way we can to ensure that people aren't disincentivised from taking on, a degree or doing further education. Did
the advice from Treasury specifically around the 20% reduction in outstanding balances generate any economic incentive to work?
I'll just give the same answer I gave earlier. We provided advice in broad terms around the policy. The policy was prepared by the Education Department, and we provided our own views on the government's consideration. I should be really clear on that cost of living question. I mean, as Mr. Yeaman said, it's just a fact that, as the Minister said, if you reduce people's repayments, they have more income. So I don't want to be controversial about that bit, but for all the other dimensions, I'm happy to take them on notice, but also happy to say Treasury did provide advice around all features of the policy that was considered.
I'm certain that you saw the response from economists to this policy that's been in the media in the last few days. I'm wondering if you agree with the following economist, Chris Richardson, for instance, who said that this is Robin Hood. It's a tax cut generated to the big end of town, with the money going from the less well off to the better off, and it's a fairness fail, that it doesn't encourage anyone to study or to work, and that in fact there are many things that Australia could spend $16 billion on, and this wouldn't feature on any list that someone fighting for a fair and more prosperous Australia put together. Is that something that you have considered and potentially agree with or disagree with?
If I have to answer that, I have to tell you what our advice is, which I've said I'll take on notice.
What about Andrew Lilly at Barrenjoey, who said many good ways to spend $10 billion, he said, attempting to buy 3 million votes in a close election is not a good one. Or Ashley Craig, who's the senior lecturer in public and labour economics at ANU, who said it's an abominable idea. It's popular because people don't understand this and being misled. Are these things, economists, that you agree with?
I'm not an economic commentator.
You're an economist.
I am, thank you, yes, but no, I'm not a commentator. Yeah.
Noted, like we had this discussion yesterday, noted.
Yeah, I didn't have an
economists
economist at
have
the table
views,
yesterday. I do today.
Earth-shattering headline.
Last question, Senator Hume, before we move on to some 5-minute blocks so that everyone can ask Dr Kennedy some questions. So, Senator Hume.
You just stated that if you reduce repayments, you're putting more money into people's pockets. Have you modelled the impact of how that will extend to the amount of time that it takes for people to repay their debts?
The advice around those issues came forward from the Education Department, as my understanding, but I'll just check with...
Yeah, I'll confirm that. The Education Department worked with the Australian Government Actuary and other parts of the system to generate estimates around those numbers. Our colleagues from Fiscal Group led that work within Treasury, so they may be able to provide some support in their session later today on that, but I don't have those details to hand.
When was advice on this policy requested by Treasury, to Treasury?
There's been a range of work being done for the duration of the reform work that's been underway by Minister Clare. Like, it's an ongoing piece of work through the Accord and our response to the Accord measures around, supporting recommendations of that accord. So it's been ongoing.
So the policy, as it's been
Final.
presented, I just want to understand the policy that as been presented, which was generated from the Department of Education, was clearly Treasury was asked for their opinion and to provide advice on it. When was that requested?
As the Minister said, Senator, the Education Department, Ms Clare's been bringing forward a range of reforms over actually quite a long period of time, and we have been engaged with him and then with his department and with that directly, and it's been part of that process which has been going on for quite some time.
Okay. Senator Rennick.
Hi guys, how you going? How you going? Good.
Very good, Senator. Good to see you again.
Yep. So last time I note you said that Treasury significantly underestimated the recovery in temporary visa holders in the order of nearly 25%. We simply underestimated how many students would flow back into our universities and higher education sector. Why would you need to estimate this figure? Wouldn't you talk to Home Affairs and the Immigration Department as to how many visas are issued, so that you would know how many visas are issued, and then in terms of immigration, how many people have arrived and how many people are yet to arrive?
It's definitely partly that, but then if part of our underestimation, if you like, with Home Affairs is to get to your pipeline, how many people applied. Like initially, post-COVID, when we was talking to the universities, they were very worried about students returning to Australia and what the numbers would look like. You remember that debate they were having at the time, and so we took that seriously, and so the surprise, if you like, flowed all the way through the system. Many more people applied for visas, more were granted, more came in.
Sorry, I've got short time. So do you get a monthly report from Home Affairs and the Immigration Department as to how many visas are issued, and how many arrivals arrive and how many departures go?
We do get monthly reports. Do you want to go? Yeah. We get regular updates from Home Affairs on how those visas are tracking.
Thank you. Okay, I'll finish up on that one, thanks. So next question is, I note last year the Australian Federal Police seized the 3,000 hectare Tasmanian farmland purchased by Chinese nationals using the proceeds of crime. I'm just curious, nearly everyone else, or nearly just about every business has to do ATO reporting. So a small business, for example, with just one employee has to report a single pay slip under single touch payroll. Why does the real estate industry get a pass on this? Given that the real estate industry has to do annual software reporting, why can't they report to the tax office how much money in rent they receive, and in particular how much rent they pay offshore? Noting that there's withholding taxes on dividends, interest and royalties, but there doesn't seem to be any withholding tax on rents paid offshore.
I might ask Mr Tinning if he can comment. Chris, are you placed to comment on this issue?
No, I think that's probably best directed to the ATO, who are appearing later.
I will ask the ATO, but I would have thought that given this is to do with the whole issue of money laundering through, the real estate industry, and we've got a housing crisis as well, that if we were to crack down on this type of behaviour, we could free up some more housing.
The real estate and monetary laundering perspective is quite a reasonable issue, and the government is looking at that issue. Have you talked to the Attorney General's Department about it as well, about their policy?
No.
Because that's, if you like, where the money laundering policy starts, but and you're talking about its intersection with the foreign investment regime.
Yeah.
We're not well placed to answer your specific questions, but I can agree that with you straight up, Senator, that they are important issues. Apologies,
sure.
We haven't.
Okay, thanks. I'll come back to the ATO with that as well.
I'm happy to take your question on notice and provide an answer on notice if that's helpful.
Yeah, that's fine. That's fine. Look, the next question is, and I'll put this to you, Minister, why would the Treasurer want to get rid of Section 11 of the RBA Banking Act that gives him the power to override the RBA? I mean, ultimately, I would have thought all independent statutory authorities should still have some sort of democratic oversight by the Treasurer of the day, and I find it hard to believe the Treasurer would have woke up one day and just said, I'm suddenly going to give up my own powers to override the RBA. I suspect most people weren't even aware this section existed. So I just find it it's an odd thing to do, to be wanting to take away your own powers.
So my recollection, it came up through the review of the RBA. It's a power that's never been used, and as the Treasurer and Government's view is around is strengthening the independence of the RBA, and that on balance that clause was not required.
But wouldn't you also, by strengthening the so-called independence of the RBA, noting that Michelle Bullock won't provide minutes of her meetings with the International Bank of Settlements, just as important as independence, I would have thought even more important in democracy is accountability of the independent, what's supposedly an independent central bank that talks to other central banks. Isn't oversight of these bodies very important? And we need the Treasurer to be able to have oversight of these bodies, and as well as Parliament.
Just to be clear, the Treasurer indicated that he was happy to revisit that issue as part of the negotiations that were going on around that legislation, because he did make it clear that it wasn't on, and a review panel made it clear that it wasn't on balance, wasn't on, you know, it was a close run thing, and on balance recommendation. So just in terms of where the Treasurer got to, as I understand it, you are right that the initial reform was in implementing the entire set of the recommendations, but he indicated an openness to look at that issue in not particularly for the issues you raised, but in the specific issues, but in broad terms, because of the inquiry that was held. You're probably part of it. Had a few former governors, for example, who said they were comfortable with that.
Yeah, I mean, I'm not as an elected representative, but anyway, I'll leave that as a question. So just one more.
Okay.
It's important. Thank you. So do you, in terms of your policy, and I'll put this both to the Minister and you, Mr Kennedy, are you concerned about the decline in the net company tax rate? So when Peter Costello, I think it was in 2000, suddenly decided to start refunding franking credits, there was about $500 billion in superannuation. Today we're approaching close to $4 trillion, and our net company tax rate is, so basically we have a headline rate of 30 cents, and then franking credits are refunding. More and more franking credits are being refunded every year.
Can you ask a question?
Are you looking? Oh, so first of all, can you tell me, and you may have to take this on notice, what the net company tax rate is? And I'll ask the tax office this as well, but I think it's part of your policy formulation in your budget. Mm-hmm. And are you concerned about the continuing decline in the net company tax rate as more and more money is pumped into superannuation, which only has a superannuation rate of 15 cents in the accumulation stage, and can be as little as zero in the payout stage?
I will have to take it on notice. I can say at the outset, it's not something that's on my desk at the moment that I'm particularly concerned about, but I'll ask my colleagues in Revenue Group to look at it. Slightly different point, but I will note that and I'll just get them to confirm that the effective company tax rate has come up a little over time more recently. This is the effective company tax rate, putting to one side dividends. Partly because, somewhat separate issue, but I'll just mention to you that you might want to ask as they talk later, is that resources companies have exhausted many of the losses many of the investment losses that were offsetting their income in the past, and they are paying a higher rate at the moment. Yeah. And some companies are paying tax for the first time. But I'm going to have to ask my colleague. We'll pass it on to her. They're here this afternoon, so apologies for not having that, Senator.
Senator Smith.
Thank you very much. Secretary, do you stand by the advice that you provided during the COVID pandemic?
Yes, I'm comfortable with the advice I provided in the COVID pandemic.
Thank you. Some members of the government, including the Prime Minister, and I think the Treasurer also, have quoted the COVID report to suggest that policies pursued during the COVID period are the reason for our high period of inflation. Do you agree with that? Or do you think that these sorts of comments should be contextualised?
I stand by my advice. That's not saying that I didn't make errors, to be clear. In my advice, just to be 100% clear, when I stand by advice, I don't resolve from it, but I take full responsibility for it.
But
there's little doubt.
To be fair, errors in hindsight.
There's two things that drove inflation. One was the balance of supply and demand, and that did reflect the supply constraints and the amount of monetary and fiscal policy that was put in place. But I do not resile at all from the advice I provided through that period, and it is on the record, and is somewhat related to the unemployment outcomes I spoke about earlier. The second issue, which Treasurer has spoken about extensively, was we also suffered a significant energy shock from Ukraine. Both those factors are the primary factors that drove inflation in the period post-COVID.
Do you agree that when people are commenting on policy responses to the pandemic, that they are that a more accurate description of them is that they be provided some context?
Well, look, I can't get into this. It's always useful to provide context, and I have to note that the Treasurer did note this context, that we were providing advice through that period very rapidly under circumstances of, if you like, the most extreme uncertainty that I've experienced in my professional life, and it's not surprising that we wouldn't have got it perfect in those circumstances.
If we had spent more during the pandemic, then we can expect we could have expected the inflationary experience to be more than it currently is?
No, there's a lot of hypotheticals in there.
Today, yeah.
If we did something that would result in this
It's
being
not
a problem now.
hypothetical, because
Well,
there were
it is.
some clear policy options. There were clear different ideas being prosecuted at the time in terms of what should be the quantum of the pandemic response. But just going to your point, you identified the pandemic response as well as the energy shocks arising from the Ukraine as being the two key contributors to our current inflationary experience. So if the pandemic policy response had included a larger sum of public money, is it right then to assume that the inflationary experience would be greater again?
But I could equally say if for example, JobKeeper didn't go to profitable companies...
You could equally say if you were on this side of the table, but you're not on this side of the table.
Well, I'm just making my point for you. You don't need to be defensive about this report. I think overall, my takeout from it is about being better prepared next time for when the next pandemic comes. Like, that is the purpose of the inquiry.
Senator Gallagher, you've mischaracterised my line of questioning. I'm not in any way refuting the importance of this body of work in terms of capturing the learnings from the pandemic experience.
Okay, but
my question,
we don't have
my
much
question,
time
Secretary,
left. So
was that if we had spent more public money in our pandemic response, would that have led to greater inflationary pressures?
The difficulty with that question, Senator, is the answer is it depends. It depends how we spent it. It depends what we spent it on, and it kind of that goes to the theoretical nature. I will address sort of one issue, if you like, so it's clear. It was my advice to the government. I'm happy to put this on the record. I think I put on the record previously that it should take out some insurance, and it should carefully that it would be better to err on the upside than on the downside in aggregate in responding. Just happy to put that on the record. It was previously on the record. As to the debate over the effect of different policies, what was effective, what wasn't, that you and the Minister are talking about, a little bit tricky for me to get in the middle because, one, I'm marking my own homework, and two, I'm beginning to comment on a previous government, which I think is not really appropriate for me to do.
We've got very limited time now, and Senator McKim...
two very brief questions.
I've got Senator McKim and Senator Bragg. Senator McKim.
Two very brief questions.
Senator McKim.
Thanks, Chair. Just a couple of questions about insurance inflation, like inflation in insurance premiums. I mean, that inflation is currently significant and at double digits. It's driven by an increase in reinsurance costs, which in turn is driven by things like the breakdown of the planet's climate, and unfortunately things are only going to get worse from here due to our collective incapacity to stop the increase in atmospheric carbon levels. Multiple properties in Australia are now uninsurable or effectively uninsurable, and in fact multiple suburbs and towns are becoming effectively uninsurable because of a massive spike in insurance premiums. Have you turned your mind to this, and would you agree that like from where I sit, the insurance industry looks like it's in the early stages of collapse? The government's already an insurer of last resort in some circumstances in far north Queensland. I mean, what does this look like going forward for the government's balance sheet, and in particular, what does this look like going forward for people who simply can't afford to insure their homes anymore?
We are monitoring it closely. Insurance premiums have been rising rapidly, both for vehicles, both for motor vehicles and for housing.
Well, I expect that the risk is being smeared across multiple offerings. I think there is the problem.
I think there's possibly some structural changes on the motor vehicle side, but let's stay focused on the housing side. The increase in costs we spoke about earlier are an important part of this increase. I want to raise that because I think, and I'll come to the climate risk, which I agree with you is increasing and substantial part of the story, but I do want to raise that also a very substantial part of the near-term story is simply if the dwelling has increased in cost, it costs more to replace, and that is driving. And that is a significant part of premiums at the moment. And so, at the very least, that part of this very significant increase in premiums, we think, as we spoke about earlier, should diminish. On the risks associated with climate, I'm not as gloomy as you as saying I think that the industry is, what did you say? In decline or finished or something. I think
there's a risk that it will collapse over time.
The industry will competitive industry will reprice risk. If that risk is higher, premiums will cost more.
And risk will keep going up. I think we can agree on that.
And the question for government over time will become more and more the one you raised about where the private sector is finding it difficult to engage with that risk and where poorer people are unable to access that insurance because of the risk. So, for example, if they live in flood-prone areas, the devastation in Spain in recent weeks is terrible. So I think there will be easing in the current rapid increase that we've seen in premiums. I think that will come off. But the longer-term issue will only be solved through mitigation, and it will involve the government not necessarily in the market itself, but thinking very carefully about the mitigation.
Government's already in the market in far north Queensland.
They are in the market in those particular areas, that's true. We should be a bit careful. There's large parts of the market that's still operating effectively. The big cost increases are driven. If we allow people to build very large and expensive homes in flood-prone areas or fire risk areas, then premiums are going to rise. So we have to think very carefully about what our planning is. But I agree with you that the change in the climate means those risks are becoming more pronounced, and it means the planning and zoning aspects of it are even more significant.
So, last one, if you have one.
So the Actuaries Institute has calculated there are $57 billion worth of mortgages under insurance risk, and that's growing fast. You basically can't finance a house. Now, if you go out to market to borrow money, you can't borrow the money unless the property is insurable. So that means a property can't be sold to anyone except a cash buyer for a range of properties if they are insurable. I mean, what does this mean going forward? Perhaps not in the short term, but in the medium term for property prices for stranded assets, potentially for stranded suburbs and stranded towns. And what do you see as the government's role in this, and what risk does that expose the taxpayer to, given that the government's already in the market? And is there any other scenario other than the government going into the market in more circumstances and more areas. I mean, what's the public policy response to this in the medium to long term?
There will be a need for a government to respond to what is a significant change that will run through our climate as a result of climate change. There's no doubt, and that will unfold over time. I'm not saying there will be no response. I'm just cautioning that I don't mean it flips entirely to public provision. I think there will be a very, very substantial role for ongoing private provision, but you are pointing out some of the more extreme circumstances which may become more widespread, which governments, and I have to go back to including state governments, will have to think very carefully about, because we have people living in areas that, as you said, insurance companies are going to find it very difficult to insure.
Thanks, Dr. Kennedy. I'll just go to the Deputy Chair, and we're just going a few minutes over, if that's okay with you, Dr. Kennedy. Yeah. Senator Bragg.
Yeah, thanks, Dr. Kennedy. I just wanted to talk to you about your dual role as the Treasury Secretary and also as a member of the Reserve Bank Board. Can you talk us how you navigate your role as an ex officio member of the board, but also as a policy advisor to the government?
Happy to. I'll do the board first, and then the government. Do it in two parts, if you like. On the board side, I see an important part of my role to be able to update the board and talk to the board about unfolding fiscal circumstances, including to be able to talk to the board in a very frank way about how government decisions could unfold. Of course, I can't violate cabinet confidentiality, but it's the aggregates that move the numbers, so I can talk to the board. And in usual times, to be honest, that is interesting. Probably doesn't shift the dial all that much. In the COVID period, it was very substantial, because I, for example, would brief the board about the at that time Treasurer Frydenberg. You know, we were running fiscal programs which we had never run in the past, Senator, of an order, and the interaction between that and monetary policy was crucial. Of course, the Governor and the Deputy Governor were also talking to the Prime Minister and the Treasurer directly through that period, but I would be able to engage in the technical detail and how some of those things would unfold. And so I see it as an important role that I am able in the board, as part of the board, in making that decision, just as other board members bring forward information about the, for example, unfolding circumstances in financial markets, I can talk about the fiscal circumstances and impulse and any other potential policy change that may impact our monetary policy decision. On the government side, if you like, I don't see myself, and I don't, and I do this with the two treasurers I've worked for, see my role as explaining the details and thinking of government decision making. The treasurers, both treasurers, have a direct relationship with the Governor. The board considers the Governor. Of course, we speak about matters, but the Governor, the spokesperson for the board, and she engages directly with the Treasurer, sometimes with me, sometimes without me, and talks through the RBA's considerations and the board's considerations. I've found with this government and the previous government that both governments have been very respectful of not putting me in a difficult position in the way they talk about the board or those sorts of issues, and that and I've always encouraged that discussion to happen directly with the Governor. Third part, sorry, very quickly, sorry to run over time. The third part is we do provide advice on governance arrangements. We get the advice on what the dividend may or may not be, but we do that very much jointly with the RBA in a collaborative way. Okay. Is that helpful?
That is helpful. Does the Treasury provide papers for you for these RBA meetings?
Yes, it does.
They do. And what sort of papers do they provide?
A small number of Treasury officials, including Mr Yeaman, get a copy of the board papers. And
so Mr Yeaman sees the RBA board papers?
Yes.
Anyone else?
A small number. I'll take on notice the exact number, but the 4 or 5.
There's different cuts.
Yes, okay. So we'll do it on detail. But in terms of the full set of board papers, a small number of Treasury officials see the board papers. That's been the case for many years. I used to see them, for example, in the past when I briefed Treasury Secretary Henry, when I used to brief him on monetary policy. That enables us to, for example, compare our forecasts and analyse, draw out different views and assist me in putting views to the government. Those papers, so I'll be clear about this in case there's a question, those papers are never shared with the Treasurer nor the Treasurer's office, nor discussed with the Treasurer nor the Treasurer's office. I've never known them to have been in the whole time I've been in Treasury. Occasionally I might get asked to talk to just the board by the Governor about, like the board may be interested in an issue that's leans on monetary policy, and so I might ask the team. So, for example, the government, has a significant number of bonds on its balance sheet at the moment. So I'll consult with the AOFM and I'll take some information to the board about what is the impact, for example, of the RBA having a significant number of government bonds on its balance sheet.
Okay, so do you discuss how you would vote at the RBA's board with Treasury officials?
No, I don't. But they give me views on where we think. My staff give me views on where they think things should go.
Okay, so would you be prepared to disclose your vote if that change was made and there was to be transparency around the voting arrangements for RBA directors?
That would be entirely a matter for the board and the Governor, and so I will. Look, to be honest, I wouldn't be uncomfortable about it, but that's a sort of theoretical question. I would just follow I would be very much want a decision to be made that the whole board was comfortable with and that was led by the Governor if a decision was going to be made to disclose votes outside of the review process or any legislative arrangement.
And just finally, just finally, have you discussed your voting intentions with the Treasurer?
No.
Thanks.
Thank you very much, Dr Kennedy, for answering all of our questions over a substantial 2-hour block. We very much appreciate your time and you go with our thanks. Thank you.
Thank you.
We will return at 11:20 with Treasury Macro International and Foreign Investment Group. Committees. The committee now resumes and we welcome back the Department of Treasury, Macro and International and Foreign Investment Group and Senator Bragg.
Thanks very much. Does Treasury look at IMF forecasts when preparing your own forecasts?
Yes, Senator, we do.
Do you think they're of reasonable quality?
I won't speak for them. The IMF's a very reputable body. They obviously don't look at Australia with the depth that we or the Reserve Bank do. But yes, I would say the IMF is credible.
Do you have any experts here today on Slovakia?
Do we have any expertise on Slovakia?
Yeah.
Not particularly, no, Senator.
You've got no one here today who can talk about IMF forecasts in relation to Slovakia.
No, Senator. We, in Treasury, we have a global economy team in Treasury, and we track global forecasts, but we tend to focus on our largest trading partners and the largest economies in the world.
Okay, the reason I'm asking you about Slovakia is because Australia's headline inflation is projected by the IMF to be 3.6%, which is second only to Slovakia.
Yes, so I understood why you were going down there, but...
So why do you think that is, Mr.
Well,
Yeoman?
I don't think it's surprising that we don't have a person who's fully fluent in Slovakian economic parameters.
Yeah. But why do you think Australia's inflation is the highest in the world apart from Slovakia?
So if I can make a couple of comments and then my colleagues may wish to add to this. There's a few points I'd make, Senator. One is that Australia is on the record as having peaked. Our inflation cycle has varied. While the similar drivers have been at the core of it, it has varied from other countries in its timing. We peaked later, we peaked lower. Lower than Canada, Germany, Italy, UK, US. They all peaked at higher rates of inflation than we did. So we've generally tended to lag the inflation cycle of other countries. We also have had interest rates here in Australia rise by less than many other countries, comparable countries in the advanced grouping. In Australia, interest rates have risen by about 425 basis points. In the US, I think it's 525 basis points. In the UK, it's over 500. New Zealand, over 500. So there have been different policy responses as well. That is why fundamentally we see Australia's inflation rate sitting a little above those other advanced economies, but as has been discussed earlier today, we and the Reserve Bank continue to see both headline and trimmed mean or underlying inflation coming down steadily, and we expect it to be back in the band shortly.
So what's the RBA's forecast for headline inflation?
I'll ask my colleague to speak to that. It was just released yesterday.
Yep, they're so for which period, Senator?
Over the next year.
Over the next year, so going to June 2025, they've got the headline CPI at 2.5%.
2.5%? And what about the year ended 2025?
The year ended 2025 at 3.7.
3.7. Okay. So, what's Treasury's forecast for that period?
So we don't publish forecasts, Senator, for the December period. For a long-standing practice, we've forecast June in the budget and published that number.
Okay.
So we were at budget 2.75 in both June 2025 and June 2026, and we are working on our forecasts now for the MYEFO at the end of the year.
Okay, but just so I get this right, because there's a lot of numbers here. So the Reserve Bank is saying that CPI will be 3.7% the year ended December 2025.
That's correct, Senator, in our latest statement.
Okay. So it seems to me that the Treasurer and the Finance Minister were out during media interviews saying that the IMF forecast of 3.6% was wrong.
No, I never said that. And I don't believe the Treasurer has ever said that.
So you weren't suggesting the IMF forecast was inaccurate?
No.
Okay.
No, I have never done that.
And so what do you say then, that the Reserve Bank is forecasting this inflation figure of 3.7%?
To me?
Yeah, what do you say to that?
Well, I think they're the Reserve Bank's forecasts, and questions about them should be put to the Reserve Bank.
Okay, so you don't dispute the IMF's predictions here?
I said they are not the Treasury forecast when I was asked.
Okay, so you're not disputing them, but you're not necessarily.
Well, they're a matter for the IMF. They're not the Treasury forecast, and we rely on the Treasury forecast when we're making decisions.
Well, let me ask you this then. Is 3.6 and 3.7 a sort of similar figure?
To me? So as I said, Senator, we have not finalised our forecast for the MYEFO at this stage, and we don't forecast explicitly and publish a December through the year number. We focus on June. But in MYEFO, we will present the information that we have, taking into account all factors.
Okay. So the IMF is predicting 3.6, right?
Correct.
Okay. And the RBA is predicting 3.7.
Correct.
Okay. Would you say 3.6 and 3.7 are similar numbers?
Yes, Senator.
They are similar numbers, okay. Because it seems to me that, Minister, that you were suggesting yesterday, I think it was yesterday on radio with Patricia Karvelis on the ABC.
No, wrong.
Was it yesterday?
No, it wasn't on radio.
Well, when was it?
It was in estimates yesterday.
Was it? No, but were you interviewed by Patricia Karvelis
I'm
recently?
regularly interviewed by PK.
Okay. When was your last interview, do you think, with her?
I think it was last Thursday.
Okay. And did you have a discussion about the IMF's forecasts?
No, I don't believe so.
Okay. Well,
I did have one the week before that, which may be the one where the IMF forecast had just come out, and
yeah, was it 24th of October?
Okay, there you go.
Might have been. So you did have a conversation with Ms. Karvelis about the IMF's forecasts.
I had an interview around. It's a broad interview around the state of the economy here, and I think she did ask a question about that. And my answer to that, if I recall it correctly, was that those are not the government's forecasts. And I went on to explain about, if you'd like me, I could read out the answer I gave her more generally, but I was talking in broad about the state of our economy, strength of the labour market, creation of jobs, delivering surplus budgets, getting inflation back to band.
Yeah,
so we had all
talking
of those.
points, yeah. Yep.
Well, they're not talking points, they're facts.
So I think what you said in the interview was that the IMF's figures don't identically match up. That's what you said.
Okay.
So,
well, I'll trust you on that.
So you're saying that 3.6 and 3.7 are materially different figures, are you?
Well, the RBA's figures aren't the government's figures, or aren't the Treasury's figures.
That's right.
Yeah.
But 3.6 and 3.7 is still pretty similar numbers, wouldn't you say?
Well, I wasn't asked that question.
Okay. Well, I think most people would look at that and say, well, the IMF...
If for example, if Patricia Karvelas had asked me, and she couldn't have because these only came out yesterday, if you look at the RBA's figures that will be released in a week and compare them to what the IMF is releasing overnight, what's your view on that? That would have been a different question, but that wasn't the one that I was asked.
Well, she was effectively asking you, well, she asked you, why does Australia have the second highest inflation in the world?
Yeah, and I explained for all the reasons that we've gone through this morning.
Yeah, but the IMF is giving the same...
later and lower here, and it's following a similar trajectory to that we're seeing around other like economies. Well, so that is the answer I gave, which is correct. And I also drew out that interest rates are lower here than many of those, and remain lower despite some of those central banks cutting interest rates. So interest rates peaked here lower than in other other countries. Our inflation challenge arrived later. It peaked lower. It's come down in a similar way to what we've been seeing around the world.
I think you'll find that with the RBA is predicting that inflation will be 3.7% year ending 2025. That is still going to be very high in any person's measure, wouldn't you say?
Sorry,
Well, the RBA is saying, Minister, that inflation is going to be 3.7% in the year ending 2025. So I think most people would say that's outside the band and represents a high rate of inflation.
Well, I wasn't talking to the RBA's forecast. I was talking to the information that the government had. The Treasury forecasts were included in the budget. They'll be updated in my EFO. And I was talking about how we inherited inflation with a 6 in front of it. It then peaked at 7.8% in the December quarter of 2022, and it has come down considerably. Okay. The last monthly inflation was at 2.1. The quarterly was at 2.8, I think, September quarter. So I don't think you can sit here and not acknowledge that those are the facts.
Are you disappointed that inflation is predicted to be 3.7% at the end of next year?
I am focused, as is the Treasurer, on making sure that we do whatever we can to get inflation back into band, which it has come in the nearest possible time, based on the things that are within our control, you know, and we've always taken responsibility for that, and we'll continue to do so.
It sounds like you are disappointed.
Well, I think all of us want to deal... I would be surprised if there was anyone looking at the economy who didn't want to see inflation get lower sooner. Like, seriously. But I think at the same time, people also want people to stay in jobs, and they want to earn good wages, and they want a whole range of other things as well. So this has always been, you know, a balance. I mean, the bank calls it the narrow path from time to time. This has always been a balance. We haven't had a negative quarter of growth. Like, growth is weak, but we haven't had a negative quarter of growth like other economies. We haven't seen the job losses either. I mean, these are good things.
I understand that, but my question was, are you disappointed that it's going to be 3.7%?
And I've answered that. I've answered it.
The answer is what? No or yes?
Well, I've answered it. If you didn't listen to it, that's your problem.
No, I did listen, but it wasn't clear to me what exactly the answer was.
Well, I've answered it.
Okay, well, assume that you are disappointed with that, because I think most people would be disappointed.
Assume away. Assume away.
You spend a long time in government and you haven't been able to.
A long time in government. You were 10 years in government.
Long enough.
And left a whole range of things not dealt with. We have done more in 2 years than you guys did in a decade.
Okay.
You're the highest inflation in the world, pretty much.
I'm at the point where I'll say that I'm looking for a discrete question and a discrete answer. So is there a question?
I think that's been a very...
I'll share the call. Anyone over here seeking the call?
Yes.
I'll go to Senator Hume.
Thank you, Chair. I want to ask some questions around the budget papers that show that Australia is in structural deficit. Can you...
Not as structural as the one we inherited.
I haven't even asked a question yet.
Well, I'm just making the point.
Just, Chair, I just want to...
You guys...
Oh, no, I have not even managed to ask.
Well... Don't make me the observation.
Not even asked a question.
Don't make me rule in favour of Senator Hume. Senator Hume should ask a question. Thanks, Senator Hume.
Could Treasury confirm the structural deficit increases this year in 2024-25 and next year 25-26?
I'm just seeking to confirm those figures, Senator, but I will say that the structural budget estimates, my colleague may be able to help at Fiscal Group. Depending where the line of questioning goes, our Fiscal Group colleagues may be better placed, but I'll ask Mr Johnson to speak to this.
Shane Johnson, First Assistant Secretary, Macroeconomic Analysis and Policy Division. So in the budget, the structural budget balance was revised up in 23-24, but then it's lower in most years over the forward estimates period compared to my EFO.
Right. What decisions have resulted from the deterioration of the structural deficit this year and next year? How do you pivot your sort of advice and positions?
So most of those changes, they largely reflect revisions to the underlying cash balance.
Sorry, can you say that again?
Most of them reflect the changes to the underlying cash balance.
Yes, and so and how do you? My question was, how do you then sort of pivot that? What decisions resulted from that?
So that'd be all the decisions taken at budget. So it reflects the underlying cash balance at budget.
I think, Senator, you're asking what is the response to the fact that the structural budget balance is... well, I think at a high level, it is the government's fiscal strategy is what... So the Secretary has made a number of speeches over the last year or two around the need to continue to improve the structural budget balance over time, and I think certainly the two areas he flagged in his opening statement today around the reforms to aged care and NDIS are critical areas to help tackle that structural budget balance over time, and he noted in his statement that we would like to see continued action in that space, but ultimately that's a matter for governments and the Parliament. But I think the two key responses to a deterioration in the structural budget balance are to continue to pursue a sound and sensible fiscal strategy overall, and to tackle longer-term structural spending challenges within the budget.
So the budget shows that it's worsening, yes?
No, let's just be clear. The deficits have been essentially halved that were forecast when we came to government. So that is a result of the decisions we've taken to reprioritise, to find savings. All of those decisions are reflected in that. But I'm trying to get the number from PFO, but essentially in this financial year and next financial year, we have halved the deficits. So let's be clear about that.
So, sorry, compared to 23-24, the structural budget deficit increases. It's a bigger deficit. Is that correct?
Compared to
what? In the forecasts. Compared to 23-24 budget, the structural deficits that we are now facing in 24-25 and next year 25-26 are worsening. It is a bigger structural deficit. Is that correct?
Yes, Senator. That's correct.
Thank you. Okay, so can you explain to me from Macro's perspective what the implications are in the long term of a worsening structural deficit?
Well, so that's a very big and broad question.
It's an
Senator.
economic question.
So in the longer term, if you maintain a structure, so it is possible for a government to maintain a structural budget deficit and still keep debt sustainability intact, provided those deficits are not too large, and depending on movements in interest rates and servicing costs of debt and revenue flows, particularly in our case from commodity prices. So it is possible to run an ongoing structural budget deficit and still maintain budget sustainability.
Yes, in fact, that's something that's anticipated my next question, which is very good. So obviously there have been budget surpluses that have been driven by cyclical factors. Those cyclical factors, can you just explain, for the sake of the committee, the difference between a budget surplus that's driven by cyclical factors versus a budget surplus that's driven by decisions of government?
So the common term that's used is automatic stabilisers. So there are automatic features of the budget, most commonly cited probably as unemployment benefits. So when the economy deteriorates and the unemployment rate rises, there's an automatic increase in expenditure through the welfare system, through the unemployment benefits.
So what was the contribution of the cyclical factors to the surpluses in 22-23 and the surpluses in 23-24?
You don't like our surpluses, is that right?
Well, the ones that are caused by cyclical factors
They're
as
better than
opposed
those
to
zero
decisions
ones
of government.
that you never delivered.
We didn't have the cyclical factors.
Oh,
right.
I see.
But the decisions of government
for
as
10
opposed
years.
to... Sorry, I really have asked Mr Yeoman a question here, and it's a pretty basic one. What's the contribution of cyclical factors to the surpluses in 22-23 and to the surplus in 23-24?
So I think on the chart that's in the budget, I think the cyclical factors were contributing just under 1% of GDP, and then the just under 0.5% of GDP, and then the other structural and temporary factors are taking off around just over 1% of GDP. Overall, though, over the forward estimates period, the structural budget balance is about 0.7% of GDP, which is consistent with what it was at MyEFO as well.
So that's the percentage of GDP.
Yep.
What is their contribution to the surpluses? Dollar figure.
Sorry, what do you mean by
percentage? There were two surpluses. They have a dollar
evidence
figure
that
attached
says
to them.
government decision making had nothing to do with the surpluses.
And I'm getting
they're not good enough surpluses. Is that right, Senator Hume?
Well, if they're not caused by decisions that you've taken, Minister, they're not good enough.
They have been by decisions we've taken.
So you were the one that caused bracket
It's
creep.
our budget full of all of the decisions that we have taken.
You were the one that caused high commodity prices.
You are engaging in a conversation as well, Senator Hume. Did you want to...
I did try not to.
I mean, if I want to
interrupt her.
Did you want to rephrase your question to the official, or is the official okay to answer?
Well,
what would have been the
being asked a
deficits if
political
there weren't
question,
cyclical
so it's unfair.
factors involved?
So, Senator, the chart, which is on page 119 of the budget papers, which reflects these figures, it's quite difficult to read the specific point estimates off the chart here, and I don't have the table behind it in front of me, so I won't speak to that. I think what I would say is something we've discussed before as a committee is, so there's no doubt that cyclical factors, particularly high commodity prices over recent years, have helped contribute to the improved budget position of the government overall. But there have been active choices made by the government to bank the majority of that revenue under their fiscal strategy. If that had not been the case, then the blue line on this chart would have been heavily affected, and you would see larger spending as a result of government decisions. So there is no doubt that the cyclical factors, a strong economy, low unemployment and high commodity prices over the last year or two have contributed materially to the overall improvement in the budget position, which this chart shows. But I would say that the government has made choices that have allowed those cyclical factors to flow to the bottom line rather than flowing into higher spending. And if that had not been the case, that would be a very different picture in terms of the overall deficit.
And what's the plan for when the cyclical factors end?
Excuse me, sorry, I missed that, Senator.
What's the plan for when the cyclical factors end?
Well, as I said, there is, I think, a need, we would say as Treasury, that there is a need for continued effort to tackle some of the longer term structural challenges in the budget, which the government has.
And on aged care. All of that is an important part of the budget repair story.
So,
I would also, if I may, just to complete the picture, Senator, as you know very well, we also do take very conservative estimates around commodity prices in our budget. We have a very conservative budget approach, which I think is right and proper, but has drawn criticism at times from others in the markets. So generally we think there is upside. So these structural positions reflect very low commodity prices. If those commodity prices are sustained at higher rates, then there is an improvement in that deficit position over time. But notwithstanding that, there is obviously a need to continue to tackle structural spending challenges, which the government has a program to do.
So sorry, you were saying that the forecast low forecast of commodity prices.
Because we forecast in the budget in the medium term that commodity prices will return to their long-run anchor rates, which we take a very conservative view of those, so that we're not baking in higher commodity prices into our budget estimates. Because of that, that means that there is traditionally a potential upside in our estimates, which overstates the extent of the structural budget deficit here. But we've been very clear as Treasury that there are structural budget challenges that need to be tackled going forward.
So I'll share the call, and we can come back to you unless you just want to really conclude this line of questions.
I think I've asked this before, and I'm not entirely sure I'm yet to be clear on the answer. Do you calculate out the revenue effect of high commodity prices separately, and the revenue of higher commodity prices above the forecast rate, and the revenue effect of bracket creep separately, and then add those together and say, well, that's the amount of money that has come purely from cyclical factors as opposed to government decisions?
So I think the answer is no. We don't do that. What we try and do is we forecast the key economic variables, so we look at what incomes are doing in the economy. We look at what corporate profits are doing in the economy. We pass that to our revenue group colleagues, who then make assessments about the different revenue heads. They don't differentiate in that way. Obviously, the assumptions we make about future path of commodity prices, so particularly iron ore prices, has a huge bearing on company profits in the mining sector, and so that's a close relationship. But no, we don't break it down that way in the way we construct them.
So if I wanted to find out just how much revenue came from bracket creep, who would I ask?
Our revenue group colleagues.
Revenue group.
Okay. So I know Senator Roberts has been trying to find a time to ask questions of International and Foreign Investment Group, and you're here for that, aren't you, Senator Roberts?
Yes, that's
so,
right.
And I know Senator McKim has questions, and there'll be more questions here, and we're due to release this group soon. So I'll go to you, Senator Roberts.
Thank you. Thank you for appearing today. Now, as a crossbench senator, I have to get across many issues. I'm not looking for violins to come out and play tear-jerking songs, but we have to skate across many issues. We can't get in deeply to some of those issues. So it's easy to fool us, but we've got constituents watching.
No one's trying to fool you, Senator Roberts.
I didn't accuse you of doing that.
I know, but that's not the approach we bring.
So what I've found over the last few years is asking the ATO this question and asking FIRB this question. I get conflicting answers, and certainly not a complete answer. We've got a Freedom of Information request we put in looking for real property transfer reports held by the Australian Taxation Office, and simply requested a count of how many real property transfer report records for residential property reported to the ATO are positively confirmed as Australian for each financial year. And what we got back was, based on these searches, I've decided to refuse access to your Freedom of Information request under Section 24A on the basis that the documents do not exist. There's no data, no literal count of real property transfer reports. Noting the extensive, this is another quote, noting the extensive consultations undertaken with our business areas, I'm satisfied that the documents are neither available in a discrete document format, nor is data held by the ATO stored in such a way where officers could be capable of retrieving, collating and producing the information in a discrete form. So how do they manage this? Because you're relying on the ATO, as I understand it. Taking into account the fact that, another quote, that an entirely new process of data extraction and validation would be required to create a document to satisfy your request, and the resourcing involved in such a process, my view is this would substantially and unreasonably divert the resources of the ATO from its core operations, and as such a document has not been created to satisfy your request. So shouldn't FIRB just do it? Because it looks like no one's doing it. He's just thinking the other's doing it.
Senator Chris Tinning, Acting Deputy Secretary of the International Foreign Investment Group. So, as you note, the ATO are the regulator when it comes to foreign investment settings around residential real estate. We work closely with them as a co-regulator for non-residential real estate foreign investment issues. The data we have is that foreign purchases of established residential property in 22-23 were 4,463 resident homes, which represents less than 1% of total purchases in that year.
Thank you. That doesn't tag with New South Wales data. New South Wales is up to 15%, 14.9 I think.
Well, we've got confidence in the ATO data, which collects very granular information about residential real estate purchases.
So if you wish to provide us with that information from New South Wales, we're happy to follow up and see what.
Okay, could we get a briefing, maybe actually thrash it out? Not thrash it out, but discuss it.
I'll check with the Treasurer's office, facilitate a briefing.
Thank you. So this is what I'd imagine Australia would do to catch foreigners who are buying property without permission. Get a list of all the title deeds from sales, get the details of the sellers and the purchasers. The ATO does that. They automatically get 2.4 million names a year. Once you've got the names, try and automatically match them to the data you've already got to confirm how many of the 2.4 million are actually Australian. Okay? Start working through the leftover list of people you can automatically confirm are Australian to find the foreigners. That's not what we do for an enforcement program, apparently. What do you do for an enforcement program?
Well, as mentioned, the ATO do compliance, and they
don't have the list.
I think the ATO who are appearing later today will be very well placed to talk in detail about how they promote compliance around our foreign investment settings when it comes to residential real estate.
So you rely on the ATO for the...
Correct, they are the regulator.
Okay. So you can't explain the discrepancy between the reports from New South Wales compared with the federal?
The ATO will be best placed to talk to that.
Okay. So I understand that the ATO doesn't keep account of how many of the 2.4 million records are confirmed as Australians, because they've just admitted they don't in FOI.
Yeah, as mentioned, we have clear data around foreign purchases of...
Where do you get your data from?
From the ATO.
From the ATO. So this is what I mean. We've been going around and round in circles for the last couple of years. State government department data is showing that foreign purchases are happening at least double the number of approvals you're making in New South Wales. ATO again?
So, Senator, we're in a difficult position because we set the framework, and then we rely on the ATO to enforce compliance and to report the data. So we have confidence that they are reporting that data in good faith. If there are, and I have to defer to the ATO on their FOI requests. I mean, if the information required may be available, but it might be, given what you read out, require such an investment to pull it together that it's not viable for the ATO. But what you're essentially driving at is that there are differences in the outcomes of the different compliance exercises being done by the ATO and the New South Wales government, and I think that is something that those two institutions would be better placed to dig in and understand what those differences are.
And without this being a reflection on you, Mr. Yeoman, we've got Queensland, in Queensland, one of the richest states potentially in the world. We've got thousands of people out of homes. Good working families who go to work, come home, sleep in the car with their kids, if their kids are still there. And we've got a shortage of housing in this country. We've got record immigration, which is double the previous record. And we've got people without houses. And we want to stop foreigners buying houses until Australians can get houses. That's what's driving me.
Yeah, no,
I'm not trying to embarrass FIRB or ATO or anyone like that. I just want some honest answers.
Yeah, I very much understand that, Senator. And we've been clear on the record, and the Secretary was clear on the record, that from our perspective, when we look at the overall housing challenges in Australia now, which are acute in many places, there are... Primarily, we think that improving the supply of housing into the market is the most meaningful impact that can be, or policy measure that can be made with the largest impact. We have not been as convinced that foreign ownership is a significant factor driving challenges in the housing market that we currently see based on the data that we have available. If there are other sources of data in the states that are conflicting with the information the ATO are providing, then we will seek to understand that. But it's primarily, that is a matter for the ATO and those state agencies to work through, but we are open to helping to understand those challenges.
Thank you, and I thank the Minister for undertaking to get a briefing from the Treasury.
Yeah.
We'll come with our data. Thank you. Thank you, Chair.
Thank you, Senator Roberts. Senator McKim.
All right, thank you. I've got some questions around the MOU between the Japanese state-owned investment bank, the Japanese Bank of International Cooperation, and the Northern Territory government. It's been announced that they've signed an MOU to further strengthen cooperation between our two jurisdictions on financing, energy and infrastructure projects. My first question is, in regards to that MOU, has FIRB or the Foreign Investment Division of Treasury had any engagement with JBIC on those issues?
Not to my knowledge, Senator.
All right. Is Treasury aware, and Mr Tinning, you sit on the board of FIRB, don't you?
I do.
Yeah. So is Treasury or FIRB aware of what projects JBIC is intending to invest in?
Senator, we look at cases that come before us submitted under the Foreign Investment Framework. So where JBIC is a party to a application that is submitted, then we have visibility of that. We do not have broader visibility of all JBIC engagement.
So you've got a Japanese state-owned investment bank signing an MOU with the Northern Territory government to finance energy and infrastructure projects in the Northern Territory, and you're just not interested in that, or it hasn't come across your desk?
We would
I have to say I find that extraordinary.
We would see it when the specific application comes in. So in other words, if there were applications supported under that MOU or specific projects supported under the MOU.
Remember what happened when the Port of Darwin was leased out? Do we recall that?
Yes, Senator, our framework is around, it's got a certain role, an important role within government, but it's not the only regulatory framework, it's not the only policy framework when it comes to our foreign investment settings. So broader issues such as MOUs would tend to be dealt with by DFAT or other agencies across government.
So just to be clear, the department, neither the department nor FIRB is aware of the MOU signed between the Northern Territory government and JBIC, is that correct?
I am not aware of it.
You're not aware
Senator.
of that? And could you take on notice, please, whether that's been brought to the attention of the department through any other? Would you take that on notice?
Yeah, we can take that on notice.
Are you able to take on notice the same question in regards to FIRB? Would that be appropriate to ask you to do that in this setting?
In regards to whether FIRB is aware?
Well, whether FIRB's aware, yeah.
Of the MOU?
Yeah.
I can confidently say, well, I can check and confirm, but I'm confident that FIRB as an institution has not been briefed on that.
All right, thank you. And could you also then take on notice whether JBIC has met with any part of the department or FIRB in regards to this MOU? And I'm specific, sorry, could you take that on notice?
I can confirm, but I'm confident JBIC have not met with FIRB.
All right, I mean, I guess like you've got a proposal, a proposed project at Middle Arm that the Australian government has invested taxpayer money into, 1.5 billion approximately. I'm interested in knowing whether JBIC intends to invest in Middle Arm and whether that would be the limit of their investment, or whether their investment might include things like Beetaloo or gas pipelines that might be part of the gas supply chain for Middle Arm. But you can't shed any light onto that, Mr Tinning?
Our foreign investment settings are clear in the sense that if there was a foreign government investor, such as JBIC, investing in a specific project that would require foreign investment approval. So we would, that would go through the FIRB process at the time of a specific investment rather than at the time of an MOU.
And if I could add, Senator, as Mr Tinning said earlier, I suspect, I can't be sure, but I strongly suspect that our colleagues in the Department of Industry and Resources and also our colleagues in the Foreign Affairs Department are probably more familiar with the MOU itself than perhaps Treasury.
Thanks. Thanks, Mr Tinning and Mr Yeoman. That's helpful. I might just move to another topic, if that's okay. ATO data shows that in the 2023-24 financial year, over 22,000 people removed over $500 million from their superannuation accounts to pay for dental treatment. Now, just to be clear, in 2018-19, that was $66 million. That's a growth rate of 693% over 6 years, or if you want to annualise that, it's about 140% annual growth in people raiding their superannuation funds to pay for dental treatment. The government's introduced a bill to legislate the objective of superannuation, and that is to preserve savings to deliver income for a dignified retirement alongside government support in an equitable and sustainable way. How does using super to pay for your dental treatment align with the legislated objective of super to preserve savings for a dignified retirement? Like, how does that align?
Sorry, Senator, but matters of superannuation are dealt with by our colleagues in Revenue and Markets Group later today, so those tests...
I guess they'll know I'm coming then, Mr Yeoman. But Minister, I just want to take the chance to ask you this while you're here and while I'm on the topic. Why won't you just put dental into Medicare? And I mean, would you prefer to see people taking dental out of their super accounts, or would you actually prefer to see dental into Medicare? I mean, that's an extraordinary, like $500 million removed out of the superannuation system just so people can pay to get their teeth fixed.
Yeah. Well, there are exemptions, as you know, a process to go through for people to use their super for certain, under certain requirements. I have seen the reports around the increasing use of that, and, I think, I've no doubt the Minister responsible will be looking at that, as you would expect. This first part of your question about putting dental into Medicare, we're doing everything we can to strengthen Medicare, but, we have to make a range of choices about, when your budget's under such pressure, what additional services we can afford. And so that is a constant challenge before the ERC. I mean, it's easy to be in the greens, to be fair, and I know you have a lot of ideas, but you never have to work out how to pay for them.
Well, in fact,
deliver them.
All of our ideas are fully funded. All of our policies are fully funded.
Yeah.
Minister, and that'll be very clear to the Australian people for the next election. But look, I'll come back in. Did you say revenue, Mr. Yeomans?
Revenue, and it's moved.
All right, come back there. I'll come back. Yeah, I'll come back there. I wanted to ask though about the RBA. So, different topic. The RBA has flagged concerns with the superannuation performance test because it's forcing super funds to herd together. Is it?
I suspect, Senator, sorry to cut you off, I suspect it'll be the same answer in that I'm happy to take the question now so they've got notice if you'd like, but matters of broadly financial stability and superannuation are better sent to Markets Group and Revenue Group.
Markets, did you say?
So if it's a financial stability question where they engage heavily with the Reserve Bank and the Council for Financial Regulators, that's Markets Group. If it's superannuation specifically and the tests there, it's Revenue Group.
All right, what about the key metrics for the performance test being...
Revenue Group.
What about people retiring with massive mortgages? Can we talk about that here?
If you'd like, we can try.
Well, it sounds pretty macro to me, so I'll give it a go. Sure. There's a large increase in mortgage sizes in Australia. It's obviously driven by increase in house prices. And there's data from the census showing the number of Australians that are aged 55 to 64, so they're on the cusp of retirement, who own their own homes outright, has fallen like dramatically in the last couple of decades. So it's down from 64% in 2000 down to 36% in 2020. Like, should we be worried about the large number of people who are going to exit the workforce still holding substantial mortgages and still not having paid off their homes, and they're basically going to cash out their super to pay off their mortgage, and then they'll be relying on the aged pension?
It's an interesting question, Senator, and it's not an area that I think I or my colleagues have focused heavily on recently, so we haven't done detailed work on this that I could comment on. I think there are a range of factors as to why that's occurring. I imagine some of them are choices by individuals to delay home purchase, to delay other aspects of their sort of life choices till later in life, but in many cases it's also a direct result of some of the challenges we've talked about today around the housing market and housing affordability overall, which we've all discussed and would like to see addressed over time. But to the extent people are forced to retire with larger mortgages, and to the extent that undermines their overall income in retirement, then yes, that's something that we would take an interest in. But I'll confess it's not an area, I haven't seen those statistics specifically, and it's not an area that we're focused heavily on in macro group. I can flag it for my colleagues and see if they've thought more about the broader systemic impacts on the superannuation system and what it means for adequacy. I can test whether they've thought about that.
All right, thanks.
Last question.
Thank you, Chair, and thanks, Mr. Yeoman. I appreciate that. And I guess if you could also take this one on notice, if it is the case that there is going to be a significant increase in the number of people who are going to cash out of their super and basically use that to pay off their homes, and then their super will be less sufficient to offer them a dignified retirement, and they may be more reliant on the aged pension. That will mean that the housing bubble that we've seen, and we can talk about why that housing bubble has been in place, but I'd place a significant portion of the responsibility of that with the RBA and their overstimulation in the monetary policy in the early pandemic period. But leave that aside, won't the housing bubble potentially be responsible not just for undermining the policy objective of super, which is to provide people with a dignified requirement, but also undermining the government's balance sheet in terms of significant increase in demand for the age pension?
I think there's a lot of steps. There's a lot of steps in that, Senator, that you've flagged. Certainly, as we've discussed many times here, including today, housing affordability remains a critical issue, and I think there's a range of factors and ways in which that's going to impact the economy and the budget, if not addressed over time. I haven't, as I said, I can't speak to the magnitudes of those impacts. So your logic flow, at a high level, I wouldn't necessarily contest, but the magnitudes of each of those steps and which factors are more significant at each stage, I can't speak to that with any depth.
All right, maybe you could just take on notice and see whether there's anything you could come back to.
I'm happy to talk to our colleagues and see what they have.
Okay, thank you. We're due to break in about half an hour, and a number of senators have questions, so let's see how many we can get through fairly quickly. So we're going to you, Senator Smith.
Thank you very much. I just want to try and turn to some questions about the care economy. The RBA, in its most recent statement of monetary policy, calculated that they call it the non-market labour market,
yes,
as contributing, I think, to 3/4 of employment growth over the last year. Is that a calculation that the Treasury supports or agrees with?
Thank you, Senator. Inika Redmond, Assistant Secretary of the Macroeconomy Branch. So I haven't read that exact sentence of the Statement of Monetary Policy just released, but that rings true to me in terms of Treasury's analysis of recent employment growth and the extent to which that's been in the non-market sector, about 3 in 4 jobs. You'll also see other market economists and bank notes speak to about 70% of that new jobs growth. Yep.
On notice, could you provide me with some of those third-party sources that that reinforce that RBA figure or RBA view? So the Treasury does conduct its own analysis around non-market, the proportionality of non-market factors in the broader market.
So we don't forecast on that basis. We forecast at an aggregate level. We do, of course, try and understand what's happening with different sectors in the economy, and certainly the private sector is adjusting in a somewhat different way to parts of the non-market sector. And we've spoken earlier about the expansion of demand-driven programs that's largely accounting for that. So when the detailed labour force is released following the aggregate labour force, we look at that industry-level data, detecting trends, but we don't forecast on that basis.
Can you give the committee a sense of what trends are that the Treasury is currently seeing?
Mm-hmm. So just broadly describing in social assistance in that industry, in education, in health services, we're seeing the majority of that jobs growth occurring. In contrast, in more cyclical responsive areas of the economy to the household sector and the interest rates, we're seeing quite a softening of jobs growth in hospitality, retail sectors, etc.
Do you agree with the Treasury's statement that non-market parts of the economy tend to be less cyclical and often more aligned with government spending, which is the RBA statement? I'll read the RBA statement from yesterday.
I wouldn't disagree with that statement. Sorry? I wouldn't disagree with that statement in the broad.
Can you read it out? Which area are you reading from?
Page 60 of the RBA statement on
Page what?
Page 60.
60.
Around 3/4 of employment growth over the past year was in the non-market parts of the economy, such as health and social care, where labour demand trends to be less cyclical and often more aligned with government spending. As measured, productivity growth in these areas is lower than other parts of the economy. This was a small drag on overall productivity growth.
So, Senator, if I could just add, I think I would agree with that characterisation, and it's pretty common when you tend to get changes in interest rates or changes in the economic cycle. The areas that are most sensitive to that tend to be household consumption, housing market. They tend to fluctuate quite significantly, and you can see quite large cycles in that. Whereas, as you'd imagine, people still need to go to the doctor, people still need to see health professionals, education services, those things stay more stable. So there is an adjustment in those sectors of the economy, typically when the economy tightens or expands, or when costs increase or decrease. But it's pretty common in cycles that you see the public sector exposed.
You don't expect this to be a structural change? You're expecting this to be sort of episodic?
I think it's been well documented that we've seen a very long-term shift. This is not new. This has been a long-term shift towards increasing spending on care economy, on government services, and that's partly the ageing of the population, and as people move into older age, they require more of those services. And it's also a shift in preferences amongst households to an extent. So we're seeing this longer-term shift towards those areas of the economy, which, as you say, tend to have lower measured levels of productivity, although, as the Secretary said, we are quite cautious about the actual productivity in those sectors versus the measured productivity in those sectors. But you're seeing that long-term trend. And then around that, you get the cycle. And it's true that at the moment, while we're seeing interest rates and inflation moving, you would tend to see less of a cycle in government-exposed areas of the economy than you would private. And that's certainly what we're seeing today.
So this long-term trend, are you able to provide me with some information about the peaks and troughs in that long-term trend? Or is it rising equally and consistently?
So the intergenerational report, probably the best source is the intergenerational report. It has flagged both historical and expected future increases in those areas of the economy, particularly around care economy. So I would say there's been a steady long-term increase in those areas of the economy as a share. Separate to that, what we're currently seeing is because of...
But Mr. Yeoman, I'm particularly interested to know at what points is that experience accelerating or de-accelerating in terms of that long-term projection? Are we looking at an equal and consistent trend, or are we looking at peaks and troughs?
So it's primarily linked to, without it in front of me, it's primarily linked to the ageing of the population. So when you look at the IGR, I don't have the specific figures in front of me, but you see a steady increase and then an acceleration as the population ages, as the baby boomers cohort moves into older age and requires more services, more aged care, more health services. That's driving that trend. So there is a sort of steady increase which ramps up over time in the longer term trend.
Fair point. Does the Treasury analyse private sector productivity versus government-funded productivity or non-private sector productivity?
What have you got against care economy workers?
Nothing. I'd consider myself
well, you just seem to be.
Care
I've heard
sort of person,
the opposition sort of passing judgment on non-market jobs as though that they're less than other jobs.
No. That might be.
Yes, I have heard that. It might not have been you. It was definitely Senator Cash.
Senator Gallagher, in understanding
Senator Cash had a view about
labour
it.
market is changing in this country.
Okay.
I am interested
I'll give you the benefit of the doubt, but it just seems to be in line with some of the other...
You won't be proven wrong. You won't be proven wrong. Thank you for
some of the other
benefit of
judgments
the
that are being
doubt.
made about non-market jobs.
I'll ask my colleagues to speak to this, Senator, but I would just note for the record, all of this data that you refer to is published by the ABS. The ABS does publish sector breakdowns.
So I do like to sort of triangulate.
Yeah, but it's all a matter of public record, and then we look at the different trends across those sectors, and I'll ask my colleagues if they'd like to add.
So we do try and take a look at market sector and non-market sector productivity. I think, like the Secretary said in his opening address, there are measurement issues in the non-market sector, and so what we don't actually see is some of the things like quality improvements coming through. So there might be quality improvements in the care sector. In the health sector, there is some interesting research by the Productivity Commission. I think around 12 months ago, they did a study around service sector productivity and highlighted some of the challenges around measurement and why productivity in that sector might be in the more face-to-face part of the service sector, why it might be lower. They've also done some more recent research. I think they're on again maybe later tonight, but they've also done some research looking at the health sector in particular, and they found that in the health sector, the productivity growth was actually quite strong in Australia. Well, productivity was quite high relative to other countries. From memory, I think that we're ranked third out of the 28 countries, but that takes into account quality improvements, which doesn't get picked up in the official statistics. So it's a really hard one to measure. I think the Secretary mentioned that this morning.
Okay, so hard one to measure, but one that you are measuring?
Well, we don't measure. The ABS do the statistics, and they do it their a particular way. What I said is that it's very difficult to, and they don't pick up quality improvements. I think the Secretary mentioned that this morning. So those kind of things aren't getting picked up. The PC did have a look at that. I think the report might have been earlier this year, just focusing on the health sector. And when they looked at quality improvements, they showed that I think from memory was around 3% growth in productivity since maybe 2010, 2011. And then in addition that Australia's productivity relative to, I think it might have been 28 advanced economies from memory. I think we were ranked number 3.
So labour productivity in the non-market sector.
So it's not the non-market. This is just in that was just the health sector. They just looked at the health sector in particular.
I'm talking about the non-market sector more broadly. Does Treasury have any observations about labour productivity in the non-market sector?
So like I said, in the
noting the qualifications that you've.
So in the non-market sector, when we look at observed productivity, measured productivity, the overall for services. Services sector productivity, certain elements of the service sector have productivity just as high as other areas of the economy, but in the non-market component, where there are difficulties with measuring, so we're looking at health, NDS, and other things, measured productivity is normally lower than the rest of the economy.
Right. So when we think about how Treasury forecasts productivity improvements in the economy, how is that impacted by the growth of the non-market sector does it introduce a higher level of risk or variability in those figures?
So I wouldn't say it creates risk or variability, but what we do is we look at trends and what's happening in productivity, and that informs our longer-term assumption for productivity. And I think, as mentioned, I'm not sure if it was Luke or the Secretary this morning mentioned that we had revised down the long-term productivity assumption at in the IGR.
So Senator, in that long-term space, there has been a productivity slowdown noted across the world, and Australia's been part of that. There are many different explanations for why that has been the case and which are the stronger factors driving it. One of the things that is postulated, and I think we would say is certainly an effect, how big an effect is hard to measure, but an effect is that the steady increase in services economy and the care economy, broadly characterised, which tends to have average lower productivity than some other sectors of the economy, is one of the reasons why there's been a structural decline over the longer term in aggregate productivity. So one of the factors, when we did reduce our aggregate long-term productivity assumption from 1.5 to 1.2, that was implicitly built into that decision.
Great, thank you. Thanks very much.
Senator Bragg.
Thanks very much. Am I able to ask you questions about Psyquantum?
Depends on the nature of the questions. If it's about the process itself, that's our fiscal group colleagues. Depends on the nature of the question, but mostly fiscal group colleagues, I suspect.
Maybe I should defer those to fiscal group if that's going to be helpful. Can I just ask you about another matter then? Last time you were here, Mr. Yeaman, I asked you about the nexus between migration and housing. I think you said at the time that you hadn't done any particular modelling on the impact of migration and housing. Have you now done some modelling on that?
No, I don't have any new information there. I'll just repeat what we've said previously. We look at the relationship, we look at the impacts, but we have not done an exercise of modelling the direct channels, no.
But isn't there a pretty strong nexus between the amount of people coming into the country and then the cost and availability of housing?
So we have certainly, as the Secretary said earlier today, and as we've acknowledged I think many times, there is no doubt that when you get large increases in migration, our view is that for the economy in the medium term, that essentially washes out through the system because you get an increase in labour supply and the productive capacity of the economy, but you also get an increase in demand for services and goods, and housing is one of those. And then to the extent that is an unexpected spike in migration, that definitely puts short-term pressure on the housing market because of the constraints in the market that we've discussed around supply. So we do consider that in our forecasts. We think about that issue and we factor it into our forecasts. But we haven't done a specific modelling exercise.
Because we have had the largest increase in per capita migration, haven't we, since the 50s?
I believe that's correct. Yes,
yeah.
Certainly we've had a significant...
Might it make sense to look at this and whether there is the potential to do some more modelling and analysis on the impact of a very large migration program, which the government has run, the largest since the 1950s, on the impact of Australians being able to buy a house in their own country?
I mean, two points. One, as you know well, Senator, the increase that we've seen followed a period where the borders were closed, and so there is a sort of net issue here across the whole period of COVID, which needs to be kept in mind. But certainly we have seen a very large increase over the past 2 years, and we have been open and on the record as saying that that is adding pressure to the housing market, and we track a whole range of housing market indicators. When you look at vacancy rates across the housing market, house prices, construction costs, those all implicitly embody the impact of higher migration. So we look very closely at that, but it's an area we'll continue to look closely at.
Well, let me ask you a dumb question then. What about, do you look at the housing construction, how many houses are built?
Yes.
Okay. And over the last few years, we're building more or fewer houses?
Than when?
5, 6 years ago.
So because of the increase in interest rates and some of the constraints in the market, approval and completion rates have been picking up more recently, I believe, but are still at modest levels by historical standards.
So, for example, if we were to look at the figures from, say, 2018, which is 6 years ago, are we building more or fewer houses than then?
I'll ask if my colleague has those figures to hand.
We don't have the numbers in terms of, we don't have it in terms of numbers, in terms of completions.
You don't do that sort of modelling?
So Housing Division will look at that. Would typically look at that from their perspective. What we're looking at is the amount of activity in the housing sector, so the amount of building activity that goes on.
I'll just check, my colleague may be able to speak to the cycle.
Patrick Darcy, Assistant Secretary for International and Domestic Demand and Trade Branch. So, Senator, yes, there is, as you know, data on completions. I just have a chart that I'm drawing from, so I won't have specific numbers. But completions have fallen from the peak in 2018 of a bit over 200,000, and they're sort of running sort of a bit more around 170 at this point. And
so we're heading in the wrong direction?
Well, we've come off, 2018 was a historically high level, and so we're back to a sort of arguably normal level for completions.
We're building fewer houses, but we've got more people.
Yes, the growth rate in the number of completions is lower than in 2018, that's correct.
Yeah. And over 1 million people have come into the country in the last couple of years.
Yeah, well,
we're building fewer houses.
As Deputy Secretary Yeaman said, there's been a fluctuation in the number of migration people coming in, so that fell and then picked up.
We do
very
expect,
sharply.
Senator, we in our forecast in the budget, and this remains our view, we still expect to see a fairly substantial pickup in construction activity over the next 2 years in response to the pressure in the housing market today. And we have been open about the fact that we see constraints in the market currently, particularly around the supply of housing and labour skills and materials in the sector, which are holding back construction. But also when interest rates rise, you tend to see a drop-off in housing demand from other parts of the system, and that's flowing through into the cycle. But we expect to see a pick-up over the next 2 years.
Thanks.
Thank you. Senator Rennick just wanted 5 minutes, so Senator Rennick.
Yeah, hi guys, how you going? Look, my question's in regards to foreign investment in particular, but I just want to touch on some comments made earlier today by Stephen Kennedy in regards to tariffs and the way, obviously there's this view that we shouldn't have tariffs, but the fact of the matter is we do have tariffs in this country. We have reverse tariffs in the form of our taxation system, whereby our withholding tax rates are much lower than the onshore tax rate. And then we also have another tariff in the form of capital investment, whereby 128F public offer test basically says that if Australian companies or banks issue bonds in the primary market, that those people who issue those bonds don't have to pay withholding tax. The foreign banks lend into Australia and they don't pay any tax on the interest income that we pay offshore. Surely we should, if we want to get serious about retaining our own earnings in this country, shouldn't we think about abolishing 128F and stop giving the foreign banks a tax break so that we retain our own capital here and reduce the reliance on foreign debt?
I think that question, sorry Senator, but that question goes a bit beyond the scope of macro group. I can ask my colleagues later in the day if they have views on that.
Well, I guess it goes to, the reason why I'm asking it, this goes to capital flows, right, and foreign investment, because effectively if you've got a higher onshore tax rate, okay, you're not going to receive as much money for your interest. Now, I know through my work experience that we would go offshore. I'd work for Australian companies that go offshore and tap foreign debt markets instead of tapping the debt markets here, because we don't have a debt market in this country, because we have a tax act that literally gives a tax break to foreign investors. So I would have thought this is something that the International and Foreign Investment Group should look at. And I'll use another example of whereby, I've quoted this before, a particular multinational in 2022 made $1.4 billion in revenue, shifted $1 billion of that offshore to Ireland. So withholding tax rate on royalties to Ireland of 10 cents, company tax rate of 12.5 cents in Ireland, 10 plus 12.5 is 22.5. That's less than the 30 cent onshore tax rate here. So there's a 7.5 cent arbitrage on that $1 billion shifted offshore, which gives a $75 million profit just for the sake of doing a couple of journal entries. Isn't this something that we need to be looking at and working with the way that my understanding of his tax settings are actually made or set by Treasury in the first instance. I mean, the ATO has to enforce them, and administer those tax rates. But Treasury, this is something that Treasury should be looking at, because we do have structural imbalances in this economy that have been built up over the last 4 decades of, so-called, we have to attract foreign debt instead of actually promoting domestic investment and retaining those earnings from that investment.
So we as Treasury are concerned with the overall settings and how that affects investment flows in and out of the country, and what it means for domestic versus international balance, and what it means for our ability to service the investments in the country that we want to see to support future economic growth. So we are certainly concerned with that. My colleagues in Revenue Group, I'll flag that question with them, because they think about this from a range of perspectives, partly international competitiveness, which is one of the areas you've flagged. They look at it from an integrity perspective and issues around arbitrage that you described.
Yeah.
And obviously they also have to consider things like the overall fiscal sustainability and other issues of equity and consistency with other parts of the broader tax and financial system. So I'm not set up to talk in detail about the measures you've described and the impact they're having. I'll ask our colleagues if they have anything they wish to add. But we are certainly concerned about the integrity of the tax system and how that affects investment flows.
Okay, we've got time for one more?
Last question.
Okay, thanks, Chair. So the other thing I want to discuss, and you may find this interesting, Minister, is that in the 1937 Banking Royal Commission, one of the findings was that the central bank should always control the volume of credit in the system. Now, one of the authors of that Royal Commission was actually Ben Chiefeley. Now, that was actually overturned in 1985, where another Labor Prime Minister, well, Treasurer at the time, but later became Prime Minister, Paul Keating, lifted all capital controls. So we've had inflation, like we had foreign debt held by the 4 major banks inflate from $8 billion to $800 billion, which has mainly been lent against housing, which has inflated house prices, not relative to income, well, relative to incomes.
Question.
So my question is, why don't we look at, instead of using other central banks to control the volume of credit, which is what Paul Keating effectively did in 1985, and he took his hands off the capital controls, why doesn't Treasury and the federal government take responsibility for controlling the volume of credit, which was a recommendation back in 1937, and served us very well in terms of building infrastructure and our home ownership?
Look, that's a very, very large and complex question, Senator. What I would say
can I just say it's a very important one, and it goes to the nub of why we've had a decline.
What I would say is that I think we have the reforms that have been made to our financial system, central bank, and capital markets over the last 20 to 30 years, I think fundamentally have served Australia well and reflect changes here, but also changes in the broader global economy. We've recently had a review of our central bank. I don't see a current case to change personally, but I note your comment.
Well, we've got a, can I just finish on one comment? We've got a decline in the level of home ownership in this country from young people.
You just said it's just a comment, so I'll go to, so thank you. So I'll go to Senator Hume. We just want to do a bit of housekeeping, I think, just to see where the questions need to be put first.
We still have some questions remaining on a couple of issues, but I want to double check that you are the right people to direct those questions to. One is on Scope 3 emissions. That's coming from me.
Yes, we have people here for that.
Yes, okay, terrific. And another one that I have will be on Future Made in Australia. Is this the right group for that? Okay, fantastic, yes. We will keep going if we can then, Chair.
So
but we'll start with, I think, Senator Smith. We've kicked off Sci Quantum to another group, but Senator Smith's got some questions.
Alrighty, and then I might just have a chat to you about time management. Yep. So, Senator Smith.
Thank you very much, Chair. Is the single front door open?
I'll just ask the relevant colleagues to come to the table.
G. Karunaratne, Assistant Secretary for the Front Door Task Force. The front door is not open yet. The government has just finished consultation on the high-level design of the front door, and I'll leave it to the government to announce decisions.
So is it still a single front door? Is it sort of, or is it like French windows now?
No, well, I can comment on
I thought it was called a single front door, but I heard that it's a front door task force or a front door implementation group. So is it still a single door?
Sure. So the task force itself isn't the front door. It's charged with designing, providing advice on the design of the front door to the government. The front door is intended to help investors with projects navigate across government approval processes, connect with different government departments. It's not trying to create a funnel in which all interactions with governments, government agencies, specialist investment vehicles need to be funneled through. The proponents can still engage with other agencies and SIVs, specialist investment vehicles, as they always have. This is providing a way, Senator, for proponents to be able to understand how to navigate across the system.
How many investment proposals has the front door received to date?
Well, as I said, the front door has not commenced. We're a task force within the Treasury. Yeah.
Well, Senator Smith, it was announced as part of our Future Made in Australia in the budget. As you've heard, there's been consultations, as we discussed at the last estimates, that have happened that finished on the 4th of October. There's a range of formal submissions through that, including virtual forums that were held. There's been a lot of interest in this. I've certainly had a number of discussions about it, and we will be taking further decisions based on that. So I think you understand
Minister,
where it's at.
How many investment proposals has the front door received?
Well, we've just answered that we are finalising the model that will be put in place.
None as of today.
Well, how can something that's being finalised be receiving something?
Very good question. I'm coming to this, yeah. I'm coming to this, yeah.
The front door, this is not a joke. You might think it's pretty funny.
I'm not joking.
Well,
actually.
I can see you.
Because
well,
to
this
be fair,
is serious
the coalition
work.
provided in-principle support. So we are critiquing the work that has been done thus far to make the single front door
So a consultation process that finished on the 4th of October.
So when will the front door open?
Well, you will be informed of that when decisions have been taken.
Before the election or after the election?
Following the formal consultation
next
process.
Financial year.
Ask the question. Wait for
The government is considering the outcomes of the formal consultation process.
How many submissions were received as part of the consultation process?
It's around 50, Senator, and some of those will be confidential, but we intend to publish those on the Treasury website. On the Treasury website.
When?
It'll be a decision for government when that's done.
Sorry?
It'll be a decision for the government to publish those.
We're considering them.
Yeah.
Sorry, considering
the submissions. There's been a consultation process.
Yep.
Submissions have been received, and those submissions
closed on the 4th of October.
And so the consultation process, based on the consultation process, has advice gone to government? Has the next step been completed?
Government is considering that.
Is there a formal set of decisions?
Government.
Is there a formal set of decisions before the government at the moment?
You'll find out. It's before government.
It's a process question. I want to
and
know.
I'm telling you where the process is at. It is currently before government.
And when is a decision expected?
Well, we will advise you. You will be advised of that.
Will the submissions be released prior to an announcement or after an announcement?
I'll see if I would imagine it would be simultaneously with the announcement, because you're using the submissions and the feedback and the input to finalise decisions.
So the door is still closed?
The door is being developed.
Who's there?
The front door, again, in response to a lot of work that the Treasurer has been doing around investor roundtables and meetings with industry, this is something where we are responding to feedback about navigating some of, opportunities across government. So it's an important part of the future made in Australia and in attracting investment in key industries.
When we talk about the 50 approximate submissions to the consultation process, does that include the virtual meetings that Senator Gallagher
Well, they were
alluded
meetings,
to?
not submissions, were they?
Sorry? No, I just want to be very clear. So perhaps on notice, you might be able to provide to us, or you might know already, the number of written submissions. Then what other processes inform the consultation?
I'm happy to speak to that because we've gone through the consultation process. We did, in addition to receiving the formal written submissions, we did conduct 3 virtual forums which were open to anyone interested to sign up, as well as conducted extensive bilateral meetings with around or more than 30 different stakeholders cutting across business, industry, community groups, First Nations. So that's all informed our design that we've been developing.
So on notice, can you provide us with the dates and attendees of those various virtual forums and the details of the other elements of the consultation process, in addition to the formal or written submission elements of the consultation process?
Happy to take it on notice.
So
we'll break there, Senator Smith, because we are due for a lunch break. Senators still have questions for Macro, International and Foreign Investment Group. So we'll see you after the break. I'll just remind senators that our hard marker is 10 p.m. So being an hour behind when the marker is 10 p.m. is worse than it normally is, and we'll try and make up the time. We're suspended for lunch and we will return at 1:25. The committee is suspended. The committee resumes with Treasury Macroeconomic Group and International and Foreign Investment Group. We're running about an hour behind schedule and we have a hard marker of 10 p.m. tonight. And I call Senator Smith.
Thank you very much. We were talking about the single front door, and just to reiterate, the Coalition has offered in-principle support. So this line of questioning or critiquing of the progress is very, very helpful in maintaining that level of in-principle support. So just is the initiative, is it required to legislate any parts of the initiative?
First Assistant Secretary, National Interest Framework Division. Senator, as we were talking about before the lunch break, the government's still making decisions about the design of the front door, how it would operate. There are a number of ways a front door can be established. Those are all decisions that government will make and announce.
So, legislative requirement to give effect to the front door may be an option available to government, or is a necessary precondition in making the front door open, given that we're dealing with other agencies like AusIndustry, EPA, etc., etc.?
So, Senator, there's a number of ways functions can be set up within government. So it can be an agency, it can be a function that sits within a department. So it really depends on those decisions. It is not necessary to have legislation to operationalise the front door. It depends on the function it chooses to have, the structure it chooses to have, the government chooses for the front door. So legislation is not a necessity, it's an option.
It's an option. And that would be an option that's under consideration?
Well, Senator, as we've previously discussed, the government's got advice in relation to the front door. The government will announce its decisions in due course.
How many ASL are operating on the front door team? It did have a name. Could you just remind me of the name of the working group or the implementation group or
the front door task force?
Task force. How many ASL are attached to that at the moment?
Senator, Treasury was provided with 6 ASL. It's a half-year costing, so it's about 12 people. So we've got a team of about 12 to 14. It's varied a little bit, but the point I would make is the front door is about making the Commonwealth work better. So we are working very, very closely with a number of Commonwealth agencies, Department of Industry, Austrade, Finance, Net Zero Economy Agency, EFA, a number of the special investment vehicles. So across the Commonwealth and across other departments we're working with, there's a larger number of staff across agencies who are supporting Treasury's establishment task force.
So the single door task force, it has Treasury officials and it has officials from other parts of government?
So within Treasury, within my division, we have a team. We've got secondees that we've previously brought in. Some of them have chosen to become Treasury employees from Austrade and Finance. But the way it works on proposals that are cross-cutting is there are teams within other departments that we are engaging with, we are working very closely with, their interdepartmental committees. The usual way that cross-cutting things in governments gets done means there are other staff across other departments within government who are supporting and are engaged in that work.
Earlier, it was described as an opportunity to navigate the existing system rather than a funnel. But to be fair, I think that when people hear about a single door, I think they do imagine a funnel or fast tracking of approaches. So the existing structure will continue to exist, and this is literally just an entry point to the existing structure rather than a whole new, my word, streamlined process.
Senator, you're asking questions about decisions that government will make. So these are questions around how does the front door interact with existing agencies, existing functions, existing ecosystem. These are parts of the design of the front door, so the government will make its decisions in relation to that and announce that when the government chooses to.
If I can add one point though, Senator, the key is that the front door has been agreed and designed to help major transformational investment proposals across government. When we said won't be a complete funnel, we imagine there will still be a need for people like Austrade to go into the international networks and their posts, speak with small businesses across who are interested in investing in Australia. There will still be direct approaches to places like ARENA and the CEFC, where those are not major transformational investment proposals but are still important. So we're not seeking through this, I think government is not seeking through this to necessarily have every interaction with government brought through this door, but there are thresholds that will be announced around which projects are relevant for the front door itself.
I can't imagine that it's going to be operationalised before the next budget. Because so the process we have to go through, obviously, so advice has been given to government and now a decision has to be made on that advice. And then once those decisions are made around structure and process, based on Senator Gallagher's earlier evidence, I assume the government's going to then make a statement so that the broader stakeholder community is aware. And then there would be a process of implementation. And then there may even be a legislative process as part of that implementation process.
In the consultation paper we released, we flagged that the front door would go through a staged implementation process where we would start with the model proposed in that consultation paper. So the actual design of the model is a decision for government, would involve a staged implementation process where the front door starts small and grows over time.
But Senator, as you would expect, setting up a new function will take some time. It's not going to be overnight. It never is.
And so when do you expect the first investment proposal to be invited through the front door?
So again, Senator, those are subject to decisions of government.
Minister, when can interested stakeholders be expected to be invited to step through the front door?
The government will be finalising its decisions and they will be made public when that's done.
Is the government working to a timeline internally?
Well, I think you can see from the fact something was announced in the budget, we've got legislation under Future Made in Australia in the Parliament, which I understand you aren't supporting. This is an element of that.
Which we have offered in principle support.
We have, well, time will tell. We have...
And this is absolutely time will tell. This is the important part of the process.
Been through a comprehensive consultation process that finished on the 4th of October. That is pretty quick to be moving on this, and we'll have more to say shortly.
Thank you very much. Thank you.
One comment I will make. One comment I will make is proposals have existing avenues. Government's looking at other proposals. The front door is trying to bring those processes together and make them easier to navigate, more coherent, and facilitate investors working through a single front door. But for investors looking to invest in Australia now, there are a number of avenues that are open. There's the Department of Industry. There's a number of avenues. So the time that the front door takes to be stood up.
Industry about its various front doors or locked doors. Just finally, no, that's quite okay. Thank you very much. Yep, thank you. Yep.
Thanks, Chair. I want to ask some questions about the new climate disclosure regime. The Australian Accounting Standards Board standard for mandatory climate disclosures was issued a couple of months ago, 20th of September, and I'm wondering if Treasury can explain concisely just exactly what it will require for reporting entities to disclose about their financial emissions under the financial market. I know it's quite an extensive standard, so that's why I'm asking for the concise version, which I know is not easy. Who am I asking?
Okay. I was just checking, so Dr. Alex Heath, First Assistant Secretary. So we've obviously had a few conversations about climate-related financial disclosures, so yes, obviously the standards are quite extensive. There will be requirements to disclose on Scope 3 emissions if you're a firm that's caught by this regime. There will also be requirements to do some forward-looking disclosures about your plans and, justifying the targets that you have. So if you go back to the TCFD, which is the Task Force on Climate Financial Disclosures, the elements of that were risk management metrics. I'm not going to remember them all, but it's basically information that supports any claims that you make about your climate targets, information that's going to help you as a company, but also investors, understand the climate risks and opportunities associated with the activities that you currently have underway and are planning to undertake.
And just so my understanding, clear of what Scope 3 is, upstream and downstream. Upstream is things like production, sourcing, transport, business travel, employee commuting. That was an interesting one. And downstream is things like logistics, use and disposal of products, investment, franchising. What have I missed? I'm not going to be able to give you a complete list of all the activities. At a very high level, I think about it as the emissions of your customers in one direction and the emissions sitting in your supply chain in the other direction. Okay. And my understanding, and correct me if I'm wrong, is that for large companies, which have quite a specific definition of assets, revenue, employees, they're due to start reporting on the 1st of July 2025. Then there's, for smaller companies, it's the 1st of July 2028. Is that right?
So I think the first reporting is required 1st of January.
Oh, sorry,
2025.
Okay, it's January, not July. Forgive me.
Senator Penny Sarow, Assistant Secretary of the Sustainable Finance Branch. The largest entities are required to report for financial years commencing from the 1st of January 2025.
Right, thank you. Okay. Has Treasury had any further consultations with small businesses about things like their insurers, their bankers, their sources of capital finance, and whether they are collecting that information?
There was extensive consultation in developing the legislation that was passed by Parliament on the 9th of September. That included a range of entities, including small businesses. Since then, members of Treasury have attended forums that have included small businesses to discuss the reporting arrangements.
What dates did they occur?
I'd have to take that on notice, Senator.
And did they discuss issues like how they report Scope 3 from their insurers, from their bankers, from those providers of capital? Did that come up?
Yes, Senator. We are aware of concerns amongst small businesses on how they would be required to report, and the design of the legislation is intended to only require the disclosure of material information that's readily available with minimal cost or effort. The entities who...
Sorry, minimal or undue?
Sorry, without undue cost or effort.
Yeah.
And the entities who are reporting could rely on primary data sources for their Scope 3 reporting, which is actual data from entities in their supply chain. But if that's not available without undue cost or effort, they can rely on estimates or industry averages or other indicators to meet the requirements under the legislation. There's also work underway to support improved estimates of emissions from, for example, the agriculture sector. The budget included a significant initiative in the agriculture portfolio, which provides funding over 10 years to improve emissions estimates for the ag sector. The Treasurer has also asked the Council of Financial Regulators to provide advice on how to improve Scope 3 estimates. And we also understand from discussions with industry that a number of accounting firms are developing tools which would allow more readily available estimates using existing information.
Can I ask about the... obviously, this is quite an extensive reporting requirement. I think, the Chair of ASIC said that it was the biggest change to corporate reporting in a decade. So I just want to understand some of the policy rationales behind the decisions that were made here. The policy rationale of requiring reporting of internal carbon prices, which is on page 13 of the standards of AASB 2, I've got in front of me. Internal carbon prices. Is that potentially commercially sensitive?
Yeah, I think what we're talking about here is this future-looking piece. So how are they thinking about the risks and the opportunities in the future and assessing business cases? And it's quite standard for there to be an assumption about internal carbon pricing as a part of that. I would have to go back to the specifics of the requirements to understand how things that are considered to be commercial in confidence should be treated. But obviously, that's a sensitivity that would be important to think about.
Yeah, because obviously, if a company can reduce its emissions at a lower price, that's a competitive advantage. That's not something you necessarily want to cough up in a disclosure report.
Well, again, I think, in the context of this, it would be an assumption that's been used to do the assessments. And so there are various, in things like infrastructure projects, there are carbon prices assumed for making these assessments. So there are publicly available assumptions that could be used for that purpose.
How do you check the accuracy?
Pardon me?
How do you check the accuracy of the disclosures?
Well, I think this is sort of one of the important things about the forward-looking piece, that you end up talking about scenarios and you are using the information that you make about there's a lot of uncertainty in this space.
Yeah.
I was just going to say, any forward-looking strategic decisions companies make will be made there will be uncertainty. And so what's really important if you think about it from a board's perspective, they need information to make decisions. And so a range of scenarios that are well designed to think about the risks and opportunities under different possible scenarios is the sorts of information that they would typically use to make an assessment about any proposed business project.
I agree, but the fact that the board are making decisions demonstrates that this is, in fact, proprietary information to a large extent. I mean, this is a wholesale price you're talking about. It's the equivalent of publishing supplier prices. That would be the most analogous.
Well, there's also publicly available carbon prices, for example, through the ACCU market. So there are ways of making assumptions using publicly available information.
So we could essentially just make an assumption rather than what the actual.
I think, Senator, to the policy rationale, I agree there are sensitivities, commercial sensitivities in this space, as there are in other disclosures inside the accounting system. I mean, the goal here is, in relation to sustainability-related risks and opportunities, to report on measures that affect the entity's cash flow, its access to finance, its cost of capital over the short, medium and longer term. And the kind of matters you're describing certainly do that. So the intent is to drive that information into the market in a way that helps investors interested in supporting businesses in this space to make rational decisions. But as the team has said here and in previous evidence, there have been allowances made, to allow for essentially, especially in the early stages of the regime, best endeavours and estimation techniques, and also some leeway given through the regime in the early years to directors to make sure that they have an opportunity to sort their systems and comply in an accurate and robust way. But as Dr. Heath said, we know that in this space there is a learning journey to go on. There is going to be some learning as we go, but this is not fundamentally different to other areas of disclosures for boards where they have to understand and report on aspects of their business and their operations.
What's the policy rationale for requiring reporting on whether and how climate-related considerations are factored into executive remuneration?
I think it's the same point, Senator, that we are looking at disclosing information about sustainability-related risks and opportunities that affect the entity's cash flows, its access to finance, its cost of capital over the short, medium and long term. And I think that also goes to remuneration decisions at the senior levels.
Well, an organisation could reduce its emissions and have a goal of reducing emissions. It doesn't have anything to do with executive remuneration.
I think it would be open for that point to be made. I mean, this is really about understanding the risks and the opportunities. There will be some aspects of this disclosure where there are no material climate-related risks and opportunities, and there's it's possible to make that point. There will be other aspects of the business where that is relevant.
There's other forms of reporting that are out there that we impose on corporate Australia. Things like, and we were just talking about them the other day, the WGEA reporting. But we don't necessarily ask executive management if executive management remuneration has a gender target embedded into it, do we? Or, implementation of a gender target embedded into it.
I'm actually not familiar enough with the situation, but I would have thought if a company has a gender target and remuneration is related to that target, that would be relevant information.
Yeah, it would be very unusual for that to be embedded into remuneration, though, I think, as far as, an executive's obligations. All right. Can I ask that the reporting obviously starts very soon. The instrument was only just made. It's coming into effect 31st of December. Does Treasury still expect Group 1 entities to comply on day one?
So, as my colleague Ms Serow said, it's requirement for the reporting year that starts on the 1st of January 2025. Mm-hmm. There's been quite a lot of conversation about reporting requirements coming in, climate-related financial disclosures coming in. The first group of companies that are caught by that time frame mm-hmm. are all basically ASX 200 companies that largely already do significant climate risk and opportunity reporting. So for them, the costs of changing over systems is going to be less significant than it will be for many other companies because they're effectively already doing it. So I can't remember the exact numbers, but a very high proportion of ASX 200 companies were already reporting against the TCFD standards that I mentioned before.
Okay.
And basically the international standards that the AASB standards are based on are an extension of that TCFD framework.
I get the sense that these are a much higher, more stringent standard than any other jurisdiction has imposed on equivalent size organisations. That's the feedback we've had. Is that right?
The standards that have been issued by the Australian Accounting Standards Board are largely based on the International Sustainability Standards Board's requirements. And in terms of the Scope 3 reporting requirements, there are a number of jurisdictions which also currently require Scope 3 reporting or will be requiring Scope 3 reporting from 2026. So I'm not aware of Australia's requirements being substantially higher than other jurisdictions.
Is there another jurisdiction that has more onerous standards that also has the same lenient approach to, say, for instance, class actions and civil litigation?
I think we would have to take that on notice. So the two.
I know it's a consideration because there's a 3-year safe harbour against class actions.
Yeah, so I think that the point that my colleague Ms Serow made is important. So there are international standards. The feedback that we got as a part of the sustainability finance strategy was that it's incredibly important for any Australian standards to be as consistent as possible with international standards because the interoperability of standards across jurisdictions obviously eases the reporting burden. The specifics of how close or otherwise other jurisdictions are to those international standards is something that I would have to take on notice. But the jurisdictions that already have Scope 3 reporting in place, for example, include the EU and New Zealand. And as my colleague mentioned, there are a number of other countries that are already introducing the standards in 2026, and a number of other jurisdictions that are actively considering how they might implement those international standards.
That safe harbour provision that I referred to only refers to civil actions, obviously. It doesn't refer to action taken by the regulator. So I'm wondering if there are any protections against ASIC taking action against those reporting entities in the event that they're not compliant by the due date in the first 3 years.
Senator, ASIC will publish, or has already published, some information on their website about their approach to enforcement of the new requirements, and they will publish further guidance to support entities' preparation. In terms of the modified liability arrangements that apply for 3 years, that was deliberately included to allow entities to prepare and to better understand how they can deliver the material that's required in the standards.
That safe harbour, is that rolling in the same way that the obligation to comply is rolling for different size of entities? So will that safe harbour then apply to businesses of 25 million in assets and $50 million in revenue and 100 employees? So for the following 3 years?
Just before you answer that, Senator Hume, can I just point out that we were due to move to small business housing corporate and law at 11:40 and it's now 1:50. Are you in a position to kind of conclude this block, and did you have anything more, Senator
I do.
Smith?
I've got some one more line of questioning, and I'm not sure about my colleagues.
Yeah, I'll just review those.
Yeah. So yeah, we probably do. I'd imagine it will be probably at least another 20 minutes, but I can't guarantee that it might not be half an hour.
Yeah.
Do you have the call?
Thank you. So I'm interested in knowing whether the intention is to keep rolling that safe harbour out so that small businesses are protected in the same way that larger businesses are protected against civil action. Because we know that, there's a whole bunch of activists out there that are just practically salivating, waiting for this thing to come into effect. And the litigation funders, this is the second biggest country for class action lawsuits.
Just before that's answered, on ASIC generally, and I think this is something you could certainly take up with ASIC and test their approach to enforcement and compliance in this regime. But they're on the record. They are on the record as saying, outside of the formal mechanisms you described, that they intend to take a, quote, pragmatic and proportionate, unquote, approach to the enforcement and supervision of this regime in recognition of the substantial change. So we think there are very substantial policy benefits to this change, but we understand there are also substantial costs. It's a big shift, and ASIC has also on the record said they will take a pragmatic and proportionate approach in the way they consider enforcement.
That's for actions taken by the regulator, but I want to know about civil actions.
So the question, if I can paraphrase, is does the modified liability period apply from the point in time you as a company
have to comply?
And I think the answer to that is yes.
Yes, and I can provide on notice a detail of how that progressively rolls out, Senator.
Yes, that would be terrific. Thank you. Can Treasury rule out that farms, manufacturing plants, data centres, those emissions-intensive organisations, can you rule out that they'll be debanked or that they'll lose finance because of this requirement? Is that something that has been raised with you?
So I think the first question is whether all those institutions or entities that you have mentioned would actually be captured by the mandatory reporting regime. So So if we take farms, for example, most farmers would actually fall well below the boundary of what a large proprietary company is. So in that sense, they're not captured by the regime.
In the first 3 years, potentially, but there's farms that are worth $25 million or have $50 million in revenue and have 100 employees.
Yeah, so it can't be ruled out that there's no farms, but I guess I'm just making the point that for most farms they would not be captured by these obligations. Now I've forgotten the question.
Data centres and will
there be debanking?
Is there concern about debanking?
Look, I think we spend a lot of time speaking to financial institutions, and when it comes to the banks, it's important for them to understand the climate risks and opportunities, but they have generally expressed the view that it's important for them to basically be working with these companies to manage the emissions. So it's not about debanking as much as finding ways to work with these entities to help them reduce their emissions.
That litigation risk and the growing tendency in this country for class action lawsuits around disclosures, was that something that was considered in the costs to business when this new regime was being considered?
I'd have to take that on notice and provide detail from the impact analysis that was published together with the legislation, Senator.
Okay. As part of Treasury's modelling and scenario analysis on the impact of the US election, which we spoke about a little earlier today, has the impact of the US's refusal to embrace Scope 3 reporting on the competitiveness of our agriculture, of our mining, or our manufacturing industries also been assessed?
We have done no modelling on that.
Okay. Have companies come to Treasury regarding the compliance cost of this legislation? And are they aligned with what was published in that impact analysis?
I'm not aware of any alternative estimates from companies, Senator.
So companies haven't come to you and said, this is really concerning. Is that what you're saying?
In relation to the estimate for affected reporting entities, I'm not aware of revised estimates that have come through since the legislation was passed.
So they did before the legislation was passed?
I'd have to check that, Senator.
I haven't been involved in every conversation with every company who's come to speak with us about the introduction of this disclosure regime. Yep. But in the conversations that I have been involved with, cost has never really come up. There's been a lot of questions about the detail of the application, but I'm, again, with the caveat that I've not been involved in every conversation, it hasn't really focused on cost as much as the details of implementation.
Yeah. I mean, I understand that the intention is for no undue cost and effort to be required, but undue is a very opaque word and open to interpretation, whether it be by those who might wish to take on a civil action. It's also open to interpretation from ASIC, and even though everyone said, oh no, we're going to go softly on this, once you've opened Pandora's box, it's going to be very hard to put the lid back on. We've already had, in just initial conversations, a misinterpretation of what undue is, and Ms. Cyril said minimal cost and effort. Minimal is very different from undue, but no one knows what the difference is. So I think that this is going to need an awful lot of oversight, and I know that you're building the plane while we're flying it, but my concern is that this is open to enormous exploitation by activists.
So ASIC is actively engaged on the topic of how this is rolled out.
Sorry, yes, go on.
Sorry, I didn't.
That's all right.
It's not relevant. So she has commented on the guidance that ASIC has put out to date, and as the regime is rolled out and it becomes clear that further guidance from ASIC is going to be helpful, I'm sure that they will be finding ways to make sure that clarification on some of these points are communicated effectively.
And Senator ASIC did receive $10 million of additional funding in the 2024-25 budget to support its enforcement actions associated with sustainability reporting.
I'm not concerned about ASIC's costs here. I'm concerned about Australians' private sector costs. Move on.
Within the 10 minutes?
I will do my very best, Chair.
Okay, you have the call.
I want to ask about future. On this one?
Around any space, tried to be quiet just to let things flow.
Going to conclude. We'll stick with Senator Hume.
Okay. Just before we move off this one, that would be fine. Can I just ask if you've asked about the costs of compliance in any of the meetings and engagements that you've had with those that are giving you feedback as part of the consultations? Is that one of the things? Is it a specific question you've asked?
I think that given that I have not been involved in all of that, we will need to take that on notice.
Okay. It was a very detailed impact assessment, Senator, and it was clear that there would be costs associated with the reforms, but with policy benefits. So I think we did a lot of work to get that impact assessment done. And then I think, as Dr. Heath said, the feedback we've had since and the discussions we've had since have not raised questions around those costs as displayed in the impact assessment.
Okay. And again, I understand and I have no reason to doubt you. My concern is that corporate Australia seems to be coming to us saying this is really alarming, and you guys are saying we haven't even heard from them.
Well, we've had several rounds. We've had quite extensive consultation on the sustainability finance strategy, on the legislation. There have been many opportunities for people to raise issues of this nature if that is something they have felt they've needed to. And I guess the question is, now that the legislation is out and the standards are out and people are exploring the specifics of how to implement things, and they've got more concrete information, that is something that they can bring to our attention.
I don't doubt the good intentions behind this. Something that concerns me is some feedback that I've had from a director of 2 publicly listed companies that said that both his companies are now spending $30 million a year simply reporting to government on things that are all well-meaning and good-intentioned. WGEA reporting, modern slavery reporting, sustainability reporting, and now climate reporting. And it's $30 million before they've even started on this one. And this is the most onerous. And that $30 million, of course, goes straight down to the cost of whatever it is that those organisations are producing that the consumer ends up paying for. So there is an enormous price to pay for a compliance burden placed on corporate Australia. And while it sounds like a great idea and it's done with the best of intentions, it shouldn't be considered without the costs, not just to the individual companies, but to the economy as a whole.
I hear the point, Senator, and certainly very conscious of those aggregate costs. I think, as Dr. Heath said earlier, most of the large companies in Australia are already moving in this direction anyway and are reporting on climate because of a range of other factors around broader ESG preferences of those companies. So, and there is a very strong international push in this direction as well. So I think, I suspect, without knowing the company, I suspect that many of the large companies in Australia, absent this regime, would still be spending more on assessing and reporting on climate in the absence of this regime. And we're trying to provide consistency and more transparency and certainty for businesses in the way they report because of the issues that are frequently raised around greenwashing and other challenges in the market. So I appreciate you're saying you understand the intent of the regime, but I think this was happening to a large degree prior to the regime, and this is meant to help us get consistency and transparency across the market.
And I'd just add to that, in conversations that I have had in an earlier period where people were trying to do climate reporting well, one of the concerns was that they didn't have a particularly good standard to work to, so they would ask questions, so just as you have about what does undue mean. There was a strong desire from companies to get clearer definitions, clearer standards to work to, because that actually cuts out quite a bit of the cost for them And from an investor's perspective, if everyone's reporting to a common set of standards, it's much easier to compare the information you get from different companies. So, really, there's huge benefits as well to having commonly understood standards that people can work to, rather than trying to do the right thing and report information in a situation where there's no clear standards.
Yeah. A permanent safe harbour from civil action would, I'd imagine, put an awful lot of companies' minds at ease on this. Is that something that's been considered?
Well, the legislation has been out for consultation. A whole range of feedback was considered, and the legislation has been introduced on the 9th of September, having weighed up all the sets of information that came through that consultation process.
So no.
Okay.
I've got some more questions, but on a different issue, so if you want to share the call, that's fine.
Senator Pocock.
Thank you, Chair. Thank you for your
Sorry.
time. We're running over. I've got some questions about the broad economic impact of the proposed ESOS bill. I was interested where international education currently ranks in terms of value in Australia's export industries.
Sorry, Senator, I just missed the bill you referenced.
ESOS, the Home Affairs Education Bill.
Student caps. It's my colleagues.
So could I just please ask you, Senator, to repeat the question?
Sure. Where does international education currently rank in terms of export industries value to Australia?
Yeah, I can get that for you.
Do my best.
So in terms of its ranking, I think it's the 4th highest ranked export. But that's by a long part because, for instance, like mining exports are a pretty large chunk of our exports, so there's a pretty big difference between education exports and others. So it's about, I think last financial year, accounted for about $46.6 billion of exports.
And do you anticipate that changing should the ESOS bill pass?
We'd still expect there to be some growth in education exports. There's been a couple of other factors there, so I should just elaborate on what's been going on. So one thing that the ABS has been reporting is a lower average spend by students when they're in Australia. The other factor we've seen is in the first half of this year, we've actually seen less growth than we had anticipated on education exports. And if you have a look at things like where those students are coming from, so students from mainland China, for example, have not come back nearly as much as they have, so we haven't even reached their pre-COVID levels. Mm-hmm. So we have seen just general weakness, and there are a range of factors in other countries as well as obviously some policies here.
Mm-hmm. And so Ministerial Directive 107 is already having a slowdown in the sort of education numbers, but also people aren't spending as much.
Yeah, we would have expected a slowdown anyway. So because when we reopened borders, for instance, there was in 22-23 68% growth in education exports. We wouldn't have expected that to persist. Following year, so last financial year, 33.5%. So they were just unsustainable rates of growth, and obviously that was coming off a very, very low base. We expect that to slow even further.
Mm-hmm. Has Treasury modelled what the impact the proposed changes would have on GDP growth specifically?
Well, when we've, I think in our previous hearings on the actual bill, we expressed, so we're going through that process at the moment for our forecast for MAEFO. But I think in my earlier testimony for the inquiry on the bill, our estimate is that the caps announced by the government were consistent with the student non-forecast that we had at budget. So we're not, and at this point, don't anticipate a broader macroeconomic effect on the economy.
So no impact. Okay. And so do you dispute there was evidence tendered to the committee that it would reduce GDP growth? Treasury disputes that?
I couldn't dispute it until I've done the MAIFO forecast, but I would say it's in. I would say that claim would be very doubtful.
Okay. I note that in the September meeting minutes, the RBA said that a drop in international student numbers would lower the economy's supply capacity, and that they would assess the implications of these various effects, and would more carefully look at the implications as part of the subsequent forecast update. In your reading, does this suggest that the RBA has some concerns with the bill's impact on the economy?
I think you'll have to talk to the RBA about how they're seeing the impact on the economy. I think they'd be reacting to what we've been reacting to, is in terms of the flow of the data that we've seen in the national accounts and the balance of payments on education exports. The other thing I should note is there is a supply. There are supply, but there are also demand effects as well. So yes, there's probably fewer students as a lot of them work. There will be some supply effects, but there is also offsetting demand effects. So in terms of the overall balance of demand and supply in the economy, broadly, we don't expect that would have much of an effect.
If I could just add one point, Senator, I think we need to be careful to separate the effect of the bill and the student caps themselves from the broader student environment, which Dr. Cagliarini discussed. And I think the Reserve Bank are probably covering both in their commentary from my reading of it, but definitely worth checking with them. So our view is that the student caps in the bill will not negatively affect GDP compared to our current forecasts. But there are a range of other factors that could change education exports, as my colleague said, including, for example, demand from China, that are nothing to do with government policy per se. So I think the Reserve Bank's reacting to both, I suspect.
And how do you come up with the expectation that there will be continued growth in international students?
So we would expect it to be slowing, but we go through a process of having a look at, in terms of, for instance, looking at growth in other countries as well, and migration policies in other countries is also another factor. So, for instance, Canada a few weeks ago announced some pretty restrictive migration policies. That would actually divert some students here as well. So we think that there are external factors as well that would be pushing students here. But we were expecting a slowdown in student nom in our forecasted budget, and I think we tabled. I think in the ESOS hearing we tabled our statistics on that. We were expecting that to slow, but that was also consistent with some slowing in education exports.
And if you're looking at the Canadian example, did you look at what happened when they introduced caps?
We haven't done. We're still in the process of looking at that. The most recent announcement was for 25 and 26, and they've announced policies to reduce their population by 0.2% in each of the next 2 years. So we're looking at that and what effect that would have. If
you're telling me that you don't think this will have an impact, why haven't you looked at a comparable country like Canada that's actually introduced caps and found that they battled to actually hit those caps because of the reputational damage?
Yeah, so they've also had a range of other policies in place, so it's not just the caps in isolation. There's been a range of other migration policies that they've introduced.
Recently, though?
Recently, but even before that, because they were having, I think as the Secretary mentioned earlier today, Canada's unemployment rate, they'd had a massive increase in migration. Their unemployment rate went up much more than it has here. They've also experienced pressure on their housing. In housing, they've been infrastructure and social services. So they've actually had a range of migration policies that have been introduced, not just recently, but going before. Sure. Student caps being one, but a whole range of others.
But you just said you hadn't looked at Canada, so...
Sorry?
You just told me that you hadn't looked at Canada when it comes to... We are looking at that.
Okay.
I think there's two, if I could, Senator, there's two questions. There's the question of the cap itself and whether that leads to a drop in education exports, sort of a binding drop in education exports and therefore GDP. And our view is our budget forecasts are consistent with the caps and therefore we wouldn't see that. The broader market and how the market responds to a range of policies in Australia and international factors, we are watching that closely, and it's still a bit early to tell exactly how the student market will respond to our policies but also the policies of other countries, and that could see movements around that. But not directly related to the caps, per se.
And I'm not a mathematician, but I'm just interested how having less students next year equals growth.
I'm not sure it's actually fewer students per se. I think there is a little bit of growth that the student caps have actually encapsulated. But the other thing you've got to account for is that's actually, the caps are only on commencements, new commencements. There are other students who have already commenced their courses, are already in the country, are also spending and paying their fees. So we've got to count those into those numbers. The other thing to account for is that the caps only apply to higher education and vocational education. So there are people that come here for English language training, that come here for primary and high school and other forms of education, and they're not subject to the caps. Sure. So there are other aspects in which there are other factors that we include in our forecasts.
Sure. Maybe just on notice, if you could come back today if it is more or less students next year. Thank you. Thank you, Chair.
Thank you. We're in 10-minute blocks. Senator Hume.
Thank you, Chair. I want to ask some questions about the Future Made in Australia framework, and specifically in relation to an op-ed that the Treasurer wrote entitled Powering a Future Made in Australia on the 4th of July. He wrote that our agenda reflects the new economic orthodoxy of a churning and changing world. I'm interested to know what that means and whether Treasury have provided any briefs to the Treasurer on this new economic orthodoxy.
So I'm familiar with the op-ed you're talking about. So we have provided a number of pieces of advice to the Treasurer about Future Made in Australia, about the National Interest Framework, about the economic and the geo kind of strategic context that these policies are being designed in. So there's been a range of advice that we've provided to the Treasurer on these issues over an extended period of time.
So is any of that advice, does it say, hey, Treasurer, there's a new economic orthodoxy and we need to respond to it?
When I've heard the Treasurer use that phrase, he's used it in, I think, a number of speeches and op-eds and in broader discussion. What he's mostly referred to there is a couple of things. One, the increased focus on economic security that all countries are pursuing. So there is a heightened focus post-pandemic, but also because of changes in geopolitical relationships on economic security, both in country and as groupings of countries. There is obviously a heavy focus on investing in the net zero transition and allowing, and that has drawn governments more into supporting elements of that transition. And that changing of the geopolitical environment, economic security, supply chains and the net zero, that is what he means, as I read it, when he refers to shifting and changing world. And that is certainly very consistent with the advice we have been providing him over a number of years. But the phrase new economic orthodoxy is something that he's used, not something that Treasury has used. Yes, we haven't. That's his take on the advice that we've provided. Well, it's an interesting phrase and an even more interesting approach. The Productivity Commissioner said in relation to the Future Made in Australia, if we are supporting industries that don't have long-term competitive advantage, that can't be an ongoing cost. It diverts resources, that's workers and capital, away from other parts of the economy where they might generate high-value uses. Is that something that Treasury agrees with?
Senator Rachel McGrew, Assistant Secretary in the National Interest Assessments Branch. Hi. So under the net zero transformation stream, a key consideration is that the sector would have a sustained comparative advantage in a net zero economy. So certainly something under that stream would be considered to be something that would not be reliant on ongoing government support. It would be in the net zero economy of the future, able to sustain a comparative advantage. Yeah.
Is that something that you agree with, Minister?
Well, that's why we've targeted the assistance through production tax credits. That's part of the reason.
So, and that's,
so
I just wanted to understand,
ongoing.
The Productivity Commission, did you agree with her?
I don't have the words in front of me from the Productivity Commission, but I would say that the reason we are looking at some of the support that can be provided in the transition is through production tax credits, is to deal, with supporting the delivery of those products, whatever they are.
So to give those organisations a long-term competitive advantage, you're going to give them taxpayer subsidies?
When they produce.
But that's how you're going to make them sustainable?
We're incentivising through the production. Yeah.
If
And that's how they're going to be long-term competitive? Is that the new economic orthodoxy?
If I may add one point, Minister. There have been some recent comments by Danielle Wood as the chair of the PC, and I think the PC are up later tonight or tomorrow, and they can expand on this in their own words, but Danielle Wood did a piece called Industry Policy in Today's Australia on the 12th of September, where she talked about current industry policy trends and responses to real concerns around climate change and supply chain resilience, where she essentially talks to very similar themes to the Future Made in Australia agenda and our national interest framework, and she highlights the green transition and economic security as the two main reasons why you would intervene in this market, and I think is very aligned broadly with our own framework.
Was that specifically on solar panels?
No, I'm talking about the national interest framework generally.
So is it the view then of Treasury that solar panel manufacturing in New South Wales can compete with the entrenched international solar panel manufacturing industry from which we could purchase from?
So, Senator, solar panels were part of the clean energy manufacturing stream appointed as a priority sector under the budget. There's a supporting paper that was released by the Treasury with the budget. Clean energy manufacturing is actually under the economic security and resilience stream. I don't want to spend time on the supporting paper in this forum because it is a public document, but some of the considerations under that stream are things like concentration of supply chains, both globally and domestically, things like the vulnerability of supply chains and the criticality of the things that are in those supply chains. So those are the kind of considerations that went into the clean manufacturing stream when it was assessed as being aligned with the NIF under the budget.
Right. So that's what informed the review that Treasury now has, is that we can eventually compete with the entrenched international solar panel manufacturing industry.
So the economic resilience and supply chain within the framework, that is about needing some level of domestic capacity. The government assessing that some level of domestic capacity is necessary as almost an insurance or as a counter to the concentration and the supply chain risks posed. That's not quite the same as suggesting it's a sustained comparative advantage or it's an industry at scale. It's about looking at where those supply chains are concentrated, what's the impact on the Australian economy and key priorities for the wellbeing of Australians if those supply chains are impacted. What is the risk that poses for the economy? And is some level of domestic manufacturing or does some level of domestic capacity necessary or useful to counteract that? So that's the set of conditions that's assessed in relation to that economic resilience and security stream.
So the solar panel manufacturing in New South Wales, my understanding is it's only got one customer, and that's the New South Wales State Government.
So for specific programs around the solar, that's better directed to DQ. They administer the actual programs that the government's got or ARENA. In terms of how solar panels or how Treasury would assess the solar panels under the national interest framework, we can talk to that. But the specific programs, that's better directed at DQ.
So did Treasury give advice to the Treasurer on this particular project, the solar panel project?
So, Senator, we'd have to, I don't know about the specific project, but generally for programs that come up, so the Solar Sunshot that was announced in budget, Treasury in its capacity in ERC processes, we provide advice on proposals that go to Cabinet. So we provided advices on the Solar Sunshot program.
Where do you think it stacks up?
So, Senator, we provided advice on Solar Sunshot.
Yeah.
And our advice and how the solar fits into the national interest framework, that's in our supporting paper. That's pretty evident, and I've kind of talked a bit more about that already. But we would have provided advice in standard ways as we provide advice in budget processes.
Right. So, but that advice is this project that's being considered by Cabinet stacks up, or it doesn't stack up?
So, Senator, we provided...
Don't go to the content.
No, I'm not after the content. No, I don't want to know what the recommendation was. I just want to know that's the kind of advice that Treasury would
Well, you're not
provide.
going to get that information.
Well, what else would they be advising on?
I think there's two elements, Senator. Under the Future Made in Australia agenda and the national interest framework that was endorsed by the government, we there provided advice, and it was summarised in the paper that Mr McCririck referred to. We provided advice around those areas of strategic interest, key priority sectors under Future Made in Australia, and the government took a decision based on all of that advice to select clean energy manufacturing
including solar and batteries, as a priority sector under the economic security stream. So we provide formal FMIA advice around that sector. It's then a matter for the relevant minister in those streams to bring forward proposals that are consistent with that, developing that sector over time. And then we slip more into, if you like, classic central agency mode at that point, and we provide the normal advice on whether the best way to promote that sector is solar sunshots or whether it's some other form of support. And we do that. So that's a standard Treasury central agency function, drawing on the information we've gathered from the first stage.
And is that the same process that was followed with the Quantum decision as well?
So, Senator, Quantum's better directed to our fiscal policy colleagues.
Yes, but I'm absolutely certain the Treasury would have provided
in absolutely
advice.
The same approach. In Quantum, Treasury, and appeared before this committee last estimates and talked at length about it. So, Quantum Treasury had the similar central policy agency role and provided advice to government throughout the process in which Quantum was considered.
And has Treasury communicated with the Queensland Government to confirm that it's still supportive of the commitment of the previous Queensland Government?
DISA has responsibility for...
But Treasury wouldn't need to do that?
Quantum.
No, Senator, so that, as the Minister has said, that DISA is responsible for the Quantum investment working with the FA. Treasury provided advice to the Treasurer during the budget process. At this point in time, we would not engage with Queensland. That would be left for DISA to do because they are the lead policy agency.
As part of the advice that you would provide the Treasurer, you wouldn't just provide a yes or a no. You'd obviously say these are the risks involved too, knowing that there was a Queensland election coming up where the chances of a government changing were considerable. Would that be the kind of risk that would be considered by Treasury in its recommendations?
Content of advice.
Well,
you didn't when you were a minister. We're not here.
I won't
We've
go
got the same arrangements.
Let me just understand: are risks involved, not just
it's a comprehensive
yes or
brief.
no?
It's a comprehensive brief.
I just want to understand whether there is a risk assessment involved in those briefs.
Well, you've been a minister of the Treasury. You've received Treasury
briefs. I've never
briefs.
had to deal with $1 billion investment into a quantum computing.
As you know, it's not $1 billion from the Commonwealth.
Sorry, it's $1 billion in the solar sunshot.
And so I presume you did deal with large contracts, particularly through COVID, and you would understand the nature of the brief that you get from Treasury.
So there are risks involved. That's what I would have remembered.
Senator Hume, does this conclude your questions for macro?
I still have one more question for macro.
One final question.
And then I think Senator Smith might have some.
Okay.
So my memory of those kinds of pieces of advice?
Comprehensive advice, Senator. We look at all aspects of the proposal.
Yes. Okay, thank you. Do you anticipate that there will be payments of similar quantums to these other projects, $500 million, $1 billion, whatever it might be, for projects in the future? And I'm assuming that if there is, they will be subject to the framework that the government has introduced to Parliament, as opposed to these previous projects that I've referred to that weren't subject to that framework. Is that right?
Well, there's a lot of ifs in that. So if future projects, will they be getting this sort of money? That's entirely...
Well, let me rephrase it.
Officers cannot answer that.
Last question.
The National Interest Framework exists. It's through and I think it's part of the Future Made in Australia package, which you oppose, I would say, just reminding you. Proposals that come through and are considered in that way would be considered against the National Interest Framework.
The National Interest Framework didn't exist when these proposals were considered. So I'm assuming that proposals like these ones will from now on go through the National Interest Framework, but these two didn't. Is that correct?
Which are the two you're talking about?
Well, we're talking about solar panels in New South Wales and Quantum. The National Interest Framework didn't exist.
The solar sunshot was a part of the clean energy manufacturing, which was in the budget paper that I mentioned earlier. The National Interest Framework was used as a tool, one of the many tools that were used to do the assessments that fed into that framework.
It didn't exist. It's part of the Future Made in Australia legislation.
So it's being codified and legislated as part of that legislation.
Right, so it doesn't actually need to be legislated because it already existed.
The legislation, I think, shows codifies it and sets it permanently in law.
But if it's a decision of government, why does it need to be codified?
I'm going to share the call.
Because investors are also wanting certainty.
They've got certainty.
Senator O'Neill.
$1 billion.
Well,
Thank you, Senator Hume. Senator O'Neill.
Well, incorrect again, but anyway.
Thank you. Thank you very much, Chair. I was trying not to ask any questions, but seeing as we're here, I would like to get on the record some of the facts around the job creation. So if the right people are here at the table. So my first question is, how many jobs have been created since May 22? And I note that as a former teacher, I had students come back and tell me about getting a job and how much that just plugged them into a future. So a job is a very, very big deal. It matters to every Australian, no matter what age. Thank you. Dr. Cagliarini, correct?
Cagliarini, yes. The number of jobs, just at least over the past years, 3.1%, which is reasonably strong compared to some of our other similar economies. Did you ask about the number of jobs created since?
Since May 2022.
I think it's just over 1 million. It's just exceeded 1 million last month.
Okay, so that's 1 million people working. And I'm sure they're pretty happy to be taking home a pay packet or a salary. Now, the disruption that's happened has been global. I want to ask about the jobs rate growth over that period compared to similar countries. So can we go to the G7 for a comparison?
Do you want to?
I'm happy to take that question for you, Senator.
Thank you.
So Australia
Ms. Redmond, is it?
That's correct, Inika Redmond, macroeconomy branch. So Australia has had jobs growth of 7.7% since May 2022. I think that's the period you were looking for. That compares to the United States of 4.7% as the next highest, so it's substantially exceeded that level of jobs growth. We've also had very high levels of labour force participation over the period. They've reached records highs. So we've maintained on the demand side strong jobs growth while also having that supply response, which has meant it's not had an impact on unemployment and has had a lesser than otherwise impact on inflation as well.
And by comparison to G7 and our own jobs growth history, how does that sit?
So that's an elevated level of jobs growth.
The current rate of unemployment compared to the period prior to COVID, if we try to compare apples with apples, I mean, everybody knows COVID caused chaos and our figures are all sort of in a recovery point. We're just far enough along now that we can probably get an accurate reading about where we are, but perhaps if we go back to that as a point of time to compare, what's the story there to be told?
So leading into COVID, the unemployment rate was just above 5%, about 5.1%. It's currently 4.1%. So obviously during COVID there were some disruptions and the unemployment rate spiked, and that's partly because of the lockdowns that the economy went through. But I think as we opened up, there was a pretty strong surge in employment, and the unemployment rate dipped to about 3.5%, which is the lowest we've recorded, I would say, since the 1960s. So it's a significant low, and we've pretty much remained low. We've only increased, the unemployment rate's only increased by 0.6 percentage points.
Senator, if I could add, compared to pre-COVID, that December 2019 period, Australia's unemployment rate is now 1% lower than it was then. Whereas if you look at comparable countries around the world, the United States unemployment rate is about 0.5 percentage point higher than it was pre-COVID. Canada's 0.9% higher than it was, New Zealand 0.5% higher than it was. So while most countries have seen an increase in unemployment relative to pre-COVID levels, we have actually managed to maintain a lower unemployment rate than pre-COVID.
Which is a pretty significant outcome for all of those individuals.
It's a very significant outcome for them and for the economy overall. So as we've discussed a few times, a heavy focus of government policy and of, I think, central bank policy, without speaking for them, has been to try and tread this narrow path and preserve the employment gains that we've made, because we've drawn a lot of new people into the labour market during this period, people who were previously unattached to the labour market. And we hope that they will remain in the labour market and develop higher productivity and greater skills over time.
and something that hasn't been seen for a long time. When you refer to, the 1960s as a point of reference, that is a pretty significant intergenerational shift that we should, I think, be very proud of and seek to maintain as much as possible. What's been driving this higher participation rate that you referred to, Ms. Redmond, here in Australia?
Yeah, a mix of factors. We were talking a lot about the care economy before. That could be that people have been released from those informal care responsibilities and entering the workforce. We've seen trends within age and sex cohorts where prime age women are participating at higher rates than before. Migration actually usually has a positive impact on participation. They're a younger population structure. We've also seen lifts within age-sex cohorts as well. And then cyclically, when you have a strong labour market, you have an encouraged worker effect, so you might draw people into the labour market through that avenue. And it's Sorry,
what was the encouraged worker?
Yes, it's probably economic jargon for you, but it's just that they see their employment prospects as potentially better than they would be during a sort of a down period of the economy.
So that's actually a very important phrase, because it's a currency of hope for people, isn't it? So
you could call
this is economics and it's pretty dry, but in the end, this is, as it pertains to people, is what we're here to talk about. So,
in short, Senator, when someone observes colleagues, friends, family accessing the labour market and finding new jobs, they're more likely to go into the labour market themselves and seek those opportunities. So you tend to see, when the unemployment rate is falling, an increase in the participation rate as more people seek employment from outside the labour force.
Fantastic. We've got that participation rate, and we've just been talking about the figures, and comparatively doing much better than like countries. How does this participation rate compare to our historic level of participation rate? Do you have like a longitudinal dimension?
So you mean historically?
Historically, participation rate, not just employment.
I think we're actually close to, we're reasonably high rates of participation in the labour force at the moment. I wanted to add one other factor there. In terms of, with the NDIS, there are a lot of people who are doing work that wasn't recognised and are now being recognised for that work, and a lot of that's particularly women who were at home looking after other people. So obviously that recognition is now coming through, and that's being reflected in the labour force as well. So that's now being recorded. But the participation rate at the moment is about 70. It's a 67.2, and it's historically quite high, and that's in line with what we've seen with the employment to population ratio, which last month recorded an equal high, 64.4%.
Okay, that's good to hear. Now, annual real wage growth is obviously pretty important for people. So what are real wages growing in an annual sense again, and how many quarters have you recorded this annual growth?
So annual, in real terms, using the WPI, real wage growth has been about 0.3%. Up to the June quarter. We will get the September quarter read a bit later when we get the September quarter WPI. It's kind of zigzagged a bit, but we started recording an increase in the December quarter, so that's 3 quarters in a row.
Okay, so all signs that we're heading in the right direction.
Yeah. Well, some might see that, but yes, it's a positive outcome that we've got some real wage growth.
Yeah, fantastic. Thank you very much, Chair.
Just on a similar point that I made, Chair, it will not take very long.
I was just told by the Deputy Chair that there were no further questions, so is this just one question? Senator Smith?
True that we're seeing, it's true that part-time employment growth is now outpacing full-time employment growth. Is that true?
That is true. So at the moment, growth in part-time employment is growing faster than full-time. I would add that the growth in full-time employment has started to pick up as part-time employment has started to slow.
And on notice, could you just let us know at what particular point did part-time employment start to outpace full-time, or if you can tell us that now?
Just based on the graph I've got here, I would say roughly middle of last year.
Middle of last year. Okay, thanks very much.
Thank you, Senator Smith. That concludes the questions that we have for Treasury Macro Group, International and Foreign Investment. Thank you very much for answering our questions. You go with our thanks. And we will now move to Department of Treasury, Small Business, Housing, Corporate and Law Group and National Housing Supply and Affordability Council. Take a brief suspension while officials come to the table. The committee resumes and we welcome Treasury, Small Business, Housing, Corporate and Law Group and National Housing Supply and Affordability Council. Welcome Ms Anderson and team and welcome Ms Lloyd Hurwitz. I think this is your first appearance before us, so welcome. Did you have an opening statement that you wish to give? Everyone's happy to proceed straight to questions?
Yes, we are, thanks.
Deputy Chair.
Yeah, thanks very much. How many houses will be built in Australia this year?
Senator Victoria Anderson, Deputy Secretary, Small Business, Housing, Corporate and Law Group. Are you talking about housing construction figures or...
How many completions?
How many completions? I might ask Ms Crosswaite and Mr Dowie to come to the table on that point.
Karen Crosswaite, First Assistant Secretary, Housing Division. We anticipate that somewhere between 160,000 and 170,000 completions would occur this year.
160 to 170?
Correct.
And how many were built 5-6 years ago?
Mr Dowie has the answer to that question. Apologies.
I can answer that question. The last 10 years' average was 194,000.
The last 10 years was 194,000?
Average.
Okay, so we're on the downward trajectory. We're building fewer houses than we have on average over the last 10 years.
As colleagues in the earlier session provided evidence, that was off a peak of around 200,000 in 2018.
How many?
200,000, I believe, was the figure.
Might be a bit more than that. Okay. Because it appears to me that we're building about 160,000, which is your evidence, which is about the same amount that we built in 1989 when the population was about 17 million. So we're in a pretty bad way, aren't we, on supply?
Which is why we're trying to do everything on supply.
Well, I'm glad you've answered that. I'm very pleased to hear from you, Minister, because you've been very quiet on these issues.
Not really. I mean, I allow... We've got very capable and competent officials that speak to the detail of your question, but the broader political point is, yes, there is an issue around supply of housing, which is why the Commonwealth is so heavily invested in driving an increased supply of housing.
Well, I'm really pleased that you've come into this part of the estimate session, Minister, because... Of course I am, because I enjoy our exchanges.
Well, I'm here for the whole lot. Like, I don't really have a choice to come in and out.
I appreciate your...
I am here.
I appreciate your contributions very much, as you know. And I think it was interesting to hear that evidence from the official that over 200,000 houses were built just 6 years ago under the coalition. And despite this government, now having had 2.5 long years, we're down to 160,000 houses. So you'd have to say, Minister, the supply policy hasn't been too flash, has it?
This is not a issue, as much as you would like to present it as such, that everything went swimmingly under you and then the Albanese government was elected and now there's issues in the housing market. That's simply an incorrect analysis of the complexity of the housing system in Australia. And I don't believe there is any government that has done as much as we have done in 2 years to provide investments and work with the states and territories to relieve some of the blockages on the supply of housing in the country.
But we're going backwards, Minister. We've gone from over 200,000 to 160,000, right? Or are you disputing those figures?
I'm just looking for the figures. I don't necessarily dispute the fact that there is, we've certainly in the last year or so seen pressure on the delivery of supply, which is why we are focusing on,
going backwards.
Again, unblocking some of the barriers that we're told are preventing that through, for example, agreements with the states and territories.
Okay, well, we're going backwards. That's what the numbers show. So let's go through your supply policies, because I think everyone agrees that supply is crucial. So how many houses has the Housing Australia Future Fund built?
I'm just looking for the number because we've got the first round that has gone out.
So the Housing Australia Future Fund, Senator, round 1 closed recently, and those successful proponents are currently in discussions with Housing Australia, who are appearing later today. So we do expect some houses to come online this year and this financial year.
Sorry.
But it's only just run, Senator. The process has only just been held.
So the answer is 0.
The answer is there are significant numbers in the pipeline from the Housing Australia Future Fund, which is one, I might just finish, it is one element of the government's supply policy. So it is social and affordable housing. It's really clear, Senator, that the overall supply problem in terms of the 1.2 million target and other things that governments have agreed to will require significant uplift from the private sector. The HAF is one element of the government's approach.
I understand, Ms. Anderson,
the government has directly supported more than 10,000 homes that have been built since we came into government through Social Housing Accelerator program, through new builds under the Home Guarantee Scheme and through Housing Australia's bond aggregator. There are more homes to come, more than 20,000 are in the pipeline through direct Commonwealth investment, including 13,700 under round 1 of the Housing Australia Future Fund.
But the answer so far is this Housing Australia Future Fund has built 0 houses so far.
Well, I've just given you some figures. I know, you don't like them, do you?
No, I'm very happy to hear
them.
the truthful answers.
Well,
but I'm trying to get to the bottom of what is the position right now. And my understanding is the answer is 0.
Well, the round has just been determined because the bill was delayed in the Senate. Remember, you opposed the bill.
You've been in government for a long time.
So now you're complaining about a bill you opposed that we couldn't get through the Senate.
You have spent billions of dollars on housing bureaucracy which build no houses.
Ultimate hypocrisy. The bill you don't support hasn't delivered enough housing soon enough for you, even though you don't support
bureaucracy, you get fewer houses than you did before. We built more houses with fewer bureaucracies. Isn't that the point?
Oh, right.
We can go back.
Getting some images of Ms. Sukar and that of outbuilding houses, which didn't happen, of course. Didn't happen.
No.
We're dealing with different economic circumstances and issues that have built up over years.
More houses. You inherited more houses. 200,000 houses a year under us, and under you, 160,000 houses.
And you are aware...
That's less.
Okay.
200,000 is more, right? So
and you're opposing the measures to actually try and deal with it, yet you're criticising the fact that they're not happening fast enough. I'm trying to get my head around it too.
What I'm trying to get to the bottom of, Chair, is how many houses has this fund been able to build as it stands today. And my understanding is that there have been commitments to spend money, but no actual houses built so far.
Well,
is that right or wrong?
yes, we have confirmed that round
Okay, fine.
one has
Can I ask you about round one then?
Round one has just closed. So if you're trying to suggest that between, or been approved, so between those being approved in the last month and how many houses have been built from that? I mean, are you seriously suggesting in the last month that houses should have been
No, you've been in government for 2.5 years. You've had 2.5 years.
No, hang on. Has the HAF been operational for 2.5 years, Senator Bragg?
Well, it's spent a lot of money on executive salaries.
So don't sit there and just spout mistruths, all right?
It's spent millions on bureaucracy. So let me ask you about round one then. So round one was announced by Minister Claire O'Neill on 16 September 2024. Is that right?
I don't have that media release, but it was around then.
I'll ask Ms Anderson. Is that right that Ms O'Neill, Minister O'Neill, announced the Albanese government green lights most social and affordable housing in a decade on 16 September 2024? Is that right?
Yes.
Okay. And in this statement it says that the government's going to provide for 13,000 new houses.
Yeah, I think in excess of 13,700.
So where is the detail of this announcement? Who's actually going to get the money?
So Housing Australia is currently working through the process to come to contractual close with those proponents who are successful. As you would imagine, like that is going to take a little bit of time for 185 projects. So they are appearing later today. I'm sure they would be able to give you an update of where they're at in assessing, or not assessing, in working through to financial close for those projects.
So it's been announced, but there's been no formalisation of the housing arrangements.
So the proponents have been selected by the Housing Australia Board, and then the next step is to move those to a financial close.
This is my point. More announcements, more media, but no houses.
Rubbish, because there's a proper
media,
process.
Media, no houses.
There's a proper process.
No shovels. Where are the shovels?
Is there a question in that? What was that?
I'm wondering
what was that?
Okay, well,
he's entertaining himself at this point.
When will the first house be built?
Well, that's dependent on these agreements being finalised.
Well, ask Housing Australia later.
They are. There is a formal process, as you would expect. Okay. As you would expect when it comes to use of taxpayer dollars. I would think if there wasn't and proper process wasn't being followed, you would be critical of that as well.
And it's delay that's brought on
by
your decisions of your party, so you need to accept responsibility.
Is that a question?
All right.
Inconvenient.
So that's Housing Australia's first supply policy. The next supply policy is the build to rent, isn't it, Minister?
That is a component. Yep.
Yeah, and that's what's that? Who's that going to give a tax cut to? The build to rent policy.
I might ask Ms Crosswaite to talk a little bit about the build to rent policy.
I just want to know which institutions would be getting a tax cut.
Yeah. So the changes that are currently before the Parliament for build to rent would provide tax concessions to foreign investors who would be investing in build to rent housing.
What sort of foreign investors do you think would be wanting to build houses in Australia that Australians can never own?
So the idea, Senator, is...
Fabulous policy, by the way.
So the idea, it is a well-established sector overseas in terms of the build-to-rent sector. The idea is to stimulate capital and liquidity into the Australian sector, and that then hopefully will stimulate housing that supplies better rental opportunities for Australians and better purchasing opportunities for Australians. So that is the idea behind it. In terms of the build-to-rent...
But what sort of fund managers do you think would be open to doing it?
I'm not sure, Senator. That's something probably our revenue group colleagues, they're leading this policy.
This is not your policy? Isn't this a housing policy?
It's a housing, well, yes, it's a housing policy, but it's a revenue measure, so it's led in Treasury by revenue group.
Hang on, sorry, is this a supply policy?
It's a revenue group measure. I'm not saying it's raising revenue, but it is around the taxation system.
What I'm trying to do in this session is to work out what exactly is the government supply policy. Because there's bits and pieces of legislation, there's bureaucracies, there's different parts coming today. I'm trying to, in a coherent way, understand and educate myself what exactly is the government's housing supply policy.
Is ready to answer the question about the government's supply policies.
So the build to rent policy, you're not sure who would want to get these tax cuts to build these houses for perpetual
I'm saying I'm not sure. It doesn't mean the government is not sure. It's just not the relevant part.
So we have to ask another Treasury official about that?
Yes.
Okay.
Ms Anderson has said she can take us through the supply policies.
Well, I think that is one, and I'm wanting to know a particular question, Chair, which is about what type of investors might want to avail themselves of these tax breaks.
You don't want her to answer your question about what are the supply policies.
But my question is about which type of investors.
So I'm confused. Would you like me to work through the government's supply policies, Senator? Because build to rent is one of many policies in play at the moment, and I take you at your word that you're confused about the policies. I'm happy to work them through.
No. So I want to know what type of investors would be wanting to avail themselves of this tax break.
Well,
you can ask that of the relevant group.
Okay, let's move to the next one then. So what about the housing targets? Is that a good one for Ms Lloyd-Hurwitz?
So it's it's a national cabinet target, so we can answer questions about that. The Housing Council has a specific role in assessing the suitability of the target, so Ms Lloyd-Hurwitz could go to that issue.
Can I ask you then, so what is the target and how are we tracking towards the target?
Thank you, Senator. The target is 1.2 million new homes over the period of the Accord, which is 5 years. And the modelling that the Council has done and released publicly earlier this year suggests that we're looking at 943,000 over that period, so 260,000 short.
So 260,000 short. When was that modelling released?
That was released in April this year.
Okay, so it's quite a big gap, isn't there?
It is certainly a gap that needs to be addressed, and our expectations would be that as policies get put in place over the period of that 5 years, that number will continue to change. But as things stand now, that's the forecast of the Council.
So obviously that number we discussed before in detail about the 200,000 going down to 160,000, that clearly needs to go up towards 250,000, doesn't it?
240,000, Senator.
Right, so that's a big correction that's needed.
Correct.
Okay. Are there any other supply policies you would like to?
There's the new homes bonus with the states and territories. There's the housing support program. There's the social housing accelerator. There's work that's being done around urban precinct or infrastructure through the infrastructure department. There's we can sit here. So I think you actually know about them. You just are wanting to sit here and poke fun at them.
Explain in a cogent way all the different supply measures you've got.
Senator, can I please provide something that might be helpful? The National Housing Accord is probably the overarching supply policy that brings all of this together. So what that does is it's an agreement between the Commonwealth, state and territory governments, industry and investors and local government, which provides a range of actions that all of those parties have committed to, including some of the ones that we've just described around Commonwealth actions. But what that is it acknowledges that in order to achieve the housing supply targets and to increase housing supply to the degree necessary, it is going to require actions in all of those parts of the system. So whilst there are actions that are specifically for the Commonwealth, there are those that are appropriately to be taken by states and territories and others.
So in terms of the Accord, what about these? I think the Accord was announced back in 2022, wasn't it, Minister? Yep, and I believe that there was was it in the 22-23 budget, there was provision made for availability payments? Is that what they're called, availability payments?
Yeah, Senator, so that was for the provision of 10,000 affordable homes, which have been committed to under the Accord by the Commonwealth.
Okay, and this is, how much money is that? Is it 140 mil?
I would need to check that. Mr Donovan might have that evidence.
This was, of course, after you'd abolished NRAS and essentially withdrawn.
We built more houses than you, a lot more houses.
Not social.
You're going backwards.
No.
Your supply policy is a mess.
No. Part of the
so
issue
spare me
that
the
we've got
politics.
here, part of the issue we've got here is that there's been no investment in social or affordable housing.
We built way more houses than you.
Because you got rid of the only program the Commonwealth was involved in that.
Built more houses. That's the key test of a supply policy. Hello, Mr Donovan. I believe you're going to tell us how much money's been set aside for availability payments?
So, Senator, I don't have those previous budget papers with me, but
Okay.
I think we can take that on notice and
Take it on
answer.
notice then. Great, thanks for that. So I'm looking at an extract from a budget paper from, I think it's 22-23, which says that it was going to be 70 mil in 24-25 and 70 mil in 25-26. So these availability payments, it says, will be paid to institutional investors, including super funds. So how much of this money has gone out the door to the institutions and the super funds?
So, Senator, the process to allocate funding under the Accord is linked to the process with the HAF. So, Deputy Secretary Anderson mentioned a moment ago that the HAF Round 1 and the Accord Round 1 process were recently concluded, with 13,742 dwellings progressing through to the next phase, which are now being moved to contractual close by Housing Australia, and at that point final availability payments for both programs will be set for round 1.
So how much of that money has been spent?
So that money has been budgeted but has not yet gone to proponents because we will need to achieve contractual close before it will be spent.
Fair enough.
Yep.
And how is the money paid? Is it paid to the institutions or is it paid to the consortiums?
So, Senator, there are a range of eligible project proponents under the HAF and the Accord. They're named in the subordinate legislation. They include the community housing providers and then some special purpose vehicles, which would comprise community housing providers and their investing partners in cases where that's relevant.
Funds, right?
So we don't have visibility at this point because those are still proceeding to contractual close, but that is where investors could come in with equity or debt investments to support the construction of those dwellings, and the availability payments go towards bridging the viability gap for social and affordable housing, because those types of dwellings involve discounted rent. In affordable dwellings, that rent is at below 75% of market rent. For social dwellings, it's at usually 30% of a person's income.
Yep.
Because that's below market rent, those availability payments go towards the costs of proponents making those dwellings available to individuals to rent them at discounted levels.
Yeah, and it could flow through to the consortium of investors.
So
that's the idea of it, right? That's what it says in the budget papers.
So, Senator, I think it's fair to say that the availability
It's designed
payments,
to facilitate institutional investment in housing.
So,
isn't it?
I think the primary purpose is
Or is
not
the budget
to facilitate
wrong?
institutional investment. It's
Yeah.
to increase the supply
Well,
of
let
social
me
and
just read
affordable
it to you
housing.
then. I'll read you out what the budget paper says. The Commonwealth will include availability payments over the longer term to facilitate institutional investment, my mistake, including by superannuation funds in affordable homes. So it is designed to do that.
So it is designed to supply more social and affordable homes, and the way in which the government and the scheme is designed to do that is by attracting investment, which has been missing from the sector.
Yeah, by institutions.
Yes.
Yeah, institutions.
And like there's a range of bodies that I think might find it worthwhile.
So
States and territories.
let's just try and. I don't want to waste any more time on going around circles on this.
Do you, when you get them?
No, but I mean that's the answer. Is it's designed to help institutions.
The super funds. You're just obsessed.
I know you love them. You love them. They're your best friends. I know you like them.
Well, I wouldn't.
Well, I was
pay
about to
that
wind
way,
up.
but I do pay your
on this part of
okay. Complete obsession with them.
Senator Brett,
it may be super funds. It may be community housing providers. It may be state and territory governments. It may be all three. Who knows?
Thank you. I have another question about supply. So we heard from Ms. Lloyd Hurwitz that you are hundreds of thousands of houses short on the supply target. The HAF hasn't built any actual homes yet. And the build-to-rent scheme, will you bring that on for a vote in Parliament, Minister?
Well, we've got Help to Buy that we're trying to get through.
That's a demand-side measure.
I think we are ready to go on build-to-rent. I'd have to have a look at the legislation program.
Okay, and you think it's a good idea still?
Yeah, I think the Commonwealth should be doing whatever it can to improve the housing market. Definitely.
Even if it means...
And I would say, because I've just got some
But do you think BlackRock and Vanguard and foreign governments should be major investors in housing?
In the last
Australians
12
can never own?
months of your government, there was 176,000 homes built.
Yeah, more than your government.
No, in the last 12 months of this government, 176,000. So the decline started, like in so many areas that we inherited, from failure of the previous Commonwealth administration, just for the record.
Okay, I'll have some more questions, but thank you for that.
Okay. Senator Rennick's told me he's just got one question. Yeah. And then I'll go to you, Senator McKim. Okay.
Just in regards to the whole housing fund, etc. I mean, are you planning to build 6,000 houses over the next 5 years, like per year, so 30,000 houses? Wouldn't it just be simpler to lower the immigration rate, not create a whole new department, not risk the $10 billion and attract give tax incentives to foreign investors? Wouldn't it just be easy to lower the immigration rate and simplify everything?
Well, I think that's quite complex, because if you lower the immigration rate, you will have less of a workforce to build houses as well. Like there is a balance here, and as well as less labour supply to other important parts of the economy. So,
but 50% of the immigration is foreign students. They're not building houses. They're at university.
That's right, and there are different segments of the migration intake put pressure on different parts of infrastructure and housing across the country. Students have a different sort of profile to others as well. So I think we need more houses no matter what, to be honest, and the government's supply side initiatives are designed to stimulate that action, noting that a lot of these belong to the states and territories. But I think there is a careful balance to be struck around migration and the benefits that it brings, and the pressure that it no doubt brings as well.
But I'd argue that it'd be easy. Anyway, I'll just leave it at that. Thanks, Chair.
Senator McKim, just 5 minutes and then we'll go to a scheduled break. Thank you. Senator McKim.
Got some questions about the Small Business Energy Incentive Scheme. It was announced as a budget measure that it would spend $314 million in the last financial year. How much was spent?
I might pass to my colleagues in Small and Family Business Division, Senator.
Thank you.
Kylie Burke, Assistant Secretary, Small Business Policy Branch. That measure ended at the end of June this year.
Yeah, that's right. So we tried to extend it by another year, but the government wouldn't have it. So how much was spent?
I don't have those numbers in front of me, Senator. I'll have to...
Yeah, no, I think we'll take that on notice, but we'll see if we can get back to you before the end of the day or the hearing.
All right. Well, would it be fair to say that little or no advertising or awareness raising if the scheme was undertaken?
Which measure are we talking about?
Small Business Energy Incentive Scheme.
Right.
So it was budgeted for $314 million. Interested to see whether you got 10% of that or not. I mean, what advertising or awareness raising in regards to that scheme was undertaken by either the department or by the government?
Senator, sorry, and I forgot to introduce myself, Anthony Seaback, First Assistant Secretary, Small and Family Business Division. Senator, as I flagged before, we'll have to take that one on notice. So I'll come back to you as soon as I can with expenditure and whether and what anything was done in relation to advertising and education.
All right, thanks. Well, so the reason I'm asking is the legislation only passed a couple of months before the financial year ended.
This is the instant asset write-off.
The Small Business Energy Incentive Scheme.
Yeah, I think that's what it is.
The legislation only passed a couple of months before the financial year ended. We tried to extend it by a year by amendment in the Senate. That was opposed by the government.
I think it is Wednesday.
We warned that this would not be anywhere near fully subscribed. And I'm surprised that with a $314 million scheme, no one can tell me how much was spent. Anyway, there we find ourselves. our view is the scheme was more about greenwashing than it ever was rolling out effective programs to reduce emissions.
Also, Revenue Group might be able to help.
All right, well, I'm happy to ask them there. Could you also take on notice, please, because I presume you won't be able to answer what happens to any unspent part of that scheme, and also whether you're able to quantify any emissions reductions from that program, if you could take those on notice.
We'll take those on notice.
I mean, I think I'm still confused about whether we're talking about the instant asset write-off or you're not talking about the energy bill rebates to small business, are you?
No.
They would pay.
Can I just be clear? Oh, just because the minister's raised it, just for clarity, it's not the instant asset write-off, but they were in the same legislation. They're in the same bill, but it's not the same scheme, not the same program.
Yep. Senator McKim, that just seems like a natural break in your questions.
We'll see if we can find anything more for you.
Thank you.
And so the committee will take its 10-minute break and resume at 3:20.
Thank you.
The committee resumes with Treasury, Small Business Housing, Corporate and Law Group, National Housing Supply and Affordability Council, and I call Senator Kovacic.
Thank you. Thank you. Deputy Secretary, I'd like to take you to the number of business insolvencies collected and published by ASIC. Is this something that Treasury has been watching particularly closely?
Yes, Senator, it is.
And what are your, what have you been able to sort of glean from that data?
So in a level sense, there's obviously been an increase in corporate insolvencies. Obviously, business-related personal insolvencies are also very relevant to small business because many small businesses are single operators or very, very small businesses. So we watch both the corporate insolvency data and the personal insolvency data. In a level sense, that has increased. In a proportion of total businesses, it's not the highest ever, but it's still something we're watching quite closely.
So you speak about it not being the highest ever. So the data that we see in relation to insolvencies, and I know that the Prime Minister on the weekend also noted that the past few years have been very difficult and small businesses have done it hard. The data suggests that you know, we've had some 12,191 insolvencies in the past year. Do you have any comment to make on that?
Yes, so as I said, that's in a level sense, and that is high, so I'm not diminishing it. It's something we are watching. I think I've also seen some reporting that is the highest ever. In a level sense, that's true, but of course the number of companies grows. So in a proportion sense, whilst it's high, I think it's not the highest ever. But again, it's kind of irrelevant to us. We are watching it. It is important for us to watch it and to think about the things that might be contributing to that higher level of insolvency.
So when you speak to a level sense, you mean in terms of physical numbers, right?
That's right.
So
yes.
On that basis, was the 24 financial year the worst financial year on record for insolvencies?
I might ask Mr Seaback to make sure I've got my numbers correct. In a level sense, yes. In a proportion sense, which is actually what we would pay attention to if we're using that kind of a statement, it is not. But Mr Seaback.
Thank you. So I'll just deal with corporate insolvency and business personal related insolvency just to make sure we cover the field. So while the total in 23-24 for corporate insolvencies was slightly higher than prior peaks seen in 2011-12 and 2012-13, it is proportionately smaller given the higher number of companies in Australia in 2023-24, so that's for corporate insolvencies. According to the Australian Financial Security Authority, the level of business-related personal insolvencies has increased over the 2023-24 financial year, but it does remain substantially lower than pre-COVID levels. So it is something, as Ms Anderson said, that we monitor closely. But at this time, there is, I guess, nothing particularly anomalous about the figures that we're seeing based on historical trends.
So let me get that straight. So the level numbers, which are record level numbers,
for corporate insolvency?
Yeah, well, yes. So you're saying that they're not alarming to you guys at all? They're not something that you see as being problematic at all, because you're saying even though there are record numbers, because there are more businesses, it doesn't really matter?
It is consistent with what you would see for that number of companies at any point in time.
So it's unremarkable in the view of Treasury.
I think, as the Governor, and you could ask this of her tomorrow, but there's a statement she gave recently, the Standing Committee on Economics, where she said, if you take it as a proportion of the number of businesses which is growing over time, it's not at historical highs. And if you look at the trend of insolvencies over time, we're not even back to where we were trend-wise pre-pandemic. So I think there's just some important context. But of course, Treasury have already said it is something that they watch and monitor.
Okay. And aside from watching and monitoring, has there been any engagement with the Small Business Minister in relation to those record levels of insolvencies in terms of those level figures?
Well, the Small Business Minister is a Minister of the Treasury portfolio, so yes, there would be.
Yes, we would keep the Minister updated on any relevant matters, including, like we do provide advice from time to time about significant data releases, whether it's a private sector data release or an ABS data release that tells us something about the small business or the conditions affecting small businesses. So yes, we would provide that from time to time.
Has Treasury been tasked by the Small Business Minister to respond specifically to these record insolvencies?
Well, I mean, we do that through the measures, particularly, I guess in our close working relationships with the small business sector. The Minister's always consulting and listening to issues and support that we can provide to assist them.
But my question is specifically, has the Small Business Minister tasked Treasury to look into this with particular policy options to manage that situation? I mean, there were, 11,053 business insolvencies in the 24 financial year. These are some really alarming numbers. Businesses are closing down. People are losing their jobs, families are losing their homes. These are businesses that, in the 47th Parliament, 23,645 businesses have closed their doors in Australia. So I'm trying to understand what the level of concern is in government, particularly with the Small Business Minister. It's one thing to say, we're worried and we're consulting, but what is actually happening in relation to these alarming statistics?
So I might ask Mr Seaback to talk that through, but I think this is not something that we've just started monitoring. It's something, obviously, post-COVID, there was an increase in insolvencies, given creditors started calling in debts that were otherwise not being called in. So it is something we've been watching. I would say the best answer I have to that question is the small business statement, which was released in budget. So there were three main elements to that. The first was easing pressure on small businesses, the second was supporting growth, and the third was levelling the playing field. So there are a range of policies that were sort of implemented through that small business statement that go to easing pressure, which partly goes to the insolvency issue and a range of other factors affecting small business as well. So we can go through those if you like, but that's broadly where we have invested effort based on the assessment of what small business needs at the moment and some of the pressures that they're facing.
I guess what I'm trying to get an understanding of is the level of concern in government and with the Small Business Minister as to these numbers. Australian small businesses want to know if the same alarm bells are ringing, in the corridors of government as they are in the main street of Australian centres where businesses are closing down. When we go for a walk, we can see that shops are closed, for lease signs are up, retail and hospitality. It's very difficult to get a tradesperson. Construction businesses lead these figures in New South Wales, followed by hospitality and retail. These are really significant numbers. So what we're trying to understand, are these alarm bells being rung in the corridors of government, and to that end, has Treasury briefed the Small Business Minister specifically on these issues, and has Treasury briefed the Prime Minister's office, and what are the outcomes of those briefings?
I won't go into the details of briefings, but yes, we've briefed the Small Business Minister, and usually it would be her office or herself that talked to the Prime Minister about these matters, unless they were the subject of a specific matter before Cabinet or something else. But the short answer to your question is yes, we are not ignoring this issue. We are also keen to ensure it's put in an historical context, and some of the factors that might be contributing to that are brought to bear in how we're thinking about these things. So, we're trying not to be alarmist, but we also understand the points you've made about the genuine pressure people are feeling, particularly some of the particularly small business owners. So, I think, and a lot of that advice and analysis did lead to those government budget measures that I mentioned before. So I think that is the main place we're investing, and some of those are still ongoing and being implemented, like looking at payment times, for example. There's major reform there. We have some reviews underway that are significant as well. So there's a range of things, both in terms of looking at the safety nets for small businesses, in terms of mental and financial wellbeing, through to sort of supporting growth, which is also an important element for small businesses as well. There's still opportunity there. So we need to look at both sides of the coin.
And I should say that the ABS data shows that from 30th of June 2023 to 30th of June 2024, there was a net increase of over 69,000 businesses with 0 to 19 employees. So that would be the creation of over 69,000 businesses over that financial year.
Respectfully, Minister, I don't think it assists the small business owners who've had to close down their businesses to point to new businesses that have opened.
Unfortunately, are, they occur.
They're occurring at record
any
rates
government
under your
at
government.
any time, and we've already been through the fact that that the proportion of insolvencies is not at the highest level. So I think we just need, we accept that there are businesses that are doing it and finding these circumstances really hard, which is why the Small Business Minister has been so focused on making sure that we have a range of measures that can support, including through our energy bill rebates and others. But it's also important to see that there has been, businesses open during this time as well. A lot of them, 69,000.
So just last question, Senator Kovacic.
Thank you. I want to get a clear understanding of whether there is any policy directive or any specific direction or directive being given by the Minister to Treasury to deal with or to attempt to manage or mitigate the record insolvencies, particularly in construction.
We don't
retail.
have record
I haven't finished my
insolvencies.
question. Yes, we do. We have record numbers of insolvencies.
No.
The data shows that we have record numbers of insolvencies.
Not as a proportion of overall businesses. So I just want to be factually correct here.
I haven't finished my question, so I think, Chair, if I could have the courtesy of completing my question.
Ask your question.
Please. Thank you.
It needs to be accurate, though. I think the Minister's already corrected your characterisation on 3 occasions that I've counted.
Thank you. I'm able to ask my own questions.
Yeah, truthfully.
You have the call, Senator Kovacic.
Thank you. I'd appreciate the courtesy to complete the question. So, to begin again, I would like to get an understanding. The data suggests that there are record numbers of level insolvencies in Australia at the moment. Record numbers since, I'll just make sure I get it correct so there is no confusion in relation to it. Record numbers of insolvencies as reported by ASIC. Has the Minister given any particular directive in relation to how to manage this or point to the urgency of the problem and how to manage the problem, particularly given the key numbers are in hospitality, construction and retail, and construction is required for the building of houses in the current housing crisis that we have?
So yes, ministers don't go around giving directives, as I understand it. I haven't given a directive. I work with my department as Minister Collins would work with her department on all issues that are raised in the portfolio. And of course it is about what could the government do to provide assistance. That is, that's her whole job.
But
So
what
yes.
has been done in that whole job since the budget
measures
in
that we've
relation
put
to
in
record
place,
insolvencies?
the measures that we've put in place to support small business,
which are?
We went through a couple of them.
So
there's the instant asset write-off. There's the new energy scheme that we were just talking about before, which we have an answer for you on. There's the energy bill rebates that have been put in place. There's the payment times work, which has always been an area where small business have raised concerns with us. There's the cyber wardens program to make sure that we're supporting them with the cyber resilience services that have been, has always again been raised as a real area. I could go on. There's a review of the franchising code.
I'll have to share.
It does.
I know I'll have to share the call as well.
So is there an area that you, if that doesn't address pressures in small business, which are the main issues that have been raised with us by small business, what is it that you are after from government?
I'm after an understanding of what the Small Business Minister has done since the record insolvency numbers have come out in order to address it and to see whether any urgency has been placed on the record insolvencies or not. Or do we think it's fine, there aren't any problems out there?
No, we've already answered that. We've already answered that. So the reality is proportionately, insolvencies are not a record high, nor have they returned to the trend levels of pre-pandemic times. That's the first fact. 69,000 new businesses have opened during this time, and I've gone through a range of the measures that the Small Business Minister has put in place to respond directly to concerns that have been raised with her by small business.
So all in the budget, but nothing since the records were broken.
Okay, thank you, Senator Kovacic.
Well, it wasn't broken in one day.
No, they've been...
Thank you.
Nor was it broken.
Oh,
but it didn't happen in one day. Like this, the small business engage with government all the time about issues that are affecting them. It's not like there's one number that comes out and goes, oh my goodness, this is a number, now you have to do something completely different. That's not how it works. And so all of those measures that we've been put in place, and the ones I read out from were really over the last 2 budgets, was all about responding to small business concerns that have been raised with the government. So that is the Minister doing the job that she needs to do in representing her stakeholders.
Senator Bragg.
Yeah, thanks very much. I want to take the Minister's invitation to traverse superannuation and housing issues. Now, there was a quote from the Minister, Ms O'Neill, on 7:30, the TV program, on 16 September this year. And the Minister said, quote, so just quickly, super funds here in Australia are very invested in this model of housing overseas, but they're not investing it in Australia because our tax system basically stops them from doing it. So we're trying to address that issue. What's the Minister talking about there, do you think?
Sorry, Senator.
Senator, I believe the Minister was talking about build to rent.
So the government wants super funds to do build to rent?
The government wants institutional investors to be confident in investing in build-to-rent developments in Australia, and I believe what the Minister was talking about there was the legislation that's currently before the Parliament, which is intended to encourage foreign investors to help further develop that sector, to create that environment where Australian institutional investors would participate.
Yeah, so that was my understanding as well, Ms Crosswaite. And so the bill in the Parliament would promote the idea of, it would provide a tax cut for a fund manager, most likely, a foreign fund manager, but it wouldn't provide a tax cut for a domestic super fund, would it?
Well, no. I think there is a second element.
That's a separate measure, isn't it? So, effectively, just trying to understand. So the policy of the government is to say we do want foreign fund managers to build to rent, and we've got a tax cut for them if the Parliament would agree to that. I don't think the Parliament will agree to that, but that's the policy nonetheless. And then separately, there's a housing accord policy, which wants to promote institutional investment into housing generally, including build to rent, right?
Yes.
Is that a fair characterisation?
Yes.
Okay, so that's what she was talking about. So I guess I want to now take you to that, because there has been a lot of work behind the scenes, hasn't there, with institutions and the housing space.
So when you say a lot of work...
Well, it's not a trick question.
No.
The Department and Housing Australia have worked closely with the super funds to try and get them to become institutional investors in Australian housing. Have they not, since this government was elected?
So there have been investor roundtables that the Treasurer has convened, and there's been housing, I think, has been a feature of at least a couple of those. And there has also been... so obviously Treasury has a super policy area that would be engaging with superannuation companies all the time, institutions all the time.
That's right.
And then Housing Australia has a couple of products that superannuation institutions may wish to invest in on behalf of their members. But that is a matter for them. I guess that's fine. As a suite, yes, there's been some work.
There's been a lot of measures. So let's go to the National Supply and Affordability Council, which is chaired by Miss Lloyd Hurwitz. So now this council was established by this government, was it not?
That's right.
Mm-hmm. Yeah, and it's not an act of Parliament. It's been established through administrative arrangements. Is that right?
No, it's an act of Parliament.
It's an act of Parliament, is it?
Correct.
Okay. And one of the first reports we did was barriers to institutional investment.
That was the interim council last year, yes.
Yep, and was that commissioned by a minister?
I believe it was part of the Accord commitments that the Commonwealth made, that they would commission this report from the interim National Housing Supply and Affordability Council, yes.
It's commissioned by the government of the day?
Yeah.
By the minister, or would that have been
it was within the Accord. I think it was technically the Treasurer, I think, who was the proponent of the Accord.
Nicholas Dowie, the Assistant Secretary of the Housing Strategy Branch. I can confirm that report was commissioned by the Minister for Housing.
Minister who?
Minister Collins at the time.
Okay. Apparently the report says institutional investment in housing typically refers to equity finance invested by institutional investors in a collection of related dwellings to provide rental services at scale. It stands in contrast to the single dwelling provided by the individual. And then recommendation 11 of this report, well, maybe there's 11 recommendations rather, which would promote institutional investment. Are these recommendations, have these been embraced by the executive?
So those that report is being considered by government.
Being considered by government, so it's under consideration.
That's right.
Hasn't been responded to?
No, not yet.
Minister, do you think it's a good idea to get more institutional investors in place of individual people owning houses?
I think we need a range of solutions.
So you're quite open-minded to this report? Okay. So that is useful, thank you. Now, I want to go to this annoying point of detail, but it is a bit of an integrity issue. So there was I'll have to sort of walk you through this if you don't mind, but so there was a Freedom of Information request seeking all communications with CBUS Super since the last election in relation to these housing matters.
I think we've covered this in previous estimates.
No, we haven't actually. We did debate it in the chamber because there was an order of the Senate requiring you to explain what happened.
Yeah, right. I think you have raised it in previous Senate in estimates.
Well, not
with this info.
Not with this latest information. So I guess what I'm trying to work out is, I'm interested in what the department has to say about this. So effectively there was an FOI filed. The Treasurer's Office said, we're not going to give you the information about the correspondence with CBUS. Then the Senate had an order for production of documents, and I thank the crossbench in the Senate for supporting that order for production of documents. The Treasurer then, on 6 November 2023, files a public interest immunity claim and says the disclosure of commercial and confidence information has the potential to damage the frankness and candour of future consultation processes, and notes that CBUS is a large superannuation fund with many members, and disclosure of information would have the potential to damage their commercial affairs, contrary to the public interest. So there's an FOI and there's an OPD. Right? One's been sought as a citizen, one's been sought as a senator, if you like. PII claims made by the Treasurer. Was that claim supported by this part of Treasury?
So the orders for production of documents are usually handled by Law Division, so Erin, Ms Wells is here. But effectively we would have provided advice, I imagine, at the time around the grounds for which you might want to seek a PII to the Treasurer.
So there's a PII claim made on 6 November 2023, signed by the Treasurer. It looks like it's an electronic signature. So you know about this one?
Yes, Senator, I do. So obviously a PII claim is always for the Minister to decide, but we do provide support to ministerial officers.
Are you able to tell us any more information about this claim?
Certainly. So I'm aware of both the FOI claim and the PI claim. Obviously, they are different criteria that are applied to both. Under the FOI, there's relevant exemptions under Part 5 of the FOI Act, of which a decision maker can apply, and they often do. And then under the PPI, considerations, obviously that's a public interest test. There's an open list of guidance around the kind of considerations there in the official guide for witnesses, but that is an open list. I think it's probably being taken as common practice across successive governments that commercial in confidence or stakeholder consults that may prejudice or lead to stakeholders not giving frank and fearless advice would be common grounds that would support a PII claim.
Okay. So the Senate itself ordered the production of this document, okay, and it was resisted by the Treasurer with this PII claim. The only reason these documents were made available was because of the Information Commissioner. Okay, so the Information Commissioner said, I do not accept that the remaining material would cause detriment if it were disclosed. The remaining material does not contain specific commercial information about the fund, rather it just sets out the concerns about the operation of a particular area of superannuation regulation. So the Information Commissioner has said that the Treasurer's PII claim did not contain any commercial information.
So, no, the Information Commissioner's findings were in relation to the FOI scheme, not the PII claim.
No, but they're identical. They're seeking the same information.
The criteria are different.
They're seeking the same information.
Different criteria.
And actually,
I think you've got to be really careful, I think, because we're, on the record here, like this PII claim has been made over correspondence between CBUS and the Treasurer, okay, which was identical to the FOI, right? The FOI and OPD, same material, covers the same territory.
Yeah, I know, but
so
the
PII
Information
claim,
Commissioner doesn't have jurisdiction over
OPDs.
the Parliament.
I understand that.
Yeah.
And the point I'm trying to make is because the Information Commissioner has forced the release of these documents, we now know that they didn't contain any commercial and confidence information. So I guess what I'm trying to get to the bottom of is, and I accept your evidence, Ms Wells, that it's up for the Treasurer to make his own claims, right? He's been prepared to do that for CBUS. I think that's extraordinary, but that's his prerogative. But does the department give the Treasurer advice about this? I mean, who's made the judgment that the correspondence between CBUS and the government was commercial in confidence when it wasn't?
Well, for the FOI claim, that would be for the decision maker to make that judgment, and they would normally, as a matter of procedure, go out and consult with anyone or anyone's material that may be impacted by an FOI claim, and they would take advice from other impacted parties as to whether that's suitable for release. I'd probably also add that further, the Information Commissioner did also say specifically in that decision that decision itself on the FOI to release that document was not relevant to the public interest immunity claim. So that was specifically called out in their decision as well.
So, as you may recall, I'm not sure that's really, sorry, I mean, you answered the questions how you'd like to, but I think my question to you was, did the department provide information to the Treasurer when he was preparing this claim?
At standard practice, we normally would.
Okay. So the department's view was, Ms Anderson, that this was...
Well, they provide advice to the Treasurer. I don't think we go to the nature of that advice.
You don't want to say?
But, well, I'm just talking you through the process here, and ultimately, as all PII claims are, they're a matter for the Minister in charge of that area.
But I guess my question is, or maybe you don't want to answer, is...
We're answering all of your questions, Senator Bragg.
Did the department agree that it was commercial in confidence?
So the public interest and immunity claim was, we look at the general public interest here, and there was a decision, there were grounds for a decision that we believed that was the Treasurer's decision, not the department's, and it is with relation to the frankness and candour of consultation processes undertaken by Treasury. So we thought there were grounds. It was open to the Treasurer to make a decision, and I think it's entirely different sort of criteria that we're bringing to bear. Obviously, same documents and similar outcome in terms of what you're seeking, but I think there were grounds for that decision, and Again, I wasn't party to our advice, but I imagine that was what it said. And Ms Wells will correct me if I get any of that incorrect.
Okay, so effectively, just to step through this. So there's an effort to try and recover what correspondence has happened in secret between CBUS and the government, right? The OPD is successful, FOI happens concurrently. I appeal to the Information Commissioner as a citizen, effectively, and the Information Commissioner finds in my favour. Therefore, the document is released, and the Information Commissioner, whilst making no direct judgment about the Treasurer's PII claim, clearly a typical person would look at that and say, well, the Information Commissioner has said in his own words, or their own words, that doesn't appear to be anything commercial in confidence here, so we will now grant the release of the document, okay? That's what's happened here. I mean, it's not a very good look, is it?
Well, Senator, I think Treasury does have a responsibility to those. So looking at it one step back, away from the specifics of this situation, we do have a responsibility to ensure that any entity can provide us information in confidence if they so wish, in order to provide feedback or expert input into consultation processes. So
yeah, I understand that.
That is something we would like to protect, because I think it is very important that companies are able to do that.
Okay.
If the judgment call in this instance, you know, the Information Commissioner had a different judgment to what the original decision maker in this one had for the FOI, then
so your preference
we accept that.
Your preference would have been to conceal it?
No, my preference is definitely not to conceal it. My preference is to look out for what the public interest is in all the different circumstances. And if a company tells us they wish to seek something wish to provide us something confidentially, that is something we need to take seriously.
But can I ask you then, and I'd be grateful for your advice on this as well, Minister. I mean, were you concerned that, given CBUS is chaired by Mr Wayne Swan, who's the President of the Labor Party as well, the governing party, that it may be prudent to err on the side of transparency here rather than concealment? Minister?
Well,
Do you not think it was a bad look?
Well, I think
it's secret lobbying.
Yeah.
It's not
secret lobbying.
Ready to respond.
I think the rules are there. FOI should be applied. And ministers make decisions about PII claims. You know?
You think it was a good claim to make?
The rules should apply. The criteria should be met. And if you disagree with that, you can have an appeal, in which case you have. And the Information Commissioner has made a determination. So the system is working.
So I'll share the call. We'll go in 10-minute blocks.
Did you want to answer?
I'll go to Senator Pocock.
Can we just answer a thing we took on from Senator McKim before the break?
Sure. And Senator McKim, it was just in relation to that issue raised before the break, and apologies we didn't have a better answer at the time, but Mr Seaback can just read something that might help answer your question.
Thanks.
Thank you. Thank you, Senator. I'm not sure the answer will be exactly what you're after either.
We'll see.
But don't
talk it down.
You did spend more than 10% of it.
So I just wanted to flag that given the way our tax arrangements work, the cost of the incentive won't be known until all tax returns for the last financial year come in, and people have until May next year to do that. So once all the returns are lodged and processed, the ATO will report on the cost of the program as part of its annual statistics. If there is money left over, and these were budget forecasts only, if there is money unspent, then that will return to consolidated revenue as higher than expected tax returns receipts.
Thank you. Senator Pocock.
Thank you, Chair. I've got some questions for the National Housing Supply and Affordability Council. Both Treasury and Home Affairs have previously told me that there is no actual target for net overseas migration, only forecasts in the budget and at MyEFO. I'm keen to understand what, if any, work the Council has done or is doing looking at net overseas migration, household formation rates and housing supply.
Thank you, Senator. In the model that drove the forecast that we released in April this year in our first report, we've taken the population forecasts of the government into that model. We've done some sensitivities around those forecasts in terms of the impact to housing construction of a slightly higher or slightly lower migration, which is included in the report. And we make our own determination around household formation. And I would say that in the report that we're going to release next year in 2025, the second report, we will be significantly enhancing the way that we're looking at household formation rates, because they are very important to the number of houses that we need.
Thank you. That sounds like really good and valuable work. When it comes to net overseas migration, what impact is this having on housing?
So interestingly, we've had house price escalation in greater than income escalation in periods of high migration, periods of actually no migration, and periods of low migration. That it is not the single causal factor of what's happening in the property market. Nevertheless, a short-term spike in migration certainly does put pressure on the system.
You sort of addressed affordability there. What about availability? What have we seen there?
Well, the two are inextricably linked, because prices go up when there's scarcity of supply. And so I think, as we were talking about before, there is a balance here between thinking about the housing system, which migration is not the primary determinant of or not the primary cause of the housing crisis that we're in, and the benefits that we bring into the country through migration, including exports of student education and indeed supply of workers into the construction sector.
Does it concern you that, given the challenges we face, we have no sort of actual plan when it comes to population in Australia?
That really isn't a matter for the Housing Council to opine upon.
It wouldn't make your job a bit easier to actually work out how much housing we're going to need if you knew what the plan was when it comes to population?
I think the population forecasts are reasonably reliable, and that's why we use them directly into the model.
Okay. Given it's now well over a year since the publication of the September 2023 report, Barriers to Institutional Investment, Finance, Innovation and Innovation in Housing, do you know when we can expect to see the government's response?
I might ask Mr Dowie to come to the table, unless Ms Boswait wants to take that one. I think, while I'm just waiting for my colleague to come up, I think I just wanted to note that some of the recommendations in that report are already effectively part of the government's policy. Not all of them, but some of them have been responded to through government action. But Mr Dowie can talk to specifically when we're expecting to respond.
So a number of those recommendations relate to both the Commonwealth and the state government. So there continues to be a process of testing the appetite of state governments through the Housing and Homelessness Ministerial Council, with a view of coming to a national response to the report's 11 recommendations that cut across jurisdictional boundaries.
Thank you. It's been 14 months, and this is the biggest issue I hear from people about. When can we actually expect a response to this report?
As I say, it is being considered by various governments through that ministerial council.
You don't have a timeline, like a goal you're working towards, or is it just see how we go?
Well, we continue to try and facilitate discussion around this, and this is something that we're working through with officials to try and get an agreement on what a national response would be. It's been the subject of active conversations we've been having through that ministerial forum and the officials that sit underneath that.
Minister, it's been 14 months since a report into the barriers to institutional investment, finance and innovation in housing. It seems like this is sort of right up the government's in line with their agenda. How come we don't see a response to a report for 14 months?
Because we are working with the states and territories on this is essentially the answer.
Sure.
You know, it's not a matter of unilateral responding, particularly when there's areas that have different, different levels of responsibility at different points of government. So it has to be worked through with the states and territories.
No, I take that point, but I'm just concerned it kind of fuels this perception that the government has been pretty slow to clock how bad housing is, and we see government move much quicker on other things that do actually require coordination.
Yeah, well, I reject. I mean, housing. We have been working on housing for the last couple of years. You know, coming at it from every different angle, including legislation, working with states and territories, working with local government, with the Housing Supply Council, with the reports that are being done. This has all been at the government's initiation. But, you know, as much as we'd like it all to be within the realms of the Commonwealth to solve some of these issues, it isn't. We have to work with different levels of government that might have different levels of priority. But we continue to work with them, and I have no doubt that Minister O'Neill will be seeking to get agreement on as much as she can, as soon as she can, with the, you know, ministers.
One of the recommendations that was targeted squarely at the Commonwealth was that the Council recommended that the Commonwealth should support the establishment of an aggregator of social and affordable housing assets. For example, by subsidising the establishment costs and ongoing administrative costs of such a vehicle. How has this been progressed?
So it's being progressed along with the consideration of the report as a whole. That is quite a significant recommendation that you've selected there, and yeah, it's still under consideration at this point in time, Senator.
Okay. On that one, given it's just Commonwealth, is there a time frame as well, or is it?
No, not specifically, but yes, we are looking at it. It's sorry, Mr. Dowie might know more than me.
If I can add to that, I mean, there is that recommendation there, but I think it's worthwhile drawing your attention to a number of announcements the government's made about extending the bond aggregator, particularly those was made in the 2024 budget. So if I refer you to, if I refer you to some of those announcements that was made, particularly in relation to increasing the the announcements was around the cap on the government guarantee of Housing Australia's facilities was increased by $2 billion to $7.5 billion in the 2023-24 budget to provide lower cost and longer term finance to community housing programs through the Affordable Housing Bond Aggregator. These loans can be used to acquire, construct or maintain social and affordable housing, as well as refinancing existing debt.
Senator, the reason that's relevant is that the Affordable Housing Bond Aggregator, which is run by Housing Australia, is the, as I'm sure you're aware, the existing vehicle by which investors can invest in affordable housing. So the increase in the ability of Housing Australia to use that is sort of at least going part way toward the intent of fulfilling one of those recommendations. But as Ms Anderson said, that specific recommendation is being considered alongside the others.
Okay, thank you. Has Treasury commissioned any work from the National Housing Supply and Affordability Council to model the housing demand and affordability impacts of possible changes in migration policy settings?
Thank you, Senator. In our report, we do some sensitivities around the migration levels and the impact that would have on demand for construction. And if you want me to get to the page, if you give me a minute, I'll give you the page that's on.
And so Treasury's asked you to do that work?
No, that was part of the work that the Council did in the report. Obviously, when we have inputs into a model, providing sensitivity around, well, if it was lower or higher, same with interest rates, then provides a slightly different answer.
Sure. I guess I'm interested in whether Treasury, given we're going into an election cycle, I'm sure immigration is going to come up, whether they haven't requested that you model different scenarios.
So under the legislation, the report that we're required to produce by April each year can consider anything that's relevant to the state of the housing system, which does include migration amongst many other things. And so we took the legislation as the outline of the things that we were to consider in the report. It wasn't specifically requested, but it's something that we thought was an important component of understanding the variability around the outlook.
Has Treasury asked you to look at the social and affordable housing component of their 1.2 million sort of goal for housing?
So again, under the terms under the legislation, we're to look at the entire housing system. So right from social and affordable housing through to market housing, both home ownership and rental. And so we do look at the entire system, and obviously are tasked also with consulting with DSS around the housing plan.
So how many of the 1.2 million should be social and affordable?
I think the forecast is 40,000 social houses as part of our forecast.
Thank you. Are forecast or are needed?
That's in the forecast. I'd have to take on notice the number that are required.
So I think this letter is referring to the 40,000 Commonwealth commitment is built into the forecasts. That's not all social affordable housing. It's the specific policy commitment that we've made. Yeah.
Yeah. Okay.
Do you want to
maybe on notice how many we actually need as part of that 1.2? Thanks.
Thank you, Senator Pocock. Senator Bragg.
Thanks very much. So just finishing up where we were before on the CBUS lobbying. So are you aware of what exactly the briefing note was that was provided to the government?
I just had a look at it now.
So you know what it is?
Well, I've only just seen it on, I think, in a media report. I haven't actually read it.
Yeah.
But look, it looks to me like a briefing note.
It was a briefing note from CBUS. They wanted to be exempted from disclosing certain fees to do with property investments. So was this considered by this part of the department?
So, Senator, we were not the decision maker for either the FOI or the PII, as far as I understand it.
Did you receive this briefing note from CBUS?
Oh, the Housing Division would have received that in the context of the HAF, I believe, yes, because it was a part of the HAF legislation consultation. Unfortunately, I think some of the people at the table were not.
It's not.
Ah, sorry.
It says
what
here,
are you referring to?
superannuation funds are required to disclose fees and costs in line with ASIC Regulatory Guide 97 disclosure of fees and costs. And then it goes on to complain about the disclosure of costs in these regulatory guides. So,
yes.
Senator, Revenue Group have the area that looks after superannuation policy, so they may have seen that briefing note if it came to the department.
Yes, so who received the briefing then?
Sorry, I was confused between what we were discussing before.
Yeah, so this is the briefing note from CBUS?
Yeah.
Did you receive this note?
I didn't. As Ms Crosswaite said, we'd have to check with our Revenue Group colleagues as to whether our superannuation
area did. You told me you were involved in preparing the PII claim.
No.
No.
Sorry.
Over here.
The legal official working on behalf of the department as a whole prepared the advice on the PII.
Yeah. Yes.
Okay. But the substantial briefing note from CBUS was transmitted to markets.
Well, it looks like it's one page to me, but
so it was given to Markets Group, was it? Didn't come to you.
I don't know that we can answer that for you. We'll take that on notice as to who received the briefing note.
Can I just do some time housekeeping and come back to you, Deputy Chair? So it would be noted that the committee is running substantially behind time. We do have a hard marker of 10 p.m. We do not have substantial advice for those waiting about when they will come on, except to say that it would be safe to say that APRA will not be required until after the dinner break, and that's what we have for witnesses at the moment, and senators will do their best to try to make up time.
We will indeed, Chair. So,
Senator Bragg.
Just so I can finish on this issue, so Ms Wells, this briefing note was in your custody, I imagine, but it was handled by markets.
Senator, normally when we get an FOI request, we will do a whole of departmental search over our IT system to see what's in scope of the request. And once that comes through, that will go to the decision maker. Now, in this case, the decision maker was the Minister's office, so we would not have directly handled that information.
Okay, so should I ask Markets about this Deputy Secretary?
I'm not trying to be overly bureaucratic on you, but our super area has moved from markets to revenue group just to make me look even more foolish. But so I think it would be revenue group that you would address that.
I just wanted to ask some people some questions about the actual request that was given to them.
Yes. Why don't we take that on notice, and I'll speak to my colleagues and make sure that somebody's ready to answer that question for you.
Just from a process point of view, Ms Wells, because I think it'd be helpful, because I think most people would look at it and say, well, the Information Commissioner found this wasn't commercial in confidence and forced its release. As a result, that would cause most people to look at the PII claim and say, well, that PII claim wasn't correct. So what processes will change in the future to ensure that people don't sign incorrect or misleading PII claims?
Well, the PII claim is a matter for the Minister, not for the Department.
So what processes will you put in place to ensure you don't make false PII claims?
Well, I don't think that has been found to be false.
Well, this is not commercial in confidence. This is lobbying.
The Information Commissioner has made a finding in relation to the FOI Act. But they don't have... Yeah, I know, but they don't... They're different criteria and they don't have jurisdiction over the Parliament.
So are you going to change anything as a result of this?
Well, the PII process is established by the Parliament.
No, but I'm asking the department if it regrets being party to a false claim made by the Treasurer.
Well, you are assuming that. They have supported the Treasurer with advice around the handling of a PII claim.
Sounds like you're not going to do
departments are going to continue to support their ministers in relation to the extraordinary amount of OPDs that go through the Senate. You know, OPDs used to be very rare. It used to be a handful of them. And the only reason we've got about 100 of them pretty much every sitting week is because we changed motions. And so instead of being able to move a motion, people now seek OPDs, and so they don't carry the same significance that they used to. And I think that's a shame for the Parliament.
But I think it's a shame.
For who? They don't carry the same significance for who?
Well, for the Parliament, because they've done all the time.
Well, they should, because when an OPD is agreed by the Senate, it has the authority of the Senate. So the department does not have the liberty of making a judgment call about whether it takes it seriously or not.
Okay, so Senator Bragg.
Okay, so sounds like on that issue, just to conclude that matter, that the government recognises that the claim made by the Treasurer, which was effectively overturned by the Information Commissioner, is just a fact of life, and there'll be no reviews or changes in Treasury processes as a result of this pretty unseemly affair.
So I don't accept the premise that the Information Commissioner overturned a PII. He overturned an FOI decision, but the department has an advisory role in these instances. As I said, we understand there was a ground upon which the Treasurer could have claimed PII. He decided to do that. We are not usurping any decision-making role on behalf of the Treasurer with regard to PIIs. That would be inappropriate. We simply provide advice on the process and take forth whatever the decision is in terms of administrative support for that decision.
All right, fair enough. Look, I just want to ask you about Help to Buy, and then I'm done on housing. So, Help to Buy, so you've introduced this bill into the House again, is that right?
Yes, there is a second, bill being through the House, yep.
Okay, now the Prime Minister has been talking about this being a serious proposition, and there have been media reports about whether this may be used as a double dissolution trigger. Is that an unfair characterisation or a fair characterisation?
I'll leave others to speculate on that.
I can't ask the department that, I'm asking you. Yeah.
I am aware that there is speculation about it as a trigger. I think it shows the government's commitment to continue to pursue this despite the Senate's current position on it. We'll continue to do it. We want to get it through. And there will be a vote on this bill, won't there, in November?
We hope so.
Well, no, that's the motion of the Senate is to have a vote.
I think that's a good idea to have a vote on things. I think if you believe in something, you should bring it on for a vote. That makes sense.
Well, we tried, remember? And you opposed it and it moved it off and adjourned it. So
So I guess my main question
straight.
on the Help to Buy, now we've got the Treasury here, is whether this is your only demand-side policy or whether there are other demand-side policies.
So, Senator, there's probably two at the moment. The Home Guarantee Scheme.
Yeah, that was a policy inherited by this government, right?
It was expanded and extended,
But it was a policy of the former government, was it not?
Expanded
That's
and
right.
improved upon.
Yes.
Okay, so that was an inherited policy. And then what's the other one?
Well, Help to Buy is the other one that you've mentioned.
So that's the only one so far. And are there any other ones in the mix?
Not that we would specifically characterise as demand-side measures, because our advice to government has been largely to focus on supply measures.
Now, what do you make of the popularity of the shared equity or Help to Buy like schemes that have been run by the states?
So those schemes that all have different criteria. I'll invite my colleagues to help me out here, but the scheme that the government has developed is not particularly analogous to some state schemes, and it's more analogous to others. So take-up has been mixed, and that has very much depended on the specific circumstances of the schemes.
So what about the New South Wales scheme?
Can I invite my colleagues to jump in here? What would you like? Sorry, what was...
Well, I mean, are these popular, unpopular? Do people like co-owning their house with the government based on the data available from New South Wales?
So, Senator, we've got data available from many jurisdictions that are operating shared equity schemes.
Yeah, why don't you tell me about New South Wales? I represent that state, so I'm interested in that state more than others, perhaps.
So we have some numbers from various jurisdictions. If we look at a jurisdiction like New South Wales, I think that scheme in the last 2 years has helped slightly over 500 people. The eligibility is much more restricted than the Commonwealth's proposed Help to Buy scheme. So how analogous that is, we would say there are other state schemes that are more analogous. So if I take the Victorian Home Buyer Fund, that's helped more than 7,300 people in the last 3 years, or a model like WA's shared home ownership model that's helped about 1,800 people over the last 10 years or so. So there are a
How many over 10 years?
About 1,800.
Okay, so they're not big numbers, are they?
So
in the scheme of the problem we're trying to solve here, we've discussed estimates.
So Senator, I think it's fair to describe these as targeted interventions on the demand side.
Okay, so it's a targeted intervention, and this is the government's only demand-side policy apart from the home guarantee scheme. So there's not a lot of options, is there, on the demand side, Minister?
Well, we have a range of measures.
You've got two.
Well,
one you inherited,
no,
one that's stalled.
across housing, whether you look at supply,
You're talking about demand. You're talking about
support for
demand.
renters, the work that we're doing with homelessness, social and affordable housing. I mean, you know, we are coming at this problem from every which way.
All right, well,
and you're opposing most of it and then complaining in the same breath that not enough's been done.
No, I guess my comment is, and leading to my final question on this matter is surely there's space for some more imagination here. I mean, is there any other demand side things that you could do to help tilt the scales for people?
So, Senator, Treasury's advice around demand-side measures has always been to exercise caution due to their inflationary impact.
Yeah, of course.
So I think, you know, if anything, our view at this point in time is until inflation is more within the target band more solidly and the economic conditions are right, governments should exercise significant caution about untargeted demand-side schemes.
But if, of course, the natural conclusion, though, is that if the Help to Buy scheme is permanently stalled, then does the government say, well, we're not going to have any demand-side measures at all to help first home buyers?
Well, we're still hopeful to get it through. I mean,
That's it. So all the eggs in one basket?
No. We've just gone through all of the different measures in the housing plan. No. Well, you're talking about demand. We've got a whole range of other interventions.
We talked about supply before. That's a disaster.
And you're opposing most of it.
Yeah,
so
I think the cupboard's a bit bare,
support
isn't
it. It's not.
Cupboard's bare.
Find me another government that's done as much as we have.
Well, the last
you
government,
won't be able to do
the last
it.
government built more houses.
No. Well, we've already established that that isn't correct. But also, find me the programs you ran because you didn't.
We built more houses.
No, you didn't. You did not. The government did not build houses.
I'll table the data.
You didn't build houses. You were not involved.
Table the. Well, you think that the government should build all the houses?
All right. No, I don't.
Stop.
But I don't think
everyone,
you should sit there and say you built all the houses when that's clearly incorrect.
Thank you, Minister. Thank you, Deputy Chair. I'm going to Senator Smith.
Great, thanks very much. I just want to turn to a tender matter that was published on the 25th of March 2024 for the value of $198,000 to Corn Ferry for, it's described as management support services. The limited tender condition, which is identified, is 10.3B, extreme urgency or events unforeseen. But I understand that that tender matter concerns the hiring of professional services to identify or headhunt people for the RBA board. Is that correct?
That's correct, Senator. So that contract, just to put in your mind, has been managed by our colleagues in Macroeconomic Group. We have some information and we will help if we can, but there will be a point at which I tell you that's beyond our kind of limits.
Brevity is a skill, so I'll keep it nice and tight. Has the full $198,000 been expended?
I would have to take that on notice. Yeah, sorry, we don't have that information, Senator.
Oh.
Usually how these contracts tend to work is a proportion up front and then a proportion later, so I would expect not, but I can confirm that on notice.
Did the headhunters put forward any final candidates for the RBA board appointments?
I don't have any information on final candidates, no, Senator, sorry. I can take that on notice.
What information do you have in front of you that you thought might be helpful to me?
Corn Ferry provided recruitment services and board search services to Treasury. This included assisting with the selection process for the appointment of up to 6 members for each of the Monetary Policy Board and the Governance Board, and establishing a merit list for additional vacancies. We procured Corn Ferry to provide bundled services, including screening and shortlisting, which includes a board search to complement the pool of candidates, interview and verification, and selection reporting. I think that's probably all I have for you, Senator.
So assisting with, so $198,000 to hire Corn Ferry is complementary to another element in the overall recruitment process.
That's right, yes.
What's the other element?
Well, that would involve us providing advice to government on actual appointments. So that would not be undertaken by a headhunting company. That's undertaken by the relevant minister, but with Treasury's support in this instance.
I understand. How many candidates were identified on the long list? I might just use that word. And then how many made it to a short list or a shorter list?
I'll have to take that on notice, Senator.
Has the contract been extended or modified?
In August, the contract was varied. There was no change to the contract value, but the end date was changed to the 31st of December this year.
So it was, my understanding was, it was to conclude on the 30th of June 2024?
I believe so, yes. I'll have to confirm that, though I don't have that in my paperwork.
And it was extended until when?
The 31st of December this year.
31st of December. For the appointment of people to a board that doesn't yet exist, or a board doesn't yet exist?
It was done in advance of the passage of legislation because we wanted to be ready to provide effective advice to government.
Mm-hmm. So that advice is before government, just waiting for the passage of the legislation now?
I'd have to check where it is in the process. I suspect it's not being provided to government at this point until the legislation is passed.
That would be a bit presumptuous.
It would be, yes.
Is it common for a recruitment process to be undertaken prior to the formal establishment of a board?
Again, I'd have to take on notice whether we've done that in the past. I have a memory that we may have. I don't know if you have any... No. So I'll take that on notice and provide some advice.
And if it has been done in the past 10 years, perhaps you might identify those instances where that has taken place. Thank you very much.
No problem.
True to my word, brevity.
I think
I've got some more.
Only very temporarily acting as the esteemed chair, so now the chair is back.
I'll allow you to conclude what you were just
I
doing.
think we have concluded.
I've got...
Right. Sorry?
An alternate set of questions? Slightly longer, but we'll keep them tight.
Great. Senator McKim has questions, but he's not in the room, so Senator Smith.
Couldn't see him. Okay, I just want to turn to a previous matter that was discussed at estimates in regards to advertising campaigns and the creation of the Treasury Spin Unit, the TSU. How much of the $40 million budgeted for the Stage 3 tax campaign has been spent to date?
So, Senator, well, Mr Axelby is preparing his tonsils. I will say we do not call it this Treasury Spin Unit. It is the Public Information Branch of Treasury.
Making sure you're paying attention.
I will ask Mr Axelby
my
to
working
take
title, the TSU.
Thanks, Senator. Heath Axelby, Acting Chief Operating Officer. The total spend is $22,241,098.
And I think you said 40 million. The budgeted amount was not 40, was it? It was slightly less than that. Yeah. Sorry, it was roughly 40. You're right.
Yep. Can you break down that into the creative advertising spend elements?
The creative
and the advertising spend. And are there any other key categories that might be useful to me?
I can break it down. Yes, Senator. The creative was $2 million. Just over $2 million ex-GST, and the media spend was $18,731. $18,731.
I don't recall it being particularly creative.
We'll take that as a comment.
Okay. What agencies were involved in working on the campaign?
As in government, other government agencies?
Other government agencies?
None, Senator.
Just Treasury.
Just Treasury.
Was there any market research undertaken to inform the campaign?
There was.
And who was the market research organisation?
Where to?
Where to?
Yep.
Have they done previous work for government?
I can't say for certain, but I would assume so, given they're part of the village model that government uses through Department of Finance.
And who did the creative?
Clemenger.
Clemenger. And who's doing the media buy?
It's Universal McCann does the media buy. That's whole of government.
Whole of government.
Yeah.
Do you have a breakdown of the contracts or payments provided to each of those particular organisations, entities? So how much was provided to Clemenger, how much was provided to Where to, how much was provided to...
Universal McCann.
Yeah.
I do. Senator,
you could provide those.
So Where to was $386,995.99. As I said, Clemenger, the creative, was $2,044,826.52, and Universal McCann was $18,731,788.52. But I can provide that if.
So what was the call to action that the campaign was drawing the community's attention to?
It was a call to action to go to the tax cuts website to understand what your tax cut would be.
Right. But the tax cut was flowing automatically through the PIYJ arrangements, wasn't it?
It was going to happen, but people were, during the campaign research, we did find that people were unaware of how the process would work, so it was important that they were provided guidance on how that would be delivered to them.
And this was approved through the Independent Campaigns Committee, which all campaigns of
Good
that
value
size.
for money, Senator Gallagher?
Yeah, I believe so.
On what basis do you make that judgment?
Well, on providing people with information, public information. That's what it was, and with the Parliament set up, there's been a process set up about an independent campaign committee to go through and make decisions about whether it's appropriate public information, and it did go through that process.
Has the campaign completed?
It is.
It is. And was there post-campaign review, assessment?
There's an evaluation. There is an evaluation process, but it's not complete as yet.
When will that be completed?
I'd have to take that on notice on the exact timing. It has to. It's part of the process that we have to undertake. Yeah.
When did the campaign end?
10th of August.
10th of August. I just want to turn to another matter that was canvassed previously, and we were talking about the hiring of positions in the public information branch to assist with the management of advertising campaigns. How many roles, just remind the committee, how many roles were advertised and how many of those have now been filled?
I guess there wasn't specifically advertising done. We went out to other government agencies to try and gather some people to come into the branch. That wasn't overly successful, so we sought
No one wants to work in the Treasury spin unit.
I think these were temporary positions as well, Senator.
Right,
That
they were
temporary
temporary
people's
positions.
decisions as to whether to move or not.
So it was the temporary nature of the position that made it unattractive to people?
Can't speak for people.
Yes, exactly. It's a matter for them, but these sorts of skills are quite highly sought after, and so, you know, to be able to attract them, I think permanent positions offer a bit more of an opportunity. So we did our best to gather some people, and then I think we've got some other short-term people on as well.
Yeah, we've got basically the full workforce is non-ongoing, so due to end 30 June, and our current ASL is 13.2.
So of the 13.2, they were... So how many temporary positions?
Well, all of them are technically temporary, Senator, in that at the end of the campaign that we're undertaking those roles, some of the staff were from internal, so from another branch that moved across, so they will return to their substantive positions back where they were.
So just trying to understand, temporary positions were advertised, there was lacklustre interest, but how many temporary positions were filled?
So I think it's important to distinguish between the nature of the individual being temporary. So many of those individuals are permanent public servants doing a job for a particular period of time, and then they will return. I think, are you asking over and above those, what are genuinely temporary staff, as in on a contract or other non-ongoing
No, I'm trying to get a picture of when those roles were operating at their peak performance, how many of those temporary positions were filled?
What's the biggest the branch has been in delivering, though?
I think the number of positions was somewhere in the vicinity of 17 positions. I don't think we've ever filled all 17. I think we probably got to about 15, but I'd have to take the exact number on notice, Senator.
Okay. And have all of those, let's assume it's 15 for this purpose, but you're going to provide the accuracy of that on notice. So all 15 have now been returned to...
No, they're currently still working on campaigns.
Campaigns with an S.
Correct.
Yep, campaigns with an S. So how many were, and were there any more than 15 involved in the Stage 3 tax cuts campaign?
No,
or that was the peak?
It was much.
Yep. So the 15, assuming that's what it is, they're on non-ongoing arrangements, did you say?
Some, and some are obviously ongoing APS staff that will return to substantive positions elsewhere within the organisation.
On notice, can you identify where those 15 came from across the public service? You'd be able to do that easily, I would have thought.
Yep.
And as of today's date, which ones have returned to where?
Most of them are still working on the individual work, Senator. Yep. All of them.
All of them are still
Mr.
working.
Axelby. Yep.
Sorry, Senator. Yeah, all of them are still working.
So, what other campaigns are these people working on now?
There is currently in market a Supporting Australians campaign.
Supporting Australians?
Yes.
Yes. And there is in development a Future Made in Australia campaign.
What is, excuse my ignorance, what is this Supporting Australians campaign?
It was an expanded, I suppose some funding was taken out of the tax cuts campaign to expand to cover the energy bill relief and student debt relief help.
How much was taken out of the $40 million of the Stage 3 tax cut campaign?
I think 12.9 million was repurposed across to the Supporting Australians campaign.
And so the Supporting Australian campaign has two elements?
It did touch on tax and then energy bill relief and student debt relief.
Okay. So of the $12 million, how was that apportioned between those three elements of the Supporting Australians campaign. What does the Supporting Australians campaign look like? I don't think I've ever seen it.
What do you mean? What does the ad? What does the ad look like?
Yeah, have you seen it?
I have.
So it is quite a it's a flow on from the Stage 3 tax cuts campaign. So it looks and feels quite similar to that. It adds the additional measures that Mr Axelby said it would talked about, so energy bill relief and student debt relief. So when you say the costs of the three different elements, that they are one package. It's one package. So I think
it's not split up into.
It's not split up into this was spent on HECS and this was spent on.
Just so I'm clear, $12 million repurposed from the $40 million Stage 3 tax cut campaign used to support the Supporting Australians campaign, which is communicating three messages: remaining Stage 3 tax cut campaign message, an energy bill relief message and a student debt relief message.
That's right. And I said HECS before and I should have said HELP, by the way, just to correct myself.
Thank you. That's interesting.
If you're going to a different line, I'll go to Senator McKim and come back.
Perhaps Senator McKim, just perhaps a few more moments and I'll see how far I get. Is that okay? Yep. Okay.
Are you on the same line?
Yes. So turning then to the Future Made in Australia campaign, which you said is in formulation or being prepared.
Correct.
What is the total quantum of funds allocated to the Future Made in Australia campaign?
The campaign was allocated $35.9 million, exclusive GST.
I saw a report in The Guardian that suggested it might have been, not that I trust and verify what I read in The Guardian, but I saw a comment that suggested it might be $45 million, but it's not, it's 39 point.
Yes, I think we covered that last time, Senator. I think that was the budget line in which it was, it appeared, had another, I can't remember what the second element of the line was, but it was two things that were part of that. So this is the correct number for Future Made in Australia.
Okay, so the $35.9 million, that is allocated over what period?
Till 30 June.
Sorry, 30 June?
Till 30 June.
And how much of that has been expended thus far?
Only $540,000 approximately. 151.
Does that $35.9 million include staffing costs, or is it just the...
It does.
It does?
Yep.
So perhaps you could just break down for me what that 35.9 represents?
So it's 33.5 in administered, which is obviously the advertising, research, etc., and then 2.4 million in departmental, which is staffing and other minor costs.
And that 2.4, what does that buy? What does that get you in terms of...
It's primarily staffing.
Yeah,
yes.
staff.
But some supplier expenses, like if we have to fly.
Travel.
How many staff?
Yeah.
So we're clear that is included in that whole branch. So that money is that goes to that 15 to the 15 staff we were talking about earlier, which is
Heading up to the 20-minute mark, Senator Smith.
Thank you. Thank you for your generosity, Chair.
Couple of minutes.
Just to be very, very clear, the Future Made in Australia amount that appeared in the budget paper was 45 million, which comprised the 35.9 plus the difference between that and the 45. Yep. I might come back to this after Senator McKim.
Can't wait. Senator McKim.
Thank you. I've got some questions about the social housing accelerator, and specifically in regards to the $2 billion in funding for social housing through the social housing accelerator that was announced in June last year during the Housing Australia Future Fund negotiations. Could I firstly ask how much, if any, of that funding has been allocated?
The $2 billion Social Housing Accelerator. So that money has been provided to the state and territory governments through federation funding agreements. So that money is with those jurisdictions. And we are receiving regular reports from them about what they have been spending that money on in terms of increasing social and affordable housing stock.
Okay, so how many homes have commenced construction out of that?
I might ask Mr Dowie to provide that evidence.
Senator, as of the statements of assurance that we received from all jurisdictions as of 30 June 2024,
so did you say 1st of June?
The 30th of June 2024.
Thank you. Yep.
The total number of homes that have been completed or refurbished is 402.
402. And do you have a state and territory breakdown of that?
Yes, so 351 in New South Wales, 24 in Victoria, 27 in Western Australia. And I'll also add to, Senator, that there's been a further nationwide 370 dwellings that have been commenced but not yet completed, and a further 1,052 dwellings that have been committed, that is, contracts have been signed and exchanged, but construction has not yet commenced.
Okay, so just to be clear, that first number, Mr Downey, the 402, that's completed dwellings?
That's correct.
But there are only completed dwellings in 3 states?
That's right, yes.
Yep.
Completed or refurbished, yes.
Beg your pardon?
Completed or refurbished.
Yes, thank you. And of the 370, do you have a state, that's commenced but not yet complete, do you have a state breakdown of that 370?
Yes, New South Wales, 328, Victoria, 16, Queensland, 24, Tasmania, 2.
Okay, and what about the 1,052 that are committed? That is, contracts have been signed but are not yet commenced. Do you have a breakdown of that number?
New South Wales, 217, Queensland, 111, Western Australia, 293, South Australia, 319, Tasmania, 114, Northern Territory, 8.
Okay, thanks. Is there nothing going to the ACT?
The Australian Capital Territory did receive $50 million in payments under the Social Housing Accelerator. As of 30 June 2024, they have not reported to the Commonwealth that any homes have been committed, or that any construction has commenced, or that any construction has concluded.
All right, thank you. And do you have a breakdown of the amount of that $2 billion that was provided to each state and territory?
Yes. New South Wales, $610.1 million.
Yeah.
Victoria, $496.5 million. Queensland, $398.3 million. Western Australia, $209.2 million. South Australia, $135.8 million. Tasmania, $50 million. Northern Territory, $50 million. The Australian Capital Territory, $50 million.
All right. Thanks very much. That's really helpful. What's the... Do you work on like an average expected completion time for these projects? Like, do you make an assumption about how long it's going to take, for example, to get a project up to a commitment stage, and then once the contract's been signed, how long it's going to take to complete that project?
So we don't have any particular, internal rules of thumb as to how long those processes go. Their jurisdictions have the flexibility as to how they manage that. Jurisdictions, there is a contractual requirement on jurisdictions through the Federation Funding Agreement for all funds to be committed by 30 June 2025, and all construction to be completed by 30 June 2028.
So just to be clear, all commitments by the 30th of June next year?
Yes.
And all completions 3 years after that?
Yes.
All right, thanks. That's helpful. How does that timeline compare to the timeline on which the first Housing Australia Future Fund homes are expected to become available? Like, are there any relativities there in terms of timeframes?
It's not something that we've necessarily drawn comparisons between. We do have some information about when we're expecting to start to see commencements and completions of HAF programs. So,
well, I wonder if one of your officers might be able to just take the committee through a similar kind of process that we just went through in regards to the social housing accelerator, but in terms of the HAF?
Yeah, absolutely.
Thank you.
So I can take you through the number of dwellings that progressed through to preferred application status in each jurisdiction, if that would be useful.
Can you just explain what preferred application status is?
Of course. So that is the decision by the Housing Australia Board that was announced in September for a subset of the projects that applied for funding under the HAF to move through to contractual close. So,
all right. Thank you. I'm sorry, I didn't mean to interrupt.
No,
but sorry, that's off. And I would like that information, but could I just be clear? That's a step prior to what Mr Downey's just described as commitment, right? So when the contracts are signed.
That's right.
So before you go to that, how many homes funded through the Housing Australia Future Fund have actually got to the commitment stage?
So all of the dwellings under the Housing Australia Future Fund, all 185 projects representing those 13,700 dwellings, all of those are now moving through to contractual close on different time frames.
Are any of them closed?
So at this stage, Housing Australia is still working with each of those proponents to negotiate contractual close. They can probably provide an update later on where each of those negotiations are up to.
Okay. And I'm sorry, my eyes don't... Are you Treasury?
Yes.
Yeah, you are. Thank you. Just to be clear, no shade on you for that.
I don't mind if I don't look the part.
No, that's fine. That's fine. Is Treasury aware of any projects funded through the HAF that have reached the contract stage that are committed?
No.
No. Okay. All right. Now I did interrupt you. Then could you feel free to go back and let me know the numbers that were at preferred application status? Thank you.
Absolutely. So for Victoria, there are 4,135 homes. For New South Wales, it's 3,266. For Western Australia, it's 2,787. Queensland, 1,315. South Australia, 893. ACT, 757. Tasmania, 479. And the Northern Territory, 110.
Okay, thank you. I'm not sure how I'm going to address this question too, but I'll just address it broadly and someone can jump in. Would it be fair to say that directly funding grants for social housing, like, for example, the Social Housing Accelerator, delivers new social housing far more rapidly than a complex funding model like the HAF? Because it seems to be on the face of it, given what we've just heard, that that's the case.
So I might take that one, Senator. So I think the comparison is a little unfair. The Housing Australia Future Fund and the Accord Fund are new programs that required quite a considerable setup time. So I don't see that once the program is up and running, so rounds are now being kind of acted upon, the actual execution of that through to building, I'm not sure that it would be correct to say that, state governments are potentially involved in quite a few of the HAF projects as well. So it is just adding to the ways in which we are able to fund and support housing. So I don't think so, Senator, but I think that the delay, I guess firstly in the legislation, but then it was very important to set up a very robust scheme given the amount of money we're talking about here through the HAF. That's now occurred, and so we will now see rounds coming through and funding, hopefully agreements being reached or contractual agreements being reached with the proponents, and that housing will then commence. So I don't think there'll be a significant difference, but time will tell a little bit.
Yeah, I guess under the Social Housing Accelerator, we've got multiple hundreds of homes completed. We've got another multiple hundreds of homes that are actually in the process of being completed. We've got over 1,000 that are actually committed, and under the HAF, none have reached commitment stage. It's... Anyway, I'll just leave it. You can take that as an observation, not a question.
Are you in a position to wrap up in terms of time management?
What I'm going to do is I'm going to put some further questions on those matters on notice, but I did just have a couple of other, which I think will be quite brief.
Okay.
If that's okay.
Yep.
Look, I just wanted to check on build to rent. During the Senate inquiry, Treasury officials were unable to say how many new homes would be delivered through build to rent concessions, and apologies, Ms Anderson, that may have been you.
No, it wasn't. Actually, my colleagues in another part of the department.
Okay, my apologies.
You may want to hold the question for them, but
no, I'll just ask the question. I don't mind if people know that I'm interested in this. Property industry witnesses testified in their view that the scheme in its proposed form would not lead to any additional housing above business as usual. Treasury said, and I do recall this, that there may be no new tenancies provided which would be affordable to low-income families. So they accepted my proposition that the number of affordable tenancies that would be provided under build to rent could be 0. Since that inquiry, has Treasury done any further work on the likely impacts or modelling on the likely benefits in terms of the build to rent proposal on new housing supply, and in particular the supply of affordable housing?
So I'm going to disappoint you, Senator. I'll take that on notice for my colleagues if that's all right. I mean, if they are able to answer it when they come forward in Revenue Group, I'm sure they can.
For Revenue, did you say?
Revenue Group, yes.
Oh, thank you.
Thank you. So we're about to conclude with this group after another short round of questioning and move to the fiscal group. But for this group, Senator Smith.
Thank you very much. So just continuing with the future made in Australia. So in budget paper number 2, at page 65, there's a measure that says, budget measures in budget paper number 2, there's a measure that says future made in Australia, attracting investment in key industries. Based on the evidence I've just heard from you, the $45 million advertising campaign looks to be the bulk of that $68 million measure.
Sorry, Senator, the advertising campaign isn't 45 million, it's 35.9.
Well, still,
yeah.
The $35 million advertising campaign appears to be the bulk.
That's right.
Of the future made in Australia attracting investment in key industries measure.
So this measure also funded some of the other functions that were set up in Treasury to investigate, for example, the front door, I believe, and a few other, maybe it was the, future made in Australia national interest
the budget
analysis.
measure says 11.4 million over 4 years to establish and manage a domestic national interest account with Export Finance Australia, 1.9 million in 2024-25 for the Northern Australia Infrastructure Facility Act review, and 54.7 million over 2 years, of which this 45 is a subset, to administer, coordinate and promote the government's future made in Australia.
That's correct, including the legislation development, so funding was received
that's
for that.
What it says.
So yes, we have
but
received that.
When I look at this here, future made in Australia, attracting investment in key industries, I would have expected something more substantive than...
There's the production tax credits.
There are some... Yeah,
22.7 billion.
I just want to turn to the organisational chart just finally. This won't take very long. What is the difference between the Public Information Branch and the Information Services Branch?
Sorry, do you want to take it?
No, you take it.
The Public Information Branch is the branch that looks after the government campaigns.
Yep.
And Information Services Branch is the IT branch.
Okay, gotcha. So just on the Public Information Branch then, how many ASL are in the Public Information Branch? And we've had sort of canvassed this at what I would call sort of a loose way, but just on notice. Can you provide me with some information? How many ASL are in the Public Information Branch and what APS level are they employed against? How many of those roles are based in Canberra and are any roles based elsewhere, and where are those elsewhere? Where are those locations, and how many are operating from those locations? And what's the skill mix of those particular roles?
I can answer some of that off the top of my head, Senator, but I'd prefer to take the lot on notice given the...
You don't want to err on accuracy and take it on notice?
I will definitely take it on notice.
Okay, thank you very much. Thank you, Chair. Yep.
Thank you very much, Senator Smith. I am going to release this group very quickly with my thanks. Thank you for answering all of our questions. And we will move now to Department of Treasury Fiscal Group. We'll just briefly suspend while we get the right people at the table. The committee resumes with Treasury Fiscal Group and we extend our congratulations again to you, Ms Reinhardt, for your appointment as the Parliamentary Budget Officer, and thank you for all of your work in this area. And I assume there are no opening statements, and we'll go straight to questions from the Deputy Chair.
Thanks very much. Can I ask you about the PSI quantum arrangements now? So was the Treasurer or the Treasury aware of the alleged relationship or friendship between Minister Husing's office and the senior Blackbird executive?
Sorry, I'd have to take that detailed question on notice.
You don't know?
No, I don't know the answer to that.
Okay. Do you know much about Blackbird?
So, no, I don't have much detail on Blackbird. Apologies.
Okay. So, but you know about PsiQuantum, obviously?
Yeah, I know about PsiQuantum. I don't know if Louise had anything to add.
Louise Rawlins, First Assistant Secretary, Labour Market, Environment, Industry and Infrastructure Division. No, I don't have any further information about Blackbird. It'd be a matter for DISA, the Department of Industry, Science and Resources, which has led the process.
Okay, so you think they might know more about this when they... Well, I don't want you to answer that, but I can ask them tomorrow when they're here, I guess. But as far as... So are you taking that on notice, or are you sort of suggesting we should...
We've taken on notice your first question, which was about the state of knowledge, I think, of the Treasurer's office. Okay. Was it?
The Treasury.
That's right.
Oh, the Treasury?
It's just... my question is, does the Treasury have any knowledge about the interaction with Blackbird and the executive? What about the issue with PsiQuantum? Did the Treasury see the Australian Chief Scientist's advice on PsiQuantum?
So, again, I'll ask Dr Rawlings to talk in detail to this, but I can say that Treasury provided advice on PsiQuantum and the policy issues around PsiQuantum, but it was the Department of Industry that was analysing and providing the full consideration of that, so that would be a question for industry.
No, I understand that, and we've had a number of sessions of Senate estimates where we've discussed it in detail with the industry, but Mr Yeoman did say that the fiscal group would be able to give the Treasury's perspective on these issues to the extent that you have had departmental engagement.
Yeah, we can check whether there was any discussions between Treasury and the Chief Scientist, but I'd be very surprised if that was the case, because the department that was responsible for considering it in broader detail was the Industry Department. So they were the department that would have done broader consultations on the proposal.
So maybe it's easier if I just go back one step and ask you then, as a department, what has been Treasury's role in the PsiQuantum matter?
So if I could just add to your question around the Chief Scientist. So we did answer in the question on notice BET 145, which was tabled on the 1st of November, that Treasury was made aware of advice from the Chief Scientist on the PsiQuantum deal proposal in October 2022.
And what did the Chief Scientist say?
I would have to take that on notice.
Well, you don't know what they said?
Well, I think it was a while ago now, Senator Bragg. I think it's reasonable if officers want to reflect.
Dr Rawlings has just come into the role. I was in the role, but it was also another division head that was responsible for this. So we can follow up on detailed information, but we don't have an answer for you on the specific advice at the time.
This is not asking for technical advice. This is Senate estimates. We're asking you about your engagement with the PsiQuantum matter, which has been led by another department, but you would know the Chief Scientist.
The key words here that it is being led by another department. Yep.
Treasury, as the central agency, which has had some engagement with the PsiQuantum matter, hasn't it?
Yes, Treasury has definitely been involved with the PsiQuantum matter.
So Treasury would know, you would assume, whether the Chief Scientist had given advice that this was a good idea or a bad idea.
So we will have on record our engagement on this matter. I unfortunately can't tell you what the Chief Scientist said to Treasury at the time.
Does anyone else here know? How many people are here in the building from Treasury right now?
A lot, probably too many. Too many, because the committee's running overtime, so people have been banked up here all afternoon.
I'm sorry to be the bearer of unfortunate news, but I mean, we are scrutinising the expenditure of public funds. This is a significant
by tying them up here.
Pardon?
I just can't tell you what the Chief Scientist's advice was. Very happy to take it on notice, but I don't have it in my notes here.
Minister, do you know what the Chief Scientist's advice was?
Look, as I understood it, there was some concerns raised, and I believe she was at the announcement of the. Well, maybe I've got that wrong, but I certainly remember her being supportive of it as well. But I think she did originally raise some concerns.
Okay, but there's no. So your understanding is that the Chief Scientist, Dr. Foley, had some issues, and raised them with the Cabinet or with the Executive?
No, I only read that in the media.
Okay.
Yeah, I read media reports. I know that Minister Husick obviously would have been having, as I imagine, consultations and discussions, but I understand that she was supportive of the agreement that was finally reached, which is probably the most important bit of information you need there.
Well, and then the Treasury...
I'm rapidly trying to check that, though.
Treasury isn't sure what the advice was.
Well, they're not responsible for the PsiQuantum agreement. They have a role.
So
they have a role, just like we went through this with Finance with Senator Hume yesterday. We went through what Finance's role was. Treasury have a role in advising the Treasurer and taking part in some of the discussions across government. to influence or to support the agreement that was finally reached. But
Okay, so what has been Treasury's role here then?
So as with the usual proposals that are considered by government, Treasury provides its input on the likely costs and benefits, the implications for budget, the perspective of the department on the vehicles that might be used for financing. It might, for example, ask relevant departments about who they're working with, the role of state and federal governments in agreements. So that's the sort of nature of Treasury's involvement in a process like this.
All right, was the national interest framework applied here?
So I presume you're referring to the FMIA national interest, so that wasn't in operation at the time.
Okay, fine. In terms of the payments, how much is the taxpayer on the hook for here?
So the payments made to PsyQuantum by Export Finance Australia was equivalent to 463.32 million, and then obviously managed by Export Finance Australia, so it has been published in their accounts.
$463 million from the Australian taxpayer to PsyQuantum.
That's correct.
And how much of that $463 million has been paid so far?
That would be a question for Export Finance Australia.
You don't know?
Well, some of this was answered yesterday, but many of the answers were that this should be directed to Export Finance Australia.
The central agency doesn't have that information?
Well, the relevant agency with responsibility for it has the information. We can provide you with you wanted to know 463 million. We've answered that question, but as to where it is up to at this point in time, you should direct that to the agency that has responsibility for it, which is DISA tomorrow. I think the Chief Scientist is here tomorrow, so you can ask her about how she feels, and I think Export Finance comes as well. Is it a loan or is it a gift? It's as the answer that was provided yesterday, and I'll just check, was I think it's a convertible note.
So when do repayments start?
Again, you're going to have to direct those questions to the area that's responsible.
Do you know what the interest rate is on the loan?
It's 5.12%.
Okay, so you know some of the information.
Yes, so I'm providing you with what I have before me, which is the information we had before us yesterday, which is the terms of the agreement. But you are also into, putting into place questions about where things are up to right now and who said what to somebody a year ago. And on those ones, you need to direct it to the responsible agency.
Yeah, okay. And what about all the other organisations that were part of the Expression of Interest program? I guess those are questions for industry.
DISA, yep.
Does Treasury have any concerns or comments about how this matter was handled? It's quite a large amount of taxpayer funds. It's a bit of an unusual process.
So Treasury was involved in the EOI process and was part of the discussions around settling the outcome of that process.
Okay. How many other organisations pitched for this money?
That would be a question for DISA.
But you said, what was your involvement then as a department?
So Treasury helped with the establishment of the EOI process and consideration of the application to see PsyQuantum. As I understand it, DISA was part of evaluating the EOI process.
So you were involved in the EOI?
So we were involved in setting up the principles around the EOI process. We were consulted on that.
How many days did the EOI go for?
I'm sorry, I don't have that information. I think that's another one for DISA.
It was expression of interest process between August and September 2023. I don't have the dates.
Okay, so the Treasury was pulled in to this process?
Oh, actually I do. 14th of August with required responses by the 11th of September.
Okay, so about a month. But you don't know how many other organisations pitched for this business effectively?
I don't have it on me. I'm sure at the time they knew how many organisations have pitched for it, and I'm happy to take it on notice if that would be useful. But I do think it's more a question for Department of Industry tomorrow.
Okay, and did Treasury express any concerns about the way this was handled by the executive, by the ministers?
Not as far as I'm aware. No, and like obviously I'm not going to talk about Treasury's advice to ministers, but I can talk to the broader, like this went through a full process and Treasury provided input in the process. So
you didn't see any disclosures or any other conflicts, registers provided as part of your engagement in the EOI?
I would have to check on that, but that would be normally the responsibility of the relevant department that was processing this. Yeah.
So what exactly? So Treasury was brought in because it had expertise in.
Treasury is always brought into major financial decisions around budgets.
Okay, and Treasury is comfortable this was handled prudently?
I'm not aware of any concerns that Treasury had around handling.
An external, as I understood it, there was an external probity advisor and probity plan in place for this. But again, those questions would we have to put to DISA. I have been provided with some of the quotes from the Chief Scientist, which are supportive of the agreement that were released to the Parliament in an order of production of documents. This investment shows Australia is serious about its quantum industry development by ensuring we are at the front of the pack in the global race to build the first useful quantum computer. And there's other quotes, but I'm sure she can answer for herself tomorrow.
Okay.
Great. Any other questions for fiscal group?
Energy bill relief.
Senator Smith.
The National Partnership Agreement that underpins the reporting back from states to the Commonwealth on the energy bill relief, does that actually have a name? I'm sure it has a name. Do we know? Could you share with the committee what that name is? Yeah.
I can find out, Senator Natalie.
Okay,
that.
We might come back to that. Can the Treasury confirm that energy bill rebates are currently budgeted as a terminating measure, ceasing in the September quarter of 2025?
Yes.
Yes?
Yeah, I will say energy bill relief does not normally sit with fiscal group, but we'll do our best.
No, I'm getting ahead of myself.
We'll take
the Chair would like the fact that we move...
release this group and get to the next group.
As long as energy bill relief is in the next group?
Energy bill relief, I think, might be with macroeconomic group.
Well, don't just go. Yeah.
That is a fail. That is a fail. Will you indulge me, Minister?
Of course we will indulge you.
Oh, great. Excellent. Yeah. I'll keep it very brief. Can you confirm energy bill rebates are currently budgeted as terminating measures ceasing in the September quarter of 2025?
I can confirm they're terminating. I think that September sounds right, but someone will correct me if we've got that wrong.
Okay. When the rebate ends, is it true that electricity prices will increase?
I think we'll have to take these ones on notice. No.
Yep. In the National Partnership Agreement, it contains certain requirements, A through to F, I think, for states to have to report back to the Commonwealth certain information. How many households and small businesses have received a payment to date, state by state? On notice, of course, yep. Have states been fulfilling their reporting obligations as set out in that National Partnership Agreement?
Take it on notice.
On notice?
I'll have to, yeah.
On notice, yep. And if not, which states have not been fulfilling their reporting obligations? Because I think they have to report monthly or something similar to that. And is the expenditure of the energy bill rebate to date in line with budget estimates. Yep. And finally, has the Treasury done any work to determine the accuracy of a comment made in the Australian Financial Review, I think towards the end of September, under the heading of RBA interest rates, electricity costs expected to rise by 47%. Has the Treasury done or been asked to comment on this statement? But out-of-pocket household electricity expenses could increase by 47% on average nationally between October 2024 and September 2025 as state and federal government assistance expires, according to analysis by the Australian Financial Review of Westpac electricity price forecasts. Thanks for indulging me. Thank you.
Okay, that concludes the questions the committee has for Fiscal Group. Thank you very much. You go with our thanks. And the committee will take a very brief suspension while we have the Markets Group come to the table. The committee resumes, and we welcome the Department of Treasury Markets Group. Assuming there are no opening comments or remarks, we'll go straight to
Chair, the only thing
questions.
I'd say, I think the committee's, Brenton Philp, the Deputy Secretary of the Markets Group, I think the committee's picked up on this, that superannuation policy is now with Revenue Group rather than with Markets Group.
Yes.
Yep.
Senator Bragg is excited at this juncture. We'll go quickly to Senator Rennick.
Hi guys, how are you going? Look, my questions are in regards to the current investigation taking place with ANZ, manipulating markets in regards to government bonds. Is it true, I've read in the media, that it's $100 million the Treasury, or the government taxpayer pays to the banks for the syndicated fees a year?
I might turn to my colleagues and see if we have any information on this one. The AOFM is normally within the portfolio, within the responsibilities of the, not fiscal group, the macroeconomic group. And your particular question may go to the ASIC investigation that we wouldn't be privy to. But I'll just check with my
markets, and you're dealing with markets of bonds.
No, understood, Senator.
That would make sense to go into markets.
So Lynn Kelly, First Assistant Secretary, Financial System Division. So I would just like to say the allegations are being investigated by ASIC at the moment, and so it wouldn't be appropriate for us to comment while the allegations are still under investigation.
So but you can comment on do you or do you not pay the banks fees to trade government bonds or issue government bonds? Private banks?
So AFOM use banks in relation to their arrangements when they're issuing in different capacities, and so ANZ was used in a capacity in relation to this matter. But again,
well, I'm asking a general question here. It's not just ANZ. I'm looking at
banks are used by
because the question I want to get to is why don't we use the RBA and save ourselves $100 million and get in fees, giving them to private banks. I mean, they already get a lot of largesse anyway, the large private banks, but I'm just not sure why we have to use private banks to do our bond issues when we, I would have thought our RBA Treasury could do their own bond issues.
So again, this would be a question for AFOM because it's in relation to how they undertake their borrowing activities.
Right, okay, because, I mean, I've worked in private companies, we do our own bond issues, we don't have to pay another company to do it.
Yep.
And it's just, I don't know why the government has to outsource everything. Being Treasury, I would have thought, you should have the skill set to do it yourselves.
I think they're looking for a question, Senator.
Well, I guess my question is, why don't you have the skill set to do it yourselves?
So AFOM is separate to Treasury, and they have a range of activities they undertake. Some are done in-house and some are use syndicates of banks in different ways. So again...
So when you say you're talking about Australian Office of Financial Management,
yeah.
Why are they separate to Treasury? I would have thought they were either coming under Treasury or they'd be a part of the RBA.
They're within the portfolio.
They're one of our portfolio agencies.
Yeah.
But they operate under their own mandate within the Treasury portfolio, much like for Markets Group, the ACCC, ASIC and APRA are portfolio agencies of ours, but they are independent agencies that operate in their own sense.
Right, okay.
But so Senator, if you like, I'm happy to take the question on notice and we can...
Yeah, if you could, because I'd like to know why they need to, if they're operating independently, then, or their own little group, why they don't have the skill set, because I know that, I've worked in companies that have a Treasury department have the skill set, so we don't have to pay $100 million in fees to the private banks to do what we should be. I mean, you guys are all well paid, so you're paying, again, on top of that, to issue bonds, that something that, given that we have $1 trillion in debt and we're going to have debt for a long time, this is a skill set we should have our heads around. I'll leave it at that, especially given the investigation with ANZ. Thanks. Thanks, Jim.
Thank you, Senator Rennick. Senator Smith.
Thank you very much, Chair. I might just turn to competition review matters, if we may, just starting with some queries around non-compete clauses and the stream of work that's attached to that. Yes. And then I'd like to come to CDR, but it might be a little bit later. Great, thank you very much. Was the Department of Employment and Workplace Relations consulted by the Treasury with respect to the issues paper on non-competes and other restraints, which was published?
I believe the answer is yes, but I'll ask colleagues to...
Owen Freestone, Assistant Secretary, Competition Task Force. So we consulted with Department of Workplace Relations quite regularly through that process, yes.
So because I think to the casual observer, they would make the observation that this is sort of clearly within the remit of the Department of Employment and Workplace Relations. So what's the justification, or what justification do you use for it to be in the Treasury space?
So, Senator, I think the way we're looking at it is very much that this is a broader issue. So there are elements that I think you're right would cut across the employment portfolio, but from our point of view, it's also a competition issue. The way these clauses that we looked at restrain worker movement does have, again, effects on competition. So that's very much the lens we used in the issues paper you mentioned. And I'd like to say that also that what we were looking at went beyond non-compete clauses. So we had a range of other clauses, for example, non-solicit clauses, which prevent basically fellow workers or consumers from getting a employee from a company and moving that employee to another company. So I guess the way I'd frame it is that this is a question of labour mobility and competition, not just employment. So, yeah.
I might add, Senator, that within the Competition and Consumer Act, there are various exemptions which allow no poach agreements in an employment context, or arguably allow no poach agreements in an employment context. And in addition, they allow, arguably allow employers to fix wages at a minimum level. So put a cap on wages, if I could put it that way, and that's clearly within the Treasury portfolio. So it's one of those issues that sort of cuts across portfolios.
So can you just provide the committee with some insight into how that consultation, discussion with DEWA has been undertaken?
So I think, again, it's been quite a regular set of consultations. So we recognise that, some of the issues certainly are, again, labour market issues and might cut across legislation that they have portfolio responsibility for, like the Fair Work Act. And so whenever we've been, I guess, moving to the next stage of our thinking and process, we've been essentially consulting with them on those aspects. So, for example, over the past 3 or 4 months, we would have met maybe, I'm just guessing, but say a dozen times with them over that period. They're one of a number of agencies we consult with. As Mr Betsy said, the ACCC would be another one we've spoken to. But again, it's been a pretty regular set of discussions.
And at what level are these consultations?
Typically my level, or potentially the level below me, but usually around the band 1, which is what I am, so Assistant Secretary.
So the Assistant Secretary level.
Yeah.
Well, Senator, sorry, so Jason McDonald, I'm the Division Head for the Competition Task Force as well. We also have a regular meeting with all agencies at the first Assistant Secretary level where DEWA is invited, and we often talk about non-competes as well, and I've also talked to senior people at the department about this as well.
Okay. Has the Minister for Employment met with the Treasurer about on the topic of non-compete clauses or other restraint clauses?
We wouldn't be privy to the meetings that take place, so I would expect so. But again, we haven't been involved with those meetings. So.
But if the Treasurer was to meet with the Minister for Employment, it would be normal course for the department, the Treasury, to send him some talking points or background information?
If requested, yes.
So has that been requested?
I think what we're saying is that we're not familiar with the particular meeting that the Treasurer might have had with the Minister for Employment.
And you're not familiar because there would have been a process that would have underpinned a meeting, i.e. the provision of advice?
I think we provide pretty regular updates. So in the natural course of events, we provide updates to both the Assistant Minister for Competition and the Treasurer. And so it may have been that content would have been sufficient for particular meetings.
Would the Assistant Minister meet with the Minister for Employment on these matters, or would the Treasurer meet?
Well, I think he's the Assistant Minister for...
Competition, Charities and the Treasury.
Got an employment function as well.
And employment. So I presume they meet on a regular basis, and I would guess...
So just to be clear, Mr McDonald, my question is, would the Assistant Minister meet with the Minister for Employment on these matters?
So I think he's the Assistant Minister for Employment, an element of employment as well. So
you're quite right.
I presume in that capacity
you're quite right.
Potentially
as a result of the changes, yep.
In non-competes as well.
He's very adept at talking to himself.
Yes, exactly.
Just to emphasise...
I was being frivolous, yeah.
The Treasurer and the Assistant Minister are well informed of our workings on non-competes, and so I'd be quite easy for them at any moment to talk to any other minister that was interested.
Thanks very much. Just turning more to sort of broader industrial relations considerations, and I think we've touched on this previously before. How is the Competition Task Force examining the use of wage fixing agreements, or is it examining the use of wage fixing agreements?
So I think Mr Betsy mentioned that wage fixing agreements and no poach agreements are something we're looking at as part of our investigation. So the issues paper that we put out in April and May covered those issues. So yes, we are looking at them.
Do they give rise to any complexity or when considering these broader competition issues?
Could you be more specific?
To what extent are they sort of worthy of more detailed investigation, review, discussion, consultation?
I think we have heard concerns. So we again ran the consultation process earlier this year, and there were quite strong views that basically wage fixing agreements and agreements that prevent poaching between businesses might be anti-competitive. It's interesting that in a lot of other jurisdictions overseas, those types of agreements are banned for competition reasons. But in Australia at the moment, that's not the case. So there was quite a bit of interest in the fact that they are allowed here at the moment.
I should clarify, Senator.
Sorry, you'll have to speak up, officials. It does get a little bit noisy when colleagues at this end of the room are engaging in conversations.
Sorry, Senator, I should have said it's Marcus Betsy and I'm Chief Advisor to the Competition Task Force. I just wanted to clarify that when I talk about wage fixing, the problem that we're concerned with is not minimum wages, it's maximum wages when employers agree amongst themselves not to pay employees more than a certain amount. And they're the sort of agreements that would be regarded as just naked price fixing in many overseas jurisdictions, but because of the way the legislation's drafted in Australia, arguably it's exempt. That sort of conduct is exempt from the operation of the ordinary cartel provisions.
Yep. So just in regards to these particular issues, is the Competition Task Force working to a time frame?
Yes, we've got a 2-year time frame.
Right. Okay. What is the expected sort of over the next 6 months? What can external people to the Treasury expect to see around these issues?
As Senator, we're at the moment working through the feedback from the issues paper, and at the appropriate time we'll provide advice to the government on some potential next steps and get direction from them about how they would like to proceed.
And there's no time frame around that?
There's no time frame apart from the fact that we do end at some point within the 2 years we originally set up.
Yeah. And finally, has the Treasury ever made any representations to the Department of Employment about single interest multi-employer agreements potentially being anti-competitive or a form of wage fixing?
That is not an issue that the Competition Task Force has had any say or information or discussions with DUA on. But for the rest of the department, I presume they have, but that's not a function for the Competition Task Force.
Great, thank you. I have others, but I'll come back to
Senator Smith. Senator Barbara Pocock.
I have some questions. Thanks everyone for being here in relation to professional accounting bodies in their industry. Treasury's consultation paper. Do you want me to wait till people get here? You're great, thank you. Should have recognised you. Treasury's consultation paper on the consulting industry found that, quote, self-regulation via professional bodies may not be fully effective, and the number of audit standard-setting bodies may lead to overlaps and gaps. What led you to this conclusion?
Well, thank you. So, Tom Dixon, I'm acting first assistant.
I can't hear you, I'm sorry.
I know the feeling.
So I'll try again. So, Tom Dixon, Acting First Assistant Secretary of the Market Conduct Division. So in terms of what led us to that conclusion, so we obviously have a range of ways that we engage with the sector and people that are connected with the auditing profession and financial reporting profession. And as we were doing that engagement, and this dates back some time, I have to admit, that we were learning that there were a number of different accounting or auditing standard setting bodies as well as oversight bodies, as well as regulators in the sector. And then when we compared that to what happens in overseas jurisdictions, we noticed that there was potential for us to perhaps rationalise that in some way and strengthen the way that we actually produce those standards in Australia. And that's essentially the history on that.
Thank you. What's your assessment of the professional accounting bodies and their track record upholding ethical and professional standards within their industry?
So in terms of the professional accounting bodies, I think what you're talking about are those bodies such as CPA Australia or CARMS. And one of the pieces of feedback that we received during our consultation is there was sort of mixed understandings around what their role was in the standard setting scene in Australia. And on one hand, there were people that thought that they actually were primarily responsible for things like regulation, which was a misunderstanding because ASIC is actually the regulator of that conduct in Australia. And in addition to that, we received feedback along the lines that while the work that they had done on things like setting ethical standards was very valuable, there was a question around whether that could be strengthened and the integrity that could be strengthened even further by having that undertaken by a government body instead of a professional accounting body, recognising that that professional accounting body is representing its members. So that they're two sort of main sort of strands of feedback that we received.
Thank you. Do you agree that we have a patchwork framework of regulation in this country? And what are the issues that arise as a result? And how has this contributed to breaches of the Code of Conduct and other unethical behaviour that we've witnessed in the Big Four consulting firms and their partners?
So in relation to whether there's a patchwork, one of the things that the government's committed to doing is actually rationalising those standard setting bodies. So the government itself has come out and said that it thinks that what would be best is if there was a combination of the FRC, the Financial Reporting Council, the AASB, which is the Accounting Standards Board, and the AUSP, which is the Auditing Standards Board. And so the government is now working through a process of consolidating that into one entity. And so there'll be naturally consultation that we'll do as part of that exercise, and we're hoping to do that very soon. As to then the second part of your question, which is, well, to what extent does that contribute to perhaps fostering misconduct in the sector? I suppose one of the reasons why you might consider the consolidation is that when you've got those accounting standards and auditing standards all being considered in one place, it might be easier to communicate what some of those standards are. It might be more streamlined in terms of the way that people interact with those bodies. So it might actually facilitate a stronger regulatory component. I shouldn't say regulatory, I should say standard setting component. Naturally, ASIC has regulatory responsibility.
Thank you. Do you have a timeline? Does the government have a timeline, or Treasury, for the next steps on the issues that you've talked about?
Certainly. And the government's approach, in responding to what we call, I suppose, the PricewaterhouseCoopers matter and how that originated, it's multi-pronged. So there are a lot of activities that the government's undertaken, but I think the ones that you might be most interested in would be the merger activity, but also responding to the feedback that Treasury received with its issues paper on the regulation of the auditing and consulting profession and accounting profession. So in relation to the merger, the government had committed that the merger wouldn't occur before the 1st of July 2026. It's, the reason for that is that modifying standard setting arrangements in that sector comes with a high degree of complexity and risk, and so we wanted to give the industry certainty that it wasn't going to be rushed and that we would actually have a fulsome consultation exercise to make sure that we fleshed out all of the issues. And as you can imagine, there's lots. Things that go to things like appointments, conflicts of interest, standard setting. So that strand of work is on that timetable. In relation to then putting out the options paper that the government committed to, so that the timing of that is a matter for government, but I understand that the government's quite close to finalising its consideration of that paper, so I hope to see something soon on that.
Thank you. I wanted to focus on one professional accounting body, the Chartered Accountants of Australia and New Zealand, CANS. In the FPA inquiry into consultants, we heard evidence that suggested that CAN's response to the PWC scandal was severely wanting. In November 2023, they fined PWC a measly $50,000 for breach of bylaws, a lot of money to many of us in this room, not a lot of money to an entity with a $3.4 billion revenue in fiscal year 23. And CANS bungled Peter Collins' membership resignation. Just remembering it's a serious moment in the PWC scandal unfolding as we're sitting here. We've got search warrants all week from the AFP, as we heard last night. CANS bungled their membership resignation of Peter Collins, who is one of the officers that's being pursued by the search warrants, allowing him to avoid investigation by its disciplinary committee by letting him cancel his membership. We know the police have knocked on his door in August. In your view, was this an adequate response from CANS to the role of Mr Peter Collins and PWC in the tax leak scandal?
So one of the things that I think I would take into consideration if I was making a judgment one way or another would be what are the responsibilities in terms of regulation of the sector, and what are the limits of particular elements of the regulatory environment that we have. It may be that in the respect of CANS that they might have faced their own limitations in what they might have been able to do, or they may have, and it's not for me to judge in relation to how they responded, but I think what's important is that we actually have an approach that considers the full regulatory environment. So what we have explored in our issues paper is that there is actually some degree of regulatory gaps that we've received feedback on those regulatory gaps. One of those is actually in relation to ASIC's powers, and so the question is, are there things in the regulatory system that should be considered? And we'll be seeking feedback on that in relation to whether or not ASIC's ability to turn its surveillance activity into enforcement action, whether we should be considering measures on that front. And of course, one of the largest gaps that we canvassed in that paper was the firm level conduct. So the fact that despite the fact that there was or there could be potential misconduct, there's a very limited ability to take action against the firm in the way that the current laws are framed. The current laws are framed very much in relation to the conduct of specific audits and the conduct of specific auditors and conducting that audit. So in one sense, I suppose the way that we would look at it is to ask, well, how did the entire regulatory system respond, rather than, and I understand that you might be interested in an opinion on how did CANS respond, but if it's all right, I'd prefer to just focus my answer
You might
towards...
prefer that, but I'm asking you a question, and I agree with you absolutely about the regulatory gaps that you've spoken of, but this is a professional body and I'm asking you your opinion of its adequacy.
So I appreciate that.
Or Treasury's view about its adequacy.
So I suppose if I was to express a view, I would need to have perhaps a regulator's perspective on that. I think it's probably best that you would direct that to a regulator rather than a policy agency. And the reason I say that is because I haven't got all of the evidence of that sitting in front of me in terms of the circumstances and internal decision making that they made. So I think, questions around particular instances of misconduct, they would be best directed towards ASIC.
My questions are not about any particular incident. It's about the functioning of the body to do the job that it says it's meant to do.
So I think that goes...
a little like asking for an opinion, Senator Pocock.
I'll move on. The professional accounting bodies benefit from self-regulatory reporting and compliance mechanisms to promote ethical behaviour amongst their members. Do you think the self-regulatory nature of the professional accounting bodies is effective for co-regulating the consulting profession?
So that was an issue that we canvassed in our issues paper as well. Mm-hmm. And in that issues paper, and in response to that issues paper, we did receive feedback that suggested that even from the professional bodies themselves, that greater clarity in relation to the roles and responsibilities in the regulatory system would be beneficial, and ensuring that government, so we received feedback that suggested that government could play a stronger role in relation to those standards. So we're working through that.
So is it possible, in relation to those professional accounting bodies, that fees paid by members create potential or actual conflicts of interest for professional accounting bodies when it comes to their compliance enforcement and sanctioning of misconduct? You know, they're in receipt of income from those they are regulating. It seems like a very difficult conflict of interest, structurally inbuilt.
So that's something that I'm not able to comment on. I think I'd have to look into that further before I sort of made a remark on whether that was a conflict, how that conflict of interest is managed, because of course conflicts of interest pervade all sorts of entities and businesses, and then the question is, well, how do you mitigate those conflicts of interest? So you'd need to take a perspective on, well, how would those conflicts of interest be managed internally, and whether they've got separation between the decision-making and disciplinary actions versus other aspects of how they manage their membership.
First step, they have to identify them, Mr Dixon.
Understood.
Yeah. In Treasury's review of the eligibility requirements for registration with the TPB, the Tax Practitioners Board, it says that members of professional accounting bodies can bypass normal registration processes by utilising a specialised registration pathway. Through this pathway, potential tax agents do not, and I quote, need to hold a degree or diploma or need to complete board-approved courses in Australian taxation law, commercial law and basic accountancy principles, end of quote. Considering the track record of professional accounting bodies and their members, should these waivers continue?
So could I ask you to direct that question to Revenue Group? Revenue Group looks after the Tax Practitioner Board.
Okay.
Senator Pocock.
I will do that.
Last question.
And I'm done, I think.
Great. Thank you. Senator Bragg.
Thank you.
Thanks very much, Chair. I'd like to ask you some questions about cryptocurrency. Now, we've traversed this several times. So I'm trying to work out, I guess, what's happening inside the Treasury, inside their government. Now, in the last Parliament, there was a significant review into crypto. There were recommendations. The Treasury issued a consultation paper before the election. The new government promised to regulate crypto. They issued a almost identical consultation paper. The Treasurer promised that this would be dealt with after the FTX collapse, and every time you turn up to estimates empty-handed. So I guess I'm wondering, why is Australia unable to regulate cryptocurrency?
Thank you, Senator. I'll ask Mr Kelly.
Because there's clearly a problem inside the executive government, inside the Treasury, because it's not normal for you to come every 6 months and to give the same answers. So I'm really looking for some insight.
So Mr James Kelly, First Assistant Secretary, Digital Competition and Payments Division.
Yeah.
So the state of play on that issue is they're currently working on the draft legislation to implement where the government's at following the consultation process we ran at the end of 2023.
Great. When's it coming out?
So we're working to prepare the exposure draft legislation, ordinary course of business, the kind of release of exposure drafts or the introduction to Parliament. It's kind of a matter for government.
When are you thinking the exposure drafts will be released?
I think that's a matter for the government, Senator.
Pardon?
That'll be a matter for the government, Senator.
What's happening, Minister Gallagher?
I don't have a date for you.
That's a shame.
Yep. I don't have a specific date for that. But if I can provide you with anything more information, I will endeavour to do so.
Well, is the government intending to conclude and to deliver on its promise to regulate crypto in this Parliament?
I think that's the intention, yes.
It is, okay. So the plan is to have a draft bill exposed for comment and then to introduce legislation and then pass that before the election.
Well, that's a matter for Parliament, isn't it, really, as to how it travels through. And I note this was an issue where the Coalition didn't regulate crypto, so it's another area where we've inherited. If there's anything further I can provide you, but we have committed to legislation. I understand that there's work being done on that draft legislation, and if I can provide any more info, I will.
Okay. Can you understand some of the frustration in this sector about the uncertainty about investing in this country?
I can understand, and certainly some of the discussions I've had is people have been more interested in how it's going to be regulated, so being involved in the consultations to date.
Okay. But do you think it's a risky strategy just to sort of keep on deferring this? I mean, if there's another collapse...
We are deferring it. There's been a consultation process, and we have made a commitment.
All right. You've had a long time to do this
regulate
now.
digital and crypto asset platforms, and that work is underway. I mean, as you know, this part of the Treasury portfolio is very legislatively heavy. There's a lot of legislation, a lot of work being done. If there's anything more I can update you with about timing, I will, Senator Bragg.
Well, let's go to the money then, because we're not seeing any output in terms of even a draft bill at this point. So how much money has the government spent on developing a crypto framework which doesn't yet exist?
I don't know. I don't have any figures with me.
I suppose the relevant figures, Senator, is in the 24-25 budget. The government provided ongoing funding, $1.5 million a year to Treasury to progress digital asset-related reforms.
Yeah.
So we have a team that is working on these issues. It's working on developing the relevant legislation that you've been discussing, consulting and advising on work related to central bank digital currencies, and there was a paper put out by Treasury and the RBA, I think last month now, and kind of working out through other issues, that are related to the kind of crypto and digital asset space.
So, Treasury's been given $1.5 million to work on crypto.
Yes, Senator.
That's in addition to, is that the whole amount of money allocated, or would some of it be hoovered up in the BAU of markets?
That represents the whole amount allocated within Treasury to crypto. That's equivalent to a team of about 6 or 7 people. That's the kind of level of resources we have going to it.
I haven't done a bill yet, okay. And has APRA been given money as well for this?
It was ASIC.
ASIC. How much has ASIC been given?
So they received funding of $1.5 million to enhance its digital asset capabilities in 24-25.
Okay. But
and I think provisional, I think money has been set aside for when the legislation takes effect, that they're able to administer it.
Okay, so right now we've spent millions of dollars to have no bill, and we're 2.5 years into the term. So that's not so good on the regulation side. Now, what about on the tax side? Because there was a Board of Tax report. Now, who's here from the Board of Taxation?
Senator,
they'll be later.
It'll be Revenue Group when
they're not here right now?
No, they're here later.
They could be.
Oh, that's very prescient. But they will be here, so we can ask them that. So let me just quickly check. So, look, I think that's all I have. So, basically, your answer on the regulation piece is that it is under consideration. Who's the Minister?
Minister Jones.
Okay. Have you spoken to him about this?
Personally? I mean, I have had a number of discussions around, obviously, the legislative program in this area because it's so huge, really.
And does he seem to be alert and onto this?
Absolutely.
Okay,
as he is across all areas of his portfolio.
So he knows this is a priority.
Okay.
I've almost finished.
Okay.
So he knows this is a priority?
Yeah.
Okay.
There are a lot of priorities in this portfolio area.
Okay, so I guess my final question is, we've touched on the investment certainty piece, but what do you say to consumers who might be hurt by the failure of the Parliament to enact, or the government, I should say, to enact regulation? I mean, it's unregulated, right? So if they do their shirt, they do their shirt. So
Well, I would say it's a shame that this wasn't dealt with or commenced properly under the former government, and that we have not only put resources behind it, but consultation effort behind it to make sure that we are in a position to legislate and protect consumers.
You've had 2.5 years.
So that is what I would say.
Well, Senator, can I
it's not a very good
clarify on that? Consumers are not completely exposed in this sense. To the extent to which the ASIC obligations as a financial product, to which an Australian financial service licence obligations apply, they still apply in the normal sense to financial products. So
they do that, but it is also true that a lot of this would not be regulated, and in fact the Treasurer himself said in October 2023, quote, "We are releasing a proposal paper today that recommends making crypto exchanges and digital asset platforms subject to the existing Australian financial services laws." So why would the Treasurer say that if there was no problem to solve?
So what we're examining as part of this, and what we've done through the consultation, is ensure that there are no gaps in the system. As Mr Kelly pointed out, the work has been broad. It picks up everything from the asset platforms themselves, central bank digital currency, markets for tokenised assets, and decentralised finance. There is a range of things that need to be considered here, and we need to ensure there are no gaps in there, as you say, because we don't want consumers being adversely affected.
I just want to, because now you've gone there, I have to just ensure that you've got all the right information, because the Treasurer said in the Financial Review on the 17th of November 2022 in relation to the FTX collapse, quote, "These developments highlight the lack of transparency and consumer protection in the consumer market, which is why our government is taking action to improve the regulatory frameworks while still promoting innovation." Now, Mr. Chalmers said this on November the 17th, 2022. That's the position of the Treasurer, who is at the apex of your agency. So he said there's a consumer protection problem.
So I'm not saying there's not a consumer protection problem, Senator. I completely agree with what the Treasurer has said there, that there's absolutely room for improvement, which is why we're doing this consultation on the and preparing the exposure legislation.
It's taken years and years and years to do nothing.
Well, and when you introduced your bill, nobody liked it. And
a lot of people liked it, actually.
No,
it's not true.
Didn't. Well,
a lot of people liked it.
Well, I don't think
I can send you a whole list of people who liked it.
I don't think that's a fair assessment.
At least there
we've
is a
been
bill.
working closely with stakeholders to get this right. We look forward to introducing some draft legislation or exposure drafts soon.
Well, I did a bill with 5 people. You've got 1,000 people working for your Treasury.
Nobody
You can't even do one bill.
No one
can't even do one bill.
All right.
A lot of people did.
Okay.
Like it.
The usual things happening. Okay. Now, we've got Senator Smith and Senator McKim, and we're due to break at 6:05. I'll go to Senator McKim first.
All right, thanks. I've only got a few relatively quick ones, I think, for markets. I noted the speech given last week by Ms Cascott-Leib, the ACCC chair, who raised concerns about a lack of competition in the retail banking sector and supported reforms to make it easier for bank customers to switch home loans and compare deposit products. Does Treasury have a view, and if so, have you provided any advice to government about competition issues in the retail banking sector?
So we have and are preparing advice to government on this. I'll ask my colleagues to join me at the table.
And sorry to interrupt, Mr Phil, but I just want to isolate the merger legislation away from this discussion. I'm aware of that.
Oh, no, that's okay.
That legislation, it was more around specific issues relating to the banks and reforms to make it easier to switch home loans and compare products.
Yeah, of course. And the other point I was going to make was that, and the Council of Financial Regulators have a tasking from the Treasurer at the moment to consider competition, and particularly the competitive offering of small and mid-tier banks as well. So that fits within. But I'll ask Ms Kelly.
Thank you.
So in addition to the CSLR review that's currently in play, on the 15th of June there was an announcement made around the Treasurer announced 5 measures that respond to the 2 inquiries ACCC had done in relation to retail deposits and home loan prices. So there were 5 key measures announced as part of that. One was requiring banks to tell customers when their interest rates changes, and improve disclosure requirements. The second one was around requiring financial product comparison websites to better disclose how they determine and rank and also their financial relationships with the product providers. The third one was to make it easier to switch loans by having customers have direct and easy access to the form needed to exit a mortgage, which came up as quite a common pay point.
The what, sorry?
When you exit a mortgage, there's a form you have to fill out, and it was actually quite hard for a lot of consumers to find it. It was a real pain point that came up through the consultation. So consumers have to be provided with direct and easy access to that form. There is work with the banks to help improve how customers are notified about bonus interest rate offers and when that introductory period ends, and including through potential development of industry standards. And lastly, Treasury has been asked to investigate how behavioural economics and prompts could be used by the banking sector to better encourage customers to switch to cheaper loans and retail borrowing products.
So apart from that, thanks, Ms Kelly. So apart from that last one, which is a request to Treasury, have those other 4 been implemented?
So they're currently in progress. Some will require legislation, and some require industry practice to change.
All right. And in terms of those that will require legislation, where are we in that? Are we at the draft stage, or has legislation been provided to the Treasury?
So we're working on it at the moment. So it's in progress.
All right. Thanks. I noticed research from the... I'm sorry, I'm just not sure who to address the question to, perhaps to Mr Philp in the first instance, but research from the Australia Institute shows that the big banks make a disproportionate amount of profit from owner-occupier mortgages compared to their other products. Between them, the big 4 banks extracted $17.6 billion from households with owner-occupier home loans. So the research shows that the profit on owner-occupied housing loans comes to 39.5% of the big 4 banks' total profit, while those loans, in terms of their quantum, are just 24.6% of their business. So they're making a far greater amount. The amount of profit they're making from those loans is far greater than the amount of their business that is made up by those loans. How are banks able to disproportionately extract profit from owner-occupier loans? Is that a lack of competition issue? I'm just trying to understand what's kind of going on here, whether Treasury's cast its collective mind in that direction.
Yeah, look, it's not a report I'm familiar with. I'll see if my colleagues are, and they can dive in. What we've seen recently is an increase in competition in home loans. The net interest margins for the banks is at a 20-year low. I think it's at 1.8% or thereabouts at the moment. A lot of the home loan, the way competition tends to work in the home loan market is a lot of it is driven through brokers, and I think about 70% of home loans are conducted that way. So a lot of the competition is through the broker side of the house. Look, I'd be hazarding a guess as to how those numbers work, Senator. As I said, I'm not familiar with the report, so
could I ask you to just take that on notice?
Yeah, of course.
And, even maybe ask one of your officers to have a look at that report and provide a response to
happy to
those questions.
And as I said, I mean, this was the key. The Treasury is concerned about competition in banking, particularly retail competition. It's why there were the conditions put on the ANZ transaction, and particularly why there's that tasking to the Council of Financial Regulators about small and mid-tiers and the competitive offering they can bring to the market to really drive competition for the benefit of consumers.
Okay. No worries, thank you. And this is my last question. Thanks, Chair. In October, the government announced that Treasury is consulting on legislation to introduce a general prohibition on unfair trading practices. Is it the plan to release an exposure draft of that legislation? And if so, when might we expect to see that?
That is the intention. I'll ask Mr Dixon to take you through the detail.
Thank you.
So just in relation to unfair trading practices, I'm presuming you're talking about the announcement of the 16th of October, where it talked about consulting on the design of a general aid as well as specific prohibitions.
Yes, that's right.
And so, yes, it certainly is the intention that the government would be consulting.
And would, just to be clear, would that include an exposure draft of the legislation? Have you gone that far down the planning process?
As part of every legislative process that we would undertake, there will always be a consultation that's built into the system.
I understand there'd be a consultation. I'm asking specifically about whether an exposure draft will be released.
Yeah, so perhaps I'll just throw my colleague.
Aidan Storer, Assistant Secretary, Consumer Branch. So in terms of the process going forward on unfair trading practices, so the next step is actually to release a consultation paper.
Yep.
And as the Prime Minister indicated in his press release, that's going to consult on the design of what was called Option 4 under the Consultation Regulatory Impact Statement undertaken last year, which is the design of a general and specific prohibitions. And then obviously feedback that we'll get to that will then inform what could be a design that we would take forward then to both obviously a preferred proposal that the government would consider and then bring to the states and territories for a decision. As with the Australian consumer law changes, that's the process that works. Post that decision on a preferred option or model, then there will be a sort of a drafting legislative process that would take place, and we expect that would happen in the first half of next year.
First half of next year, but there's been no decision on whether you'd actually release an exposure draft of the legislation.
Look, the usual course of practice would be we would release exposure draft legislation in that process.
Okay, thank you.
Kim, so senators still have questions for Markets Group, so the committee will now break for dinner and return at 6:50 with Treasury Markets Group. Thank you. Thank you. Nana dinner time. committee resumes with the Department of Treasury Markets Group, and I go to Senator Smith.
Thank you. Mr Phillips, just to finish off a line of questioning that I pursued previously, has the Treasury ever made any representation to the Department of Employment about single interest multi-employer agreements potentially being anti-competitive or a form of wage fixing?
One moment, Senator. I'll see colleagues.
Would be a lot of people if the answer's no.
Dr. Freestone, you want to?
Jason McDonald from the Competition Task Force. The Competition Task Force hasn't, Senator, but there may be other parts of Treasury that have, but it's not our responsibility for that policy issue.
That's why I thought I'd direct the question to Mr Phillip and not...
I understand, Senator. I'm not familiar with elsewhere in the Treasury providing advice on that issue to the Department of Employment.
Great. Okay. Thank you. So the answer was you're not aware?
I'm not aware.
That's right. Great. Thank you very much.
I mean, consistent with Mr McDonald, whether somewhere else has or not, I don't know.
Great. Thanks very much. I'll turn to the matter of the CDR. Mr Kelly, is the CDR in some form of purgatory?
So, Senator,
would you like an update on the CDR?
We'll soon discover. We'll soon discover. We'll soon discover.
Yes.
So I might just begin with some questions, Mr Kelly. Since the passage of the Action Initiation Bill on August the 15th of this year, what work has Treasury undertaken to determine the first actions to be included in the CDR, and what time frames is Treasury working on?
So, Senator, the Minister in early August kind of gave a clear direction as to what the work we would be doing on CDR, and that related to making rules around improvements to consents and operational enhancements and extension of CDR to non-bank lending sector. The Minister, in what he said publicly, was also clear that that would be that and some other work would be the focus, and not making rules to allow action initiation to happen or to designate particular actions.
So what's the progress of that?
So we have, the Minister released draft consent and operational enhancement rules. We've now finalised the consultation and finalised those rules. They would have just made those available to the Minister, so expectation is that they will be made soon. We're also very well progressed in providing the Minister with a draft rules to extend non-bank lending, CDR to non-bank lending, and should have that with the Minister soon.
So recommendations or a course of action has been provided to the Minister, and a further set of recommendations is expected soon.
So rules are the kind of CDR version of regulations, which can be made by the Minister. So we've provided the first instalment of final rules relating to improving the consent arrangements in CDR and some operational enhancements, such as allowing banks to more easily be able to use CDR themselves. So that is now with the Minister, just very recently. So our expectation is they will be made soon by the Minister. And then for non-bank, extending CDR to non-bank lending, the Minister's kind of flagged the timetable for that to happen. First part of that will be to do consultations on draft rules. Those draft rules will be with the Minister soon.
Great. And Senator Gallagher, will Minister Jones be dealing with these matters expeditiously?
Well, I can't answer on behalf of him, but I would expect so. You know, that is his approach. He's a hard-working minister with a lot on his plate.
In relation to the CDR bill that passed the Parliament, passed the Senate recently, is Treasury aware of why there was such a significant delay to the bill being debated and then finally passed in the Senate?
That's not a matter for Treasury. That was a matter.
Minister Gallagher, perhaps you could illuminate.
Yeah, it was a matter of you know, our legislative program and getting agreement and getting it done.
No, it sat on the program
Yeah,
It sat on the program.
Well, as you know, Senator Smith, you don't see one bill in isolation. There's a whole lot of considerations given to the legislative program.
Mr Kelly, did the Minister's office raise any specific concerns about the bill or tell you why it wasn't progressing? Why it wasn't being brought to a debate in the Senate?
Senator, we had discussions with the office at times around the bill and whether it needed to progress. I can't think of a discussion that kind of was expressed in the way you've put it. It's been the case for CDR for a while now, where we've been going through a process of, let's say in the 23-24 budget, the government kind of put a pause on expansion beyond non-bank lending sector into other sectors. We've been doing a lot of work to understand some of the issues that are affecting the consumer data right around costs for the data holders, as one example of that, and some of the barriers to the use of CDR. So we did a public consultation on could we replace screen scraping and be able to rely on CDR as a viable alternative. The answer for that, a very short answer, is not yet. So we've been doing that kind of body of work, and now the Minister's kind of set the direction for CDR, reflecting that work and the sort of issues that we need to address to make sure CDR works efficiently. And the Minister's indicated that action initiation is not a priority at this stage, and that's been the way. Given those other issues, that's been our focus as well, is to make CDR work as well as it can before trying to expand it too fast.
Did Treasury consult or work on any amendments to the CDR bill?
What are you referring to? To move amendments that were not moved, or well,
work on any amendments that the Senate may not have seen in the end?
Well, I think the Treasury worked with the Assistant Treasurer on the CDR, and the bill, as agreed to by the Parliament, has passed. So we're not going to go into the nature of any things that may or may not have happened. Like, there were no amendments moved from my
That's not my question.
Recollection.
My question was to Mr Kelly. Did the Treasury consult or work on any amendments to the bill? Not whether or not any bills, whether amendments were introduced to the Senate.
All right, because what actually happened doesn't matter. It's what may have happened.
It's the work that was perhaps happening that the Senate didn't see any light of. Mr Kelly?
Senator, I'd have to take that on notice.
In his speech at CEDA on August the 9th, Minister Jones stated the CDR will expand non-bank lending data early in the new year with the intent to be operational by the middle of 2026. Is that a deadline that the Minister is continuing to work to?
That is the deadline we're working to, Senator. And
thank you.
At this stage, we're confident we can achieve it.
Thank you, Mr Kelly. Many experts have long argued that the restrictions on derived data use are stifling innovation within the CDR. What are the specific risks that Treasury is concerned about regarding the scope of entities that can receive CDR data?
That's kind of a big question. So, Senator, in some ways, one way to think about what's the issue of derived data is CDR has its own kind of data protection and data handling and use requirements that sit separately and above what's in the Privacy Act. So if you're a recipient of CDR data and you're in the CDR system, you have to handle that data in a particular way, and you've got to be ready, say, to delete it on request and those sorts of things. And if you combine CDR data with other data you hold, that also means then all that other data and kind of data information derived from that becomes subject to CDR and those additional rules. So in some ways, having the differential treatment of data is given, in some ways, recipients and people thinking about business models to use CDR an interest and an incentive not to get into the CDR system because it comes with these overlays and costs.
So the Treasury's argument is that the Privacy Act principles may not provide sufficient consumer protection?
So, Senator, the issue in some ways that CDR confronted when it started was Privacy Act wasn't then at a kind of process of, so at the moment another portfolio is considering reforms to the Privacy Act, and I think the first tranche of legislation's being proceeded with. But there's a kind of general view that the Privacy Act of itself has failings in some areas, and one really obvious example of where there are issues, it has to kind of carve out for certain small businesses. So in the CDR system, where a lot of the recipients are fintechs, then often they start very small. So you just got this gap. The Privacy Act wasn't seen as fit for purpose. CDR created its own set of rules to kind of deal with that issue, but now the issue we face is that the differences between those rules really generates or affects the incentives of fintechs and other people to use CDR to deliver useful innovations and efficient kind of outcomes for consumers.
So the Privacy Act considerations, who is the Treasury consulting with around that? So Attorney General's Department, or is it just within the Treasury?
So, Senator, we've got a broad awareness on what's happening on kind of Privacy Act reforms. That's important to us to understand what's happening there, so we understand how some of those boundary issues may play out. The OAIC is also one of the regulatory agents with respect to the CDR for those kind of privacy and data protection elements. So we have a good relationship with them. But as I said at the a few questions ago, actually our focus is on the consent and operational enhancement rules on expanding CDR to the non-bank lending sector.
So the privacy concerns, is there a risk that the privacy concern considerations could further delay aspects of the CDR?
It's not affecting our current planning and delivering the commitment of the Assistant Treasurer. He did, in his speech that he made and his statements, he has identified some things, that kind of go to that issue. So one is, if we are to, when we get to the stage of bringing in actions and designating certain actions, making sure they themselves don't cause problems or conflict with other government policies. So, there are areas when you get to them, they may turn up, but that's not the current focus.
How would you characterise the representations that industry has made to the Treasury since the passage of the bill?
Do you have so industry's broad. I think the passage of the bill has been well received. Has been well received by many of the people we speak to.
But it would be fair to say also that they're waiting with anticipation.
I think, Senator, the Minister was very clear in his speech and the communications that it's not the immediate priority. So I think they're accepting. They're happy that the bill's being passed. We're also in a world in which some players in the CDR system are actually finding ways to use CDR to deliver actions. So people are finding other ways to use CDR to initiate actions. So that's one thing we're kind of really interested to understand. And the Minister's also kind of flagged his interest in experiments. The very first experiment that Data Standards Body and Chair did was around using the existing CDR framework along with some industry standards to allow for action initiation with respect to initiating a mortgage, for example.
And just to be clear, has the Treasury been consulting with the Attorney General's Department? Has the Treasury started consulting with the Attorney General's Department around these privacy considerations?
We've had discussions with the Attorney General's Department just about some of the issues we've faced. My area within Treasury is involved in some ways the central agency role oversighting the Privacy Act reform, so kind of been seeing both sides of that. But it's at a very general level. It's just like this is we have these differential regimes that has implications. And the ideal world in some ways would be to have a Reform Privacy Act that delivers the appropriate standards that could be applied across all sectors, including into the CDR space.
In summary, the Minister has now been presented with some matters on which to decide or release, and will again soon be presented with a second suite of matters to decide and release.
Yeah, that's a fair comment, Senator.
Yep. Thank you very much. Thank you, Mr. Cam. So it's still in purgatory, but repenting for...
I think the days of penance are past, Senator.
Sorry?
The days of penance are past, and we're flat out doing what we have to do.
Great.
CDR.
Thanks very much, Mr. Kelly.
Great. Senator Bragg.
Thanks very much. Just with markets, I just want to fly through a few different issues, if that's okay. So, firstly, can I ask you, where are we up to with the quality of advice review? I think it's now 700 days since the review was given to the government. When will the second tranche be seen?
So Andre Moore, Assistant Secretary, Banking Review, Investment and Financial Advice Branch. We're in the legislation development phase right now. The Assistant Treasurer indicated that he wanted to progress the bill in this term of Parliament, and we're continuing to work to those timeframes.
So what's the timetable?
Well, then the next stage will be an exposure draft legislation.
Okay.
We're working on developing.
When's the exposure draft coming out?
Well, that ultimately will be a decision of the government and the minister. I don't have a time frame for that at the moment.
Okay, have you got a draft?
We don't have a complete draft. No, we're working on it.
You haven't got a draft yet. Okay, so exposure draft would have to happen pretty soon, wouldn't it, if you were going to meet this Parliament?
It would have to happen in the coming, period. Yeah, pretty.
Fantastic, clear as mud. What about? Have you been using non-disclosure agreements?
We have been using non-disclosure.
Okay, how many?
I'd have to take that on notice.
Okay, who are you consulting with in secret?
So we're consulting. We've consulted confidentially with the full spectrum of stakeholders that are heavily engaged in the development of this legislation.
With the super funds?
Yes.
Oh yeah, how many?
I'd have to take that on notice.
Now, with CBUS?
I'd have to take that on notice. I can't recall exactly.
Okay, they're pretty good at lobbying, I think. All right, so the position of the department is that you're trying to work to the minister's commitment of this, doing it in this Parliament.
Yeah, so as with all legislation, we work to the government's priorities, and
of course,
and that's exactly what
and you've got a non-disclosure agreements, and you've got a bill coming soon, we hope. Okay, thank you for that. Now, can I keep on flying on quickly through these things? Retail payments. What's happening? Who's doing that? Retail payments, debit surcharging ban, and all this other business.
Oh, that's within.
Yep. How's it going?
Good, thanks.
So what's happening there? You've got a new big announcement from, I think, even the Prime Minister, was it, about you're going to ban debit surcharges?
That's right. Sally Etherington, Assistant Secretary of Payment System and Financial Innovation Branch. On the 15th of October, the Prime Minister made an announcement of an intention to ban debit card surcharges pending the RBA review.
Great. Now, the legislation before Parliament to give the RBA more payments powers, that would vest more capacity and authority in the RBA, wouldn't it, to determine payments policy in Australia?
Yes, but in this, not directly related to surcharging. They already have authority on surcharging.
That's right. So, effectively, you're not proposing to remove the sovereignty of the RBA. Sorry, maybe sovereignty is the wrong word. You're not proposing to strip the RBA of its capacity to regulate surcharging, are you?
The government's position is that they feel that the surcharging rules are not working properly.
Okay.
They have indicated that if the RBA, they have indicated their preference to see the findings of the RBA review the RBA are undertaking. Should the RBA not want to act on surcharging or update the regime, they've announced a disposition or a willingness to get involved.
Okay. Has the government told the RBA that they're disappointed with how this has been handled?
That's not the position of the government.
Okay. Well, what is the position?
So we don't need to say that to the RBA.
Okay, you just want this to happen?
Yeah.
Okay. And
and the announcement was, I think, accompanied by the RBA's consultation paper, if I remember correctly.
So you want this to happen, so the Prime Minister of the country announces this particular announcement.
Along with some additional resourcing to the ACCC.
Yes.
Yeah.
So then who actually executes the change on this proposed ban? Is it still the RBA?
Well, I think...
Does anyone know?
So, Senator, that might depend on...
Was it just another one of these media releases which goes on to delivering nothing?
This may depend on the outcome of the RBA's review. There are a pathway where the RBA might be able to control this. There's also a pathway in which the government may wish to introduce legislation to ban debit card surcharges.
Okay, so you're basically saying either you do it or we'll do it.
I'm not saying that. What I'm saying is that they're the options available depending on the outcome of the RBA's decision. Because the government is quite conscious that that needs that advice, particularly to ensure that there's no adverse effects on small businesses.
Okay. So who was consulted on this matter before this announcement? Who was consulted?
The RBA was consulted.
Yep. Any actual private businesses, small businesses?
Not specifically before this announcement, but we have been consulting with a wide range of stakeholders on this issue for a long time.
Is there a risk that small business will absorb some of this cost?
Well, that's some of the issues that we need to work through.
But you've already announced it. The Prime Minister of the country announced this.
Yeah, and in the announcement, I think it makes it clear we want to ease costs for consumers without added costs for small business or unintended consequences for the broader economy.
Okay. What's the commencement date of this ban?
We are, I think in the media release, I'll change it. We are prepared to ban debit card surcharging from 1st of January 2026, subject to the consultation undertaken by the RBA and sufficient steps and safeguards to ensure both small business and consumers can benefit from lower costs.
Okay, so it's going to happen in about 18 months.
Well, yes, well, I think that would take into account the work that the RBA is doing.
But hasn't this been held out as cost of living relief?
Well, it will.
Pretty callous, isn't it?
No.
In 18 months?
That we're trying to work to bring down costs for consumers.
It's been proposed as cost of living relief now.
Well, I don't think anyone has said it's cost of living relief now, other than the money that we've given to the ACCC to tackle excessive charging right now. So that money has flowed to them, and I don't know if we'll get to them tonight. Okay. They're sitting out there waiting. But you
I'm going as fast as I can. There's a lot of things that have been announced and not a lot of detail. So,
well, I've just I've answered your questions.
Well,
you asked me when. I've answered that.
Who did you consult?
You've asked me whether we're thinking about small business. I've answered that.
Who did you consult?
Well, I'm aware that the ACCC, the RBA...
Yeah, they're all government bodies. Any actual people?
Well,
or any...
this is the point. I mean, the RBA has a discussion paper out. So what, we're not allowed to... We've got to consult widely before we can say we want to lower the price of charges on your debit cards.
I can't think of any other time when the Prime Minister of the country's announced a payments reform due to start in a year and a half. You haven't even worked out how you're going to do it yet. Anyway, that's your answer.
We have been very clear in the release, Senator Bragg, so I think all of those criticisms are unfounded and unfair.
I thought you'd say that. Anyway, if that's your answer, fair enough. I'll go on to the next thing, Chair, if that's all right. Now, what's happening with the payment service provider licensing framework?
That's another piece of legislation that we are working on and we are hoping to introduce in this term of government.
So who's this going to actually apply to? This is not the crypto thing, this is something else.
No, this is for payment service providers.
Okay. So when is it going to happen, do you think?
We're working on the legislation now and hopeful to release exposure draft in the coming months.
Have you got a draft bill?
Not a completed one.
Same as the other issue, not completed. What percentage complete is it?
It's in initial stages of being drafted.
Sounds like 20 or 30.
So our intention, Senator, is to have an exposure draft ready for release in the first half of 2025, so next year.
Okay, so how many people in Treasury are working on these payments issues?
Well, Mr. Kelly,
On the payments licensing reforms, there would be a team of 5 people. And it's quite a detailed piece of legislation, so it has taken a lot of time to work through all the policy specifications.
Is stable coins in this, or is that in our long-lost friend of crypto regulation?
So the stablecoins part will be progressed with the rest of the payments licensing, but is actually done by a different team, but they'll be progressed together.
Okay. So how many people are working in markets at the moment?
In markets group?
Yeah.
Senator? I think we're about 270 people.
Okay. Feels like it's a bit slow going there, yeah? Would you say? There's a lot of projects
Senator?
seem to go there to sort of die or not be progressed.
So, Senator, so we have constraints when it comes to the legislative agenda to have things on there, and things are outside our control. Within the group, though, we are also responsible for the things that you're aware of, whether it become the financial system, market conduct, corporations law, competition and consumer policy, the competition task force, CDR and a range of other things. And we prioritise those things that are important to the government of the day.
Feels like we're a long way away from getting the financial advice stuff, the crypto stuff, the payment stuff. Is the constraint here the Assistant Treasurer's office?
No.
It's not.
No.
I
know you like to besmirch him every opportunity you can.
He's going well.
He has a very large workload and a very high legislative agenda. Probably, I would think, next perhaps the attorney, the biggest legislative agenda.
Well, apparently
and there's
he won't take a
constraints,
meeting.
for example, in drafting resources and other things. And this tends to be the legislation, in my experience of these bills, are often contested and complex.
I know it's tough, but I mean, I read in the paper that the only way stakeholders can get meetings with him is by going to a Labor Party fundraiser. So he seems to be a bit of a problem. Finally, I'm trying to go as fast as I can. But I should note that, you don't think it's a bit odd that the Prime Minister of the country is making these announcements on things which are clearly not concluded or in any state ready to show the public?
No, I don't have
I don't think
it's
strange?
unusual. No, I think the Prime Minister is involved in almost every aspect of, I would think, across government. And
I think people look forward to the follow through on some of these things. So
Yep.
I just hope we don't have to have
are.
Groundhog Day at these next estimates hearings. We have to ask the same questions again, like I have today.
Okay.
I have one more round.
Final question?
I'm getting there. Yeah. The last one I was going to ask you about was. No, I think that might be it on markets.
Okay,
No, I have to. I just want to, if I may, Chair.
Senator Smith.
Thanks very much. There is the continuing saga in regards to Simply and PEXA and E-Conveyancing in Australia. And rather than in our limited time sort of going through all of the various complexities around that, has the Treasury met with representatives of Simply to discuss their concerns?
I'll ask the team if they're familiar with that.
Yes, we have.
Thank you very much. Has the Treasury put their mind to a particular course of action that can be recommended to government to resolve this impasse?
Senator, this is an issue that is primarily an issue for the states.
Many competition issues are.
Certainly, and we anticipate that there may be interest from some of the states in progressing the issue through the vehicle of the National Competition Policy. But that's a matter that's currently under consideration.
Okay, so correct me if I'm wrong. When we're thinking national competition policy, we have the issues paper process, which was a good read, but that is not going to resolve this particular issue or be a forum for resolution of this particular issue, given that we're going through a issues paper, consultation paper, negotiation with the states, etc., over a competition reform program that is expected to go for 10 years. So I'm assuming you don't mean that process.
No, I do mean that process.
Oh, you do mean that
so
process.
There's maybe 2 points I'd make on this one. The issue when it comes to e-conveyancing has been raised a number of times, as I understand it, through the Australian Registrar's National Conveyancing Council, and the view is that this is a matter that the states can take forward, particularly interoperability standards that New South Wales may be in a position to pursue. Where the national competition policy might become relevant is if one of the states want to take it forward as part of that. Now, that doesn't mean that we're waiting for a 10-year program and it comes at the end of that. The whole basis of the national competition policy is particular reforms can advance as they're ready and as quickly as they can. So much like mergers, has progressed quickly when there's the appetite to be
fair. To be fair, strong consultation process.
Yep. Thank you.
So, are you offering up a pathway here that if the state regulatory body, so that the state's regulatory body was to refer or write to the National Competition Task Force, that might be a pathway to bring the disparate parties to a conversation around this?
Possibly. All states sit as part of the national competition policy. We'd expect it to come through one of the state treasuries as part of that process.
Right, okay. Has Treasury met with PEXA on the matter? Has the... Sorry, I'll let you finish.
I don't think... I certainly haven't met with PEXA, and I don't think the Competition Task Force has met with PEXA. I can't recall any meeting that we've had with PEXA. I'm being a bit careful because, Senator, you may be aware that I'm on secondment from the ACCC, and I had some engagement with them in a professional capacity at the ACCC.
Fair point, and I will, just for full transparency, ask similar questions to the ACCC. Mr Phillip, are you aware of Treasury officials having met with PEXA?
I'm personally not aware, but I can happily take that on notice.
Has the Treasurer met with PEXA or representatives of PEXA?
Not aware.
Again, we're not aware.
Has the Treasurer met with Simply?
I'm not aware, but you can take that on notice as well.
I might just finish with this comment that's contained in a Simply media statement, just as a way of encouraging sort of, continued due diligence on this matter. The media statement says, unfortunately, industry's consistent cries for help to the Treasurer and Minister Lee have fallen on deaf ears. But, Mr Phillip, I think you've provided what might be a suitable pathway for this particular issue to get some better traction. Great. Okay, thanks very much. Can I ask some quick questions here about supermarkets?
Sure.
Great. They will just be... Does anyone else have a line of questions?
So I'll go to Senator Pocock.
Thank you, Chair.
I understand that Senator Smith has some more questions, Senator Bragg has some more questions. For those waiting in the wings, we are 4 hours behind. We've been unable to make an agreement on time management. The committee will meet at the 8:35 p.m. break and attempt to provide some advice to those who are waiting. Senator Pocock.
Thank you, Chair. Thanks for staying with us. I was keen to ask some questions about the scams prevention framework. In terms of the government policy being brought forward, is your understanding that the intention is to pursue world's best practice when it comes to scams prevention?
So in relation to scams prevention, the government's committed to doing, I suppose, or trying to achieve two things. So one that it's trying to achieve is to, first of all, prevent scams from occurring in the first place. So it's consulted on legislation where there's a framework of principles-based regulation, as well as providing for specific measures that could be targeted towards specific sectors. And as a consequence of that, you would be expecting to see an uplift in the hardening of the approaches that that particular sectors are going to take towards preventing scams. And then another limb of that is, of course, providing opportunities for redress for people that are victims of scams.
But I take it we are aiming for sort of world's best practice here. We're not aiming for a mediocre scheme that does those things.
So yeah, in terms of what the government's looking for, it's looking to have an ambitious approach that generates a significant uplift in scams prevention in Australia.
And what work did you do comparing different approaches being implemented in other jurisdictions, and what did you find, if you can keep it short?
Certainly. So I have a colleague here who might be able to elaborate on international comparisons on that front. But yes, we have been very cognizant of what's going on around the world, and also thinking about, well, given those international developments, what would be relevant for the Australian context. We're kind of fortunate in some respects that there have been approaches that have been taken internationally, and I think they might have had some ambition associated with them, and some of the unintended consequences have been able to be flushed out, and that's helped us learn from those situations, which positions, I think, Australia in a good spot to learn those lessons and come up with something that we think would be fit for purpose. But I'm happy to invite colleagues if they would like to add more to that.
Thank you, Senator. My name's Ms Shelley Davis. I'm Director in the Scams Task Force. So during the process of considering and providing advice to the government on the scams prevention framework, we've had engagement with counterparts in the UK and with Singapore and with New Zealand in particular to understand the arrangements that they have been developing and putting in place in their countries. Thinking about the institutions available in each country and being able to bring that back to Australia to think about, with the arrangements we have here, what might be appropriate in the way that we give advice to the government about what could be developed here in Australia.
Thank you, that's really useful. Mr Dixon, you sort of touched on prevention. Clearly there's sort of punishment in here. The thing that I'm interested in, why reimbursement is missing from the draft legislation.
So I think perhaps there's a point of clarification. We actually do have redress as a central part of the legislation. Yes. Perhaps what's not so obvious is, like, well, whereabouts in the legislation does that exist? Like, where did the opportunities for redress come from? So I'm happy to talk through.
Sure. I mean, I've had a look at it. It's sort of a 15 to 20 step process from what I've seen to get redress.
So it might not be that it's a 15 to 20 step process. I think what you might be observing is that there's multiple channels that you can go through if you want to pursue redress. So, for instance, one of those channels that you would have seen in the draft legislation is the internal dispute resolution mechanism. Then there's an external dispute resolution mechanism. But in addition to that, there's also the ability for a victim to actually seek redress through the court. In addition to that, the regulator itself can make a claim to a court on behalf of a victim. A victim could join a class action. There are several ways in which that redress could occur.
Which it just seems really complicated to me. If I get scammed, you kind of look at this sort of flow chart of the different options, and the easiest option, or the option that should be happening, is obviously going straight to your bank. And what we see there is a huge sort of asymmetry in access to information. They've got it all. You've got nothing. And what I'm hearing from scam victims is that the banks don't give you information because they're not obliged to. And so I'm interested to look at the FOI documents that were released recently from Treasury say that Treasury recommends, to quote, a mechanism to determine redress and reimbursement of funds for breaches by a bank under sector-specific code. Was this mechanism included in the government's draft framework?
Yeah, so just to clarify in relation to seeking redress, and I think you made a comment that perhaps it would be simpler if you could just go to a bank and just seek redress from a bank. So,
well, that's what people are trying to do, but they run into all sorts of hurdles.
And I think part of that appetite might come from the frequent media reporting that you might see where the bank, or there is a bank that is involved in part of the scam activity that's occurred. But there are really important parts of the economy that are also contributing to scam activity in Australia. While it's typical that a bank might be at the end of it, the vulnerabilities that exist in the scams ecosystem might not necessarily be originating in the bank. They actually might be originating in other sectors, such as in relation to digital platforms or telecommunications. And so what's really important is that there's a framework in place that tries to incentivise an uplift in capability and preventing scams from occurring across all of those sectors. So,
surely the way to do that, though, is to put them on the hook. So say the banks, as in the UK, up to a certain limit, exclusions for things that I think are very reasonable, banks on the hook. The bank then has to go and decide with Facebook or the telco that the scam comes through. How do you apportion this? Is it 50-50? And they're very good at actually doing this. They do it for all sorts of things. I'm concerned that it seems to me Treasury is recommending something like that, and yet the draft doesn't have that. So I'm interested.
So the draft certainly does
contain... Is what was recommended by Treasury actually in the draft?
Yes, so the draft bill definitely contains the ability for there to be...
That's different to a sort of reimbursement framework that we see in somewhere like the UK, though.
So if I could just finish. So just so we can make sure we're understood, the bill definitely does contain provisions that enable there to be redress in sector-specific ways. And so if that one of those sectors, if designated, if that's the banking sector, there would be ability to set rules and create codes that talk about that. In relation to then, well, how is that different to the UK? Yes, it is different to the UK. And what we're looking to, what the government is looking to achieve is providing incentives that are not just in relation to the banking system. I don't think you could be, it's possible to be too confident that putting all of the onus on one sector of the economy would result in the incentives that you need to see across the other sectors of the economy that are creating vulnerabilities in the system. And so while there might be a sentiment that perhaps the banks would be in some position to negotiate to create those incentives on other parts of the economy, the legislation actually is trying to do that, and it's doing it by making sure that there are responsibilities across key sectors of the economy and not just an incentive on one part of the economy. And that means looking at, for example, as the government's explained, its intention to, for instance, designate digital platforms. And we know that digital platforms are rising, a speedily growing vector of scams in the economy. And so it's actually really important that there are multiple points at which we are tackling the problem, not just one.
No, I don't disagree with that. I'm just concerned what I hear from people in the community, from consumer groups, is that the UK's model is the way to go, where you put business on the hook. That then means if you're on the hook for something, you're obviously investing in all sorts of systems to detect scams early, to do all the things. And we've seen it at the banks; they're not even doing payee confirmation. Like, it's an absolute joke if they have wiggle room, and we've seen it time and time again with banks putting their shareholders' profits ahead of customers.
So this bill does put obligations on the banking sector when the banking sector is designated as a sector, and it would put obligations on other sectors too. So by virtue of the fact that just because we're the bill is looking at other sectors doesn't mean that the banking sector is in some way exempt. So in addition to obligations on the banking sector, the government has the ability to put obligations on other sectors.
And so how much do you expect scam rates to be decreased by after this legislation?
So we haven't done specific modelling where we're able to look at a behavioural response. It's a matter for a much more sophisticated modelling capability than I think exists anyway. But
sure.
What we are able to do is examine, in terms of costs and benefits, what the level of scam activity is currently in the economy. And so we know that there are losses of around $2.7 billion in 2003 from scams. So actually it takes a very small amount of improvement on reduction in scam activity to generate very material benefits.
Mm-hmm. Sure. And I think reducing scams is an important part of it, but I think reimbursement is also, in a cost of living crisis, you'd have to say reimbursement is a equally big part of it. And so how do you see that happening? From the figures I've seen, UK banks currently reimburse 67% of scam victims. Australian banks reimburse between 3 and 5%. It's hard to get the exact data. Are we going to bridge that divide, or do we just accept that Aussies are going to get caught up with through AFCA or the courts or whatever else it might be?
So the figures that you're quoting are figures that trying to capture a past state, and the question I think that you're getting to is, well, what's the future state, and will the legislation be able to bridge the gap that you're seeking to close? Yeah. And looking at the legislation, it's covering 6 general principles that are requirements upon designated sectors. There's requirements on governance.
Sure.
In terms of,
I'm just worried we're going to run out of time. So I'm just interested. Have you looked elsewhere that's done this and gone, okay, well, their reimbursement rate went from 35% to 20%. I guess we've got the UK to look at and say, if we did this, we could probably expect that we would head in that direction. Where are we heading with this sort of framework approach?
The key objective is in the bill to prevent the scams from occurring in the first place.
Yes.
So that you're not in a position where you've got a consumer that requires reimbursement.
I take that point, but people are going to get scammed.
Yeah, I understand that, and and that's why there is the other limbs to the bill that enable redress to occur.
But my concern is, and talking to consumer groups, they're really hard to navigate. People don't have time to be going and finding a lawyer to get their $450 back that they got scammed on. Buying something online.
And there's nothing in that bill that says the consumer would be required to find a lawyer. For example, that's the
advice I'm being given. It's very hard to navigate this with the banks.
I can give you testimony that says that there's an aspect of the bill, in particular the external dispute resolution process. That's a free service that would be made available to consumers.
Who's that by?
So the government has expressed an intention that would be AFCA, and that by making that AFCA, that gives you the ability to have one external dispute resolution process that covers all of the sectors. So it wouldn't just cover, for instance, if
banking one-stop shop.
One-stop shop, which is, I think, exactly what consumer groups have been saying that they'd be looking for.
And thank you, Chair. Just on AFCA, in what percentage of cases where complaints have been put to AFCA, has AFCA found in favour of the consumer versus found in favour of the bank? Do you have that data on you?
I don't have that right in front of me, but I can take that on notice if that's okay.
Cheers. Thank you.
Thank you. So for time management, the committee has now met and agreed that we still have questions, some questions for markets and questions for revenue and related tax groups. The committee's agreed to spill over APRA onwards in the program, so APRA and all agencies after APRA. So we release tonight APRA, the ACCC, Housing Australia, the ABS, the Productivity Commission and AUSParliamentLive on the basis that the committee has agreed to a spillover. To those of you who have been waiting patiently, we thank you for your patience, and you go with our thanks this evening.
We're happy to let AUSParliamentLive be discharged completely.
Released entirely. I think we can deal with that later.
Okay.
Can I just say this happens quite a bit at this committee. Is there any better way to organise the program that doesn't fly in a lot of these bodies from Melbourne and Sydney and have them sitting here all afternoon only to be released at 7:45 in the evening? Like, just a matter for the committee to consider. You know, I just think there has to be a more professional and better way to deal with people who are taking time out to provide accountability to the Senate. And this is probably, in my time, this has happened almost every time I've appeared, that we've sent away people who have travelled to be here and who have waited since lunchtime or abouts, because they come early in case they're called on early to appear.
Thank you, Minister. For the Markets Group, Senator Smith.
Great, thank you very much. Just some questions around supermarket initiatives. Can I get an update on when the mandated food and grocery code is expected to be operational?
Thank you, Senator. Tony McDonald, Assistant Secretary, Competition and Digital Platforms Branch. We're currently working on the remaking of the code. We've had an exposure draft of the code released, received a number of submissions and are working through those at the moment. We expect the date of effect of the new remade code to be 1 April next year, which is the time when the current code lapses or expires.
Thank you very much. Can you give me an update on when the anonymous complaints mechanism is expected to be operational?
So the part of why we're working to remake the code and have that in place ahead of the operational date of the code is to allow the code to be fully operational by 1 April next year. That's what we're working towards.
So is that 1 week prior to the 1st of April? Is it a month prior to the 1st of April that you expect the anonymous complaints mechanism to be in place?
Expect the complaints mechanism to be in place when the code is operational.
Great, thanks very much. Can you provide an update in terms of when you expect the code supervisor, which was recommendation 6 of the Emerson Review, to be operational?
We're working on the code. So the code supervisor role commences when the new code is operational. So we're working towards that being position being filled and effective from the date of effect of the new code.
And then finally, in regards to the unit pricing code and the consultation process around that, can you give us an update in terms of work that is underway in regards to that?
Senator, that's my area. So updated you the other day at the Cost of Living Committee.
Oh, that was, to be fair, that was like the 11th of October, so that was 4 weeks away. Yeah.
So in relation to, so there's 3 elements to the unit pricing code that were part of the government's decision. One was around the introduction of penalties for non-compliance with the code, and that work is already is being progressed at the moment. So we've already started taking that forward, and that will obviously, subject to drafting resources, as we often have with these things, is something we're prioritising to progress. In relation to the consultation that was mentioned, and we are working on the basis that we would kick that consultation process off in the first quarter of next year. And a key part of that, I guess, input into that will be the final report from the ACCC Supermarket Inquiry, which, as you know, have looked at the unit pricing code and certainly on the interim report had information around around opportunities to enhance the unit pricing code, and certainly we want to be informed by that. But that's really when the consultation process will really formally kick off in the first quarter of next year.
So the unit pricing code reform not expected to be in place and operational before 1 April 2025?
No, you wouldn't think that would be in place by that time, given that.
Thanks very much.
Senator Bragg.
Thanks very much. I just wanted to ask Markets Group about one more thing. Do you know about the compensation scheme of last resort?
We do.
Yeah, very interesting idea, isn't it? Very interesting. Now, how's it going down there at the CSLR?
So I'll ask my colleagues to come in here. CSLR has been operational, is it for
Since April this year.
Yep.
And who's running it?
So there is a scheme operator.
Oh, who's that?
Do you know the names?
So Lauren Hogan, Acting Assistant Secretary of Regulators and Capital Markets Branch. So the CSLR operator is operated by a company called CSLR Limited.
Does any natural person work there?
Yes, so the CEO is David Berry.
Okay, and who's he?
The CEO.
Who appointed him? These are not trick questions.
Sorry, what was the question?
Well, who's David Berry? Who appointed him?
So the government. So the minister appointed. The government appointed the chair of the CSLR.
Who appointed him?
The minister appointed the chair of the CSLR operator.
Who's the chair?
So Joanne Block, who was appointed on 1st of February 2024.
Who appointed Joanne Block?
The government appointed.
Yeah, who?
So that was the minister who appointed Ms Block.
Minister?
I would expect it would be the Assistant Treasurer.
Okay. Minister Jones?
Correct.
Okay. He's appointed Ms Block, and the board or the chair has appointed the CEO?
I expect that would have been the case, but can take that on notice.
All right. So how much money is in this fund?
So there has been a number of levies that have...
your nameplate there.
Oh, sorry.
That's okay, thank you.
So there's been a number of levies that have been paid. The first levy was paid by the 10 largest banking and general life insurance groups, and that was $241 million. The second, and that's the pre-CSLR backlog. The first levy period was paid by the Commonwealth, and that was $4.8 million. And then the second levy has been paid by industry, and that was a total of $24.1 million. That was paid in October this year.
How much?
$24.1 million.
And how much in total was sitting in this fund?
So around $290 million has been levied so far.
So does the organisation report to Treasury, or does it report to... Who does it report to? Where does it sit? Does it work, the people working your building in Treasury in Canberra?
So CSLR operator is independent, but Treasury engages closely with the CSLR operator.
Right. So where are they based?
They're based physically. They're based in Melbourne.
They're in Melbourne. Okay. So I think in one of your papers you estimated, Treasury this is, estimated the admin costs will be $3.7 million. But according to the record for financial year 25, the CSLR is estimating an admin cost of $6.4 million. So vastly higher admin costs. So what is it spending the money on?
We'd have to take the specifics on notice, but generally they're the ones operating the scheme, so that includes receiving the complaints that come through from AFCA, assessing them and making the payments.
Right. Apparently last week the CSLR posted a job ad for a communications partner. So what's that job?
That would be a matter for the CSLR operator.
Okay, well, do we have CSLR coming? No. Okay. So what sort of agency is CSLR?
So they're not a government agency, they're a corporate entity.
It's a corporate entity. So is it established under legislation? Mm-hmm. Okay. So is it a Commonwealth corporation? What is it?
No, I believe it's a corporate entity that is appointed by the government as the operator of the CSLR.
Okay. Is it undertaking a statutory function?
It's is operating the scheme as set out in the legislation.
I'm wondering whether it's undertaking a statutory function on behalf of the public, taxpayers.
Yes.
It is, isn't it?
It's operating a scheme for the government.
It is, okay. So how are we supposed to ask them questions if you're not going to answer questions on their behalf?
Well, I imagine you could call them.
They could be, I assume they could be called to the committee.
I don't want to encourage more people to sit in that room and then get sent home despite the chair's best efforts to keep everyone on track, but I would have thought...
this is the truncated program that we have. We're doing our best to get through it. So,
are you?
Okay, well, clearly I am. I'm actually quite efficient in my questions and generally your answers are quite efficient as well. So, but we can't ask you these questions, clearly.
We're happy to take...
You don't know about the admin costs of this scheme, is that what you're saying?
Well, I don't have that information before me.
Nor do we, Senator. We'd be very happy to take that on notice and respond.
So can they do that?
They can, but if it assists you, I think ASIC is the oversight.
Yeah, if you can take those questions on notice about why they're spending so much money on administration and what this communications partner job is going to do, that would be much appreciated. Mm-hmm. Thanks, Chair.
Okay, that concludes the questions that we have for Treasury Markets Group. Thank you very much for answering them. You go with our thanks. I call Department of Treasury Revenue Group ATO TPB ACNC and we'll take a brief suspension while they arrive. The committee resumes and we welcome Revenue Group, ATO, Tax Practitioners Board and the ACNC. Thank you, Ms Brown and team, for being with us, and Commissioner Heffernan. And we are aware that Commissioner Woodward is she joining remotely, or she's an apology, and we have other staff. Yes, and we have other staff. We have received your opening statement, Commissioner Heffernan. Are you willing at this stage to table it, or would you like to make some opening remarks?
I would like to make some opening remarks.
Please go ahead.
Thank you. It's always a privilege to appear before this committee with my executive team, including newly appointed Second Commissioner, Mr Allen, and Ms Fish is joining online due to a bout of COVID. Mr Allen's appointment was announced on the 25th of October. He leads our frontline operations group and brings a wealth of experience and expertise to the role. I'm very pleased, as is the government, to have Mr Allen in this critical role. So I'd like to make some brief comments on 3 areas that might be interesting to the committee. Firstly, I'd like to update the community on progress in collecting outstanding debt. Through our efforts this year, we've seen a slowing in debt growth, but collectible debt remains high at around $50 billion. The task ahead of us is substantial, and we can't ignore our obligations under the law as Australia's principal tax collector. In many cases, if a business can't pay what it owes to the government, other creditors are often also going unpaid. The ATO's role is an important one because when businesses are prompted to take action sooner, they're better able to get back on track. Doing our job protects viable businesses who rely on prompt payment from their business customers. This also protects employees for whom the consequence of unpaid superannuation can have a lifetime effect. My expectation is that we, the ATO, act with empathy and respect. If a taxpayer cannot meet their tax obligations, we encourage them to talk to their registered tax professional or contact us directly to understand the support that may be available to them. This could include payment arrangements or, in some instances, remission of general interest charges. In many cases, people can put payment plans in place through our online services. I want to emphasise this message to any taxpayers who may be experiencing vulnerability. The ATO can and will work with you to find a way forward, so please contact us. Ultimately, we serve the community and the government of the day, and our approaches must meet community and government expectations and standards. Secondly, I'd like to update the committee on our approach where a taxpayer makes a voluntary disclosure. I consider this important given recent reporting in relation to voluntary disclosures of prior tax fraud or evasion and the misunderstanding of confusing voluntary disclosures on one hand with settlements. Where a taxpayer incorrectly reports on a prior year return, penalties do apply. But the base level of penalty depends on the culpability of the mistake. For example, evasion can trigger a 75% penalty of the tax shortfall, but a lack of reasonable care, only 25%. When a taxpayer comes forward with voluntary disclosure to correct what they have previously reported to us, and they do so before we notify them of our intention to conduct an examination of their tax affairs, Section 284.225 of Schedule 1 to the Tax Administration Act automatically applies an 80% remission of the penalties that would otherwise apply. This occurs irrespective of whether the prior year error was a simple mistake or deliberate evasion. The law is clear on this. The substance of this provision was inserted into the tax law in 1992 as part of the original self-assessment provisions and has not been substantially altered since then. The Parliament has set this deliberate mechanism to encourage taxpayers to correct their past reporting of their own accord. Without this pathway in place, taxpayers will be far less likely to come forward and make corrections. This is important because the success of Australia's self-assessment system relies on the vast majority of taxpayers doing the right thing and making corrections when required. Importantly, taxpayers who receive reduction in penalties due to voluntary disclosures do not find themselves better off than if they were compliant from the beginning. These taxpayers are still required to pay 100% of the tax that is owed, with interest and the reduced penalties. Our most recent annual report shows that in the last financial year, around $1.3 billion was raised as a result of voluntary disclosures, including around $700 million from large businesses, which shows the importance of this approach. And thirdly, Within Australia's tax system, there are a number of features that help to ensure those with the most capacity to pay meet their obligations, and we know that targeted system transparency is a motivating factor, particularly for some of our largest taxpayers. Last week, we released the 10th Annual Corporate Tax Transparency Report, which is a legislated exception to taxpayer confidentiality. Pleasingly, it shows the ATO received $100 billion in income tax from large corporates, and of that, $97.9 billion was paid at lodgement, and the remainder collected through our compliance activities. This is the highest since corporate tax transparency reporting began, a testament to the Tax Avoidance Task Force, which helped secure more than $33.2 billion in additional tax revenue from multinational enterprises, large public and private businesses since establishment in 2016. Back in June, in my first appearance before the Committee's Commission of Taxation, I said I was optimistic about the opportunities for the ATO to build on existing work and deliver for the Australian community and government. Having spent more time in the role, I'm now even more confident about what the ATO can achieve as an entity, as a group of dedicated public servants. Thank you, and we look forward to assisting the committee this evening.
Thank you, Mr Hefferon, and the committee tables your opening statement and that of Ms Woodward as well. If there are no other opening remarks, we'll proceed straight to questions, and I'll go to Senator O'Neill.
Thank you very much, Chair. Questions, if I can, first to the TPB. Mr De Cure, I understand you're here. We just had a question about whether Mr O'Neill might also be here. Is he? Oh, great, okay. We just couldn't spot him. Senator Pocock was asking. Thank you. Would you be able to give a quick update without compromising in any way the current investigation into PWC, its current and former employees?
Thank you, Senator. As we discussed at a previous appearance, at that stage there were 9 ongoing investigations. 4 of those investigations have been finalised with the decision to take no further action in those 4 cases. There are 5 still ongoing investigations, and to preserve the procedural fairness of those investigations, I'd like to say no more.
Okay, thank you. And we do look forward with interest to your findings. Could I ask if you're aware of the documents published on Friday last as part of the Parliamentary Joint Committee inquiry into ethics and professional accountability into the audit and consulting sector? In particular, the supervised remediation correspondence between PWC International and PWC Australia.
I'm aware of the matters you referred to, and I've been obviously seen the press, but no specific awareness other than that, Senator.
Okay. Can I therefore table before this committee documents that are already in the public place? The remediation letters. There are multiple copies here if people need to refer to them. What is your understanding of what's embedded in those documents, Mr De Cure?
Only what I've read in the press, Senator. So
okay.
I really would prefer not to discuss in any detail matters relating to Pricewaterhouse, because we have to maintain the procedural fairness of those investigations.
I acknowledge and accept that, but this is a matter these are documents that are already in the public place that are about the intersection between PWC Australia and PWC Global. Yep. Not just the tax matter, but other matters that are referenced in this in terms of the behaviour of the entity itself. Can I draw your attention to item 8 of the correspondence, which I hope might come before you shortly. On page 8, and it states that the firm, brackets PWC Australia, shall not provide to any regulator or other governmental or legal authority any formal, significant or substantive submissions or responses, whether oral or written, regarding any of the topics until the network representative and I, that being Global General Counsel Diana Weiss, have reviewed and approved the materials. So in essence saying
from the firm in the US, they cannot communicate with any entity, including regulatory agencies, without checking with their international counsel. Does that notionally provide any concerns for you about PWC International and its influence over the PWC Australia interactions with your body?
Senator, I understand this to be a matter that relates to the contractual arrangements between PWC Global and its Australian representative firm. I understand under the circumstances why they might want to conduct their relationship that way from the perspective of PWC International. I understand why they might want to conduct their relationship that way. Other than that, I think it would be inappropriate for me to express an opinion in the current circumstances.
Could I ask you to take it on notice and perhaps provide us with what you think might be appropriate on further consideration, Mr de Cure?
Will do.
Thank you. And perhaps that's what might happen with the next question as well that I have here. The remediation letter, and there are 3 here in this set of documents, threatened the expulsion of PW Australia from the global firm if the terms of the remediation were not complied with. And that means that if PwC were to provide any evidence to the TPB or the ATO, not to mention the AFP or the Parliament through the Senate inquiries or any other inquiries that we might have, without the approval of PWC International, they would be subject to expulsion from the global firm, which is a pretty significant consequence in anybody's book. Do you see this as an attempt by PWC International to intimidate their own firm in Australia as witnesses to your body and to this Parliament from engaging in relevant investigations?
I'd prefer not to express an opinion on that, Senator.
Can I just observe that the committee's report is imminent, and this whole matter, I think, is a very important case study. I hope that the documents that the Senate has been able to extricate from PwC provide you with some useful opportunities to consider how they've interacted with you, because certainly PwC have provided consistently a very, very tardy, delayed response to any questions that we've had from the Senate. And in these documents you will see references to the way in which their publication strategy, their media management strategy, appears to have been prioritised above a timely response to the inquiries of the Senate. And I hope that that's not how they've interacted with the TPB or the AFP, but it has been consistently the experience of senators both in the F&PO committee and in the Parliamentary Joint Committee on Corporations and Financial Services. So I hope that these letters provide you with some further insight into the cultural practices that seem to be manifestly obvious to us as inquirers into what's gone on behind the scenes at PwC.
Thank you, Senator. We'll make sure that these letters are reviewed in full.
I've got other questions, but I'll share the call.
Thank you. Senator Bragg. We'll go in 10-minute blocks. Senator Bragg.
Thanks. I have some questions about tax policy to Treasury. Ms Brown, how are you?
Good, thank you, Senator.
Good. What date was advice on negative gearing capital gains tax changes requested by the Treasurer?
Diane Brown, Deputy Secretary, Revenue Group. Senator, we provide advice on negative gearing, all aspects of the operating tax system on a regular basis and on an ongoing basis.
Okay, so there hasn't been any request for advice?
As I said, we provide advice on an ongoing basis. I think indicating whether we have or haven't been tasked or being any more specific actually would compromise our ability to provide.
Sorry, I can't.
Being any more specific than saying what I've said would probably compromise our ability to have a constructive relationship with government.
No, I understand that. So has there been any advice presented, finalised and presented to the Treasurer on these matters?
Sorry, Senator?
Has there been any advice finalised and presented to the Treasurer about these issues?
I think the Treasurer has said he's not expecting any big advice, we just provide advice on an ongoing basis around the operation of all aspects of the tax system.
Okay. So there hasn't been any particular request on these issues?
So, as I said, it's very hard to be specific about whether or not we've been tasked, because I think we've had this discussion before at other hearings. It'll lead to a game of what are you working on, what aren't you working on, ruling in, ruling out.
Yeah. Now, I'm only asking you because I think the Prime Minister and the Treasurer have said publicly that there's been some specific new advice on these issues in relation to negative gearing in CGT. So that's why I thought it was a reasonable question to ask you.
I think what the Treasurer has said is that it would be unusual if Treasurers or governments weren't getting advice on all matters of the tax system. And so that's, part of him doing his job.
Yeah, I understand that. I don't think it's an unreasonable line of questioning. I'm just trying to get to
and I'm just telling you that it's a matter of, I think there's been a view by some that there's a single piece of advice, and what I'm trying to say to you is that it's a matter, and what Ms Brown has said is it's essentially an ongoing role.
Yeah, I get that. Of course.
Between the Treasury and Treasurer.
Of course. Well, I'd be worried. If it wasn't. So, the Treasurer has said publicly, though, Minister, which might be helpful for all purposes here. He said recently, quote, "We haven't been convinced that would have that being changes, I imagine, would have positive consequences for supply," end quote. So I'm just wondering if that's a reflection of what Treasury's advice is. I assume it must be. And I'm seeking some...
Yeah, I've got that quote. I think it's primarily a supply challenge. We've made that clear in a lot of different ways. And one of the reasons why we're not going down the path of changing the negative gearing arrangements, abolishing negative gearing or abolishing the capital gains tax discount is because we haven't been convinced that that would have a positive consequences for supply.
I think and I would agree with that. So I'm asking Treasury whether that's based on their advice.
Senator, there's an FOI that was released on the 1st of November.
I haven't seen that, sorry.
Yep, FOI 3751. In there, advice was in accordance with FOI laws released, and that advice says there are a number of tax settings that affect demand for and supply of housing. However, there are a range of other factors that have a more significant effect on the housing market than tax, such as the planning and zoning system, construction sector capacity and interest rates. I think that's consistent with what the Treasurer has said.
Okay. So is this matter now considered to be resolved by Treasury?
The government has announced it's not making any changes to negative gearing.
But you would expect the Treasury to continue to brief the Treasurer on matters around the operation of the tax system.
Yeah.
Yeah.
But so that advice, so you're referring to advice in an FOI?
Yes.
Right. That you provided to a citizen?
Yes, all our FOIs are released publicly. I think in response to a journalist. It's given to the journalist, and then all of the FOIs are disclosed on a disclosure log on the Treasury website. So it is publicly available to everybody.
Okay. So as far as you're concerned, that matter has been concluded for the short term. I was just confused that on one hand you're saying you can't go into advice, then on the other hand you can say this is the advice. So
only because it's on the public record, Senator.
Okay, so because it's come out through an FOI, you're happy to talk about it?
I read out what was on the document that was released publicly.
Okay, I'm just trying to work out what the standard is in the Treasury at the moment, because clearly we had a discussion earlier, you weren't here, Ms Brown, but you may have seen it or maybe had other things to do, but there was a...
No, everyone's just been waiting in that room.
Not sure people are doing.
For a committee that's very focused on productivity, there wasn't a lot of productivity happening inside of the building.
Look, I don't like to make assumptions about what other people might be doing. Safer that way. So there was a discussion, Ms Brown, about the quality of a public interest immunity claim that was made by the Treasurer. Effectively, the Information Commissioner found as part of a separate process that perhaps wasn't commercial in confidence. So I guess I'm just wondering what sort of standard we're working on here in terms of how Treasury is going to be engaging with this committee and more broadly, because it seems to me that if information is exposed by a journalist or by the Information Commission, then you talk about it, but otherwise it's all very secretive.
Well, I think it's a pretty standard practice, as far as I've been in the Senate, that matters, you can ask about whether advice was provided, whatever, but going to the contents of that advice and what the advice specifically was has not been something that's been, open to the scrutiny of the committee.
Okay.
I think that's how it's operated. But obviously, if there's been an FOI and material has been found to, should be released under the requirements of the FOI Act, then that information is public.
So the FOI advice is dated 6 September, is it?
The QTB that you're referring to, QB 24000030, is dated the 6th of September, yes.
Okay, and so you're confident that when the Treasurer made those statements about changes to negative gearing and CGT being bad for supply, bad for housing generally, that it's linked in part to this advice?
You'd have to, I think you're asking me to read the Treasurer's mind. It is consistent with what the Treasurer said, but I wouldn't presume to be able to read his mind.
Well, is that something that you can take on notice as the Minister representing?
So you want me to take on notice?
Well, I just want to know whether that statement is based on Treasury advice. I don't think it's a
it would be
nasty question or anything.
It would be informed by advice from Treasury, and I presume others, for example, in the housing sector and other stakeholders. Of course, it would be informed by advice from others.
So you happy to? So is that your answer?
Mm-hmm.
Okay. So when the PM said that negative gearing questions were not terribly clever to Ms Carvelis on the ABC on 19 September, he was already in receipt of that advice, wasn't he, from Treasury?
So we give advice to the government, as I said, on an ongoing basis, and there could be various reasons for which that advice is provided. I think the Treasurer has said he gets advice on negative gearing annually in relation to the Tax Expenditure Insight Statement. We will provide meeting briefs that would include commentary on what people have said, and similarly we provide these type of briefs which often reflect information that will help the Treasurer to address questions that people are likely to ask.
What about the Prime Minister? Certainly. Do you provide advice to the Prime Minister, and you do it on a regular basis?
His department provides him his advice. The Treasurer may have provided our advice to the Prime Minister, but I don't ordinarily.
You haven't provided it to him directly. Has Treasury provided this advice to the Prime Minister or his department directly?
So we don't ordinarily deal directly with the Prime Minister.
So that wasn't my question.
Well, I think it was. It was. Treasury does not provide advice to the Prime Minister.
So on this occasion, it didn't happen.
Well, it doesn't normally happen. Treasury provides advice.
Did it happen this time?
Treasury provides advice to the Treasurer. PM&C provide advice to the PM. That's how it works.
So it didn't happen this time?
What didn't happen this time?
I'm wondering whether this negative gearing and CGT advice was given directly from the Treasury to the Prime Minister or his department.
So the Treasury hasn't provided any advice to the Prime Minister.
Or his department?
We probably had, well, I don't think we advise his department.
So you didn't provide it to the department?
Provide what?
The negative gearing and CGT?
There is information sharing between departments
This
as
is
a
as clear as
routine.
mud. I'm just trying to get a straight answer.
Well, we're trying to give you the straight answer.
Okay.
Like, it just seems to me that you don't understand how the administrative orders operate. Like, Treasury briefs the Treasurer, PM&C brief the Prime Minister. There might be information exchange between the Treasury and PM&C on certain matters, and then that feeds into advice the Prime Minister
Sounds like it was
gets.
given to the Prime Minister's department.
Okay.
I don't know what you're talking
I'm just
about.
sharing the call
It's getting
in
madder and
10-minute
madder.
blocks, and I'm going to Senator Barbara Pocock.
Thank you, Chair, and thanks everyone for being here yet again. I want to go to the question of PWC, and I'd like to ask questions about the way that ATO dealt with PWC. And Mr Hirshhorn, my questions are probably going to be ones that I'll direct to you. And I want to table 3 documents that are the basis of my questions, and I'm pretty sure you will be familiar with them, Mr Hirshhorn. The first is your answer to my question on notice number 94, where you detailed your conversation with Mr Luke Sayers, who was, of course, ex-CEO of PWC at the time of the confidentiality breaches, on August 2019, where you read out the details of internal emails. I'm sure that meeting is imprinted on your brain, documenting the breaches which you detailed to him. So that's Quan 94. It'll be passed to you shortly, I hope. I bought a few copies. The second document is Mr Sayers' answer to my question on notice number 181, where he repeats his evidence that he knew nothing of breaches of confidentiality in PwC's tax business until 2023. And the third one is Ms Meredith Beattie's, who was General Counsel to PwC through the years of the confidentiality breaches, Quan 190, which is her file note, contemporaneous file note, of her conversation with Mr Sayers following your second memorable meeting with him in February 2020. So if I can go to those, are you familiar with the 3 of them?
Yes. This probably is imprinted on Mr Hirshhorn's mind, but
I think it
just
is.
in case, having the documents in front might be handy. Thank you.
Just a reminder for those who are following along, it's a bit of a rabbit hole, but it's important. In the Quan 94, your first of 2 significant meetings with Mr Sayers, you list point by point concerns about inappropriate use of professional legal privilege, promoter penalty activity, assisting clients to prepare responses that included false and misleading information, breaching confidential Treasury consultation and consultation information and commercialising it, subversion of foreign investment review board processes which are under process of examination at present, poor attitudes within PwC to the ATO and other regulators, the failure within PwC to call out poor behaviours and practices, and to offshore offences of interest to other regulators. As evidence of these concerns, you read out a select number of emails. Have I described that appropriately?
That is correct.
That's correct. Let's go then to item 2. This is Mr Sayers' answer just not so long ago to my Quan 181, where he reconfirms he knew nothing of breaches of confidentiality agreements in PwC's tax business till 2023. Have you read Mr Sayers' reply to my question, Mr Hirshhorn?
Yes, I have, Senator.
Thank you. To summarise, he says he stands by his statements that he knew nothing of confidentiality breaches until 2023, and of course he left PwC in 2020. He also says that rather than directly name what the ATO thought PwC was doing wrongly, that is committing a criminal offence, and we're now learning a series of criminal offences that are under investigation by the AFP as we sit here, by improperly passing on information. And he says you, quote, spread breadcrumbs, a memorable phrase, like little clues, to hint at a confidentiality problem without ever being direct, which may explain, Mr Sayers says, why I don't recollect. He also suggests that the ATO's clues have changed over time and that the ATO did not formally give notice to PwC prior to his departure. What's your... So before I go to that, let's go then to the third document, which is Ms Beattie's file note of her conversation with Mr Sayers after his 1.5-hour meeting with you on the 26th of February, in which you were, in her note, words, aggravated, and canvassed in quite some detail the ATO's concerns with PWC, its misuse of professional legal privilege, hindering of processes, failure of competence and ethics and culture, a long list of serious transgressions for which there are criminal penalties. Mr Hirshhorn, you said, I think you indicated you have read, have you read Ms Beattie's note?
I have read Ms Beattie's
You've read
note.
it. What do you make of it, and do you agree with her account?
So, Senator, is a file note of her discussion debriefing from a conversation I think, relatively recently had with Mr Sayers. It is fair to say when I read that note, I do recognise a lot of the meeting that I had with Mr Sayers.
So do you see it as an accurate rendition of your memory of that meeting?
Yes, to the extent that, and again, Senator, I just say it is, you know, even though it was a very memorable meeting, it is a few years back, but it is fair to say that what is in that note basically aligns with my memory of those parts of the meeting.
And for Ms Beattie to construct such a note and to take the care to file it and retain it, it suggests that Mr Sayers was able to provide to her immediately after the meeting considerable detail about what was said at the meeting, and yet in his evidence on several occasions now, including in his written response to a question on notice, he's claimed and reclaimed to have no memory of these issues being discussed, or more accurately, to be restating and restating that he did not have knowledge of the confidentiality issues that you were raising with him.
Yes, so Senator, I obviously have paid attention to the testimony surrounding these meetings. I think it's, I'd say around the second meeting, the note of Ms Beattie, as I've said, it does align with my recollection of that meeting. Around the first meeting and the discussion of the confidentiality breach, I would refer to my contemporaneous file note, but also I'd refer, as I have in the past, to PWC's fact report, which shows that the information about a commercialisation of a confidentiality breach was brought back to the Governance Board following that meeting, and that if they were breadcrumbs which led directly to Mr Collins, because the investigation was done by the Governance Board of Mr Collins. So,
yes, it's a powerful breadcrumb to make it through those processes.
Well, it was a very direct path of breadcrumbs if they were breadcrumbs.
Perhaps a loaf of bread. How do you account? Here we have two accounts which go in one direction and another account that goes in another. How do you account for the different recollections of these meetings by you and Ms Beattie on the one hand and Mr Sayers on the other?
Well, Senator, I would just say that I've had the benefit of contemporaneous records, as has Ms Beattie, and they align with my recollection of those meetings.
So you believe Ms Beattie's notes are a true rendition, your memory and your own notes are also in that same line of argument and reinforce each other, and yet we have a different view rendered over and over again by Mr Sayers. Is Mr Sayers being truthful in your view?
So I'm not here to defend Mr Sayers. I would say that the meetings are a few years back. I would say that I would suspect he does not have access to any contemporaneous notes. I think his testimony has identified, two of the important things which were discussed, which was professional privilege breaches and also promoter penalty investigations. Look, that's all I can say. We have contemporaneous records and recollections, but I think people's memories can honestly fail.
Last question.
I want to come to the ATO in particular, its stance and practices in relation, so leaving beside that issue, in relation to potential criminal matters. It seems to me, both from your own account of your meetings with Mr Sayers and from Ms Beattie's notes, that you were trying to warn or making some effort to warn PWC to get the house in order because the ATO was aware of the possibility of serious criminal offences by PWC. Was it your intention to try and help PWC or to assist PWC to avoid possible penalties in relation to the behaviours you were concerned about?
So, Senator, no is the short answer. If you'll recall a previous question on notice where we provided quite a detailed timeframe, at the stage of these meetings with Mr Sayers, we had previously referred the matter to the Federal Police, who had in a position had been taken that there would not be, criminal matters would not be pursued. So from my perspective at the time of these meetings, there were no criminal prospects, no prospects of a criminal matter being pursued. In that context, I was in a position where I was absolutely seeking to influence the behaviour of PWC, put their governance structure on notice that inappropriate behaviour was happening in their practice. My intent was certainly not to somehow assist them in relation to criminal matters.
I don't really want to go back and explore the events in 2017-18 where the initial reference was made, but it is the case that only limited material was given to the AFP. It took some months for you. You had meetings. It took 4 months for the ATO to provide some documentation. AFP within 24 hours said not a case here, and yet here we are 5 years later, in a very complex investigation, made more complex by that 5-year lag. But I digress. I want to. Can I finish this because it's complex and I want to.
No.
Okay, I'll come back.
But we will come back to you. The committee has a scheduled break which we will take and resume at 8:45.